Good morning, honorable members. A very good morning to the Director General. I can't see him now. Oh, yes. Yes. And the SEF group led by Me Ayanda Noah. Honorable members, I want to start by informing you that we received sad news that the chairperson of the Legacy Board, Me Unati Figlan, had a very tragic accident and passed on. May we stand up and observe a moment of silence. Thank you. We may be seated. You will recall, honorable members, that of the 7 entities that reports to the department, the only ones that presented were 5, and I'm talking about the annual reports. And SEF and Alexco had not submitted their annual reports on time, and an extension request was submitted by Minister Mandashe for the SEF group, and it was granted. And the reason was that the delays arose from the complexities of incorporating the South African National Petroleum Company into the SEF group, which required that the AGSA procure specialized expertise to finalize the audit of the refinery assets. So it is precisely against this background that, honorable members, we are receiving the SEF group's presentation or the report now. We must be mindful that we are also waiting for Alexco to table its annual report, because it has not tabled. So that is the background in which we are meeting here today, and this may be our last meeting for the year. Can we have apologies, Ms. Boss? Okay, maybe let me start. Last week, as soon as last week, the minister indicated that he's not going to attend this meeting with his deputy because of an international trip to Mozambique that was planned prior to today. Ms. Boss?
Good morning, Honorable Chair, Honorable Members, and our esteemed guest. Chair, I've got only one apology from Honorable Mofokeng. Thank you.
Thank you. Honorable members, is there any apology from yourselves? An apology that you may want to leave and come back, or you want to leave during the meeting? Is there such an apology? Honorable Nchabeling, Honorable Zondi, and Honorable Mhlongo, as well as Honorable Zungula.
Thanks a lot, Chair. I'm going to be leaving for plenary just after 1. Yeah, thank you so much.
Hoping that you know that we're exempted today to attend plenary. Ne?
I just have a speech to give and then I can return.
Okay.
Thank you, Chair. Honorable James Lorima will be running late, but he's coming.
Thank you, Chair. I will be leaving for the plenary, but I'm having a speech, then I'll come back.
Morning, Chair. I'll step out for about 30 minutes for another meeting, but I'll come back.
Thank you. Anyone from your side, DG, who has an apology of this kind?
Not to my knowledge, Chair. Good morning to you and good morning to honorable members. Chair, maybe just to qualify so that doesn't happen that the members hear or see the minister tomorrow and then the apology does not coincide. The minister is no longer traveling due to a family commitment, but today he is actually, we had to split, he's attending, there's a select committee that's dealing with matters related to Alexco. So he is, it's a virtual meeting, he's attending to that. I thought I should just qualify so that.
Okay.
Yeah, thank you.
No, thank you. And the reason why I'm doing this is that, DG, when we were in Bloemfontein on oversight, officials of the department walked out, and both of them walked out at the same time. And Honorable Slepe was saying, no, these guys don't take us serious. And they just happened to be going to the bathroom. So I want us to be clear that no one is going to leave before time. Thank you very much. I will now hand over to you, DG, for us to proceed.
Okay, thank you, Honorable Chairperson. I know it's a long presentation from the SEF group and the different SEF entities, so I'm not going to do any preambles. I'm going to give straight to the group chairperson, Ms. Ayanda Noah, who will then lead the presentation and direct accordingly in terms of the group who is going to deal with which part. With your permission, Chair, I hand over to the group chair. Thank you.
Thank you very much, DG. Honorable Chair, good morning to yourself and Tate Mahlaule. I'm also greeting the honorable members here in the room today. DG again, good morning, and also to any senior officials from the department who might be here. And I would also like to greet the colleagues from the SEF family, the SEF board and subsidiary chairs or stand-ins, and also to the leadership of the entities, ladies and gentlemen, molweni. Chair and the committee, I really would like to start off by just appreciating this opportunity to come here and do the presentation. It is our opportunity to talk to our annual financial statements that relate to the group. It is also important to just highlight that the SNPC is not included in the in these results. However, everybody else, apologies, is going to be presenting the Fs as well as the performance against the objectives that were predetermined for financial year ending 31st of March 2025. Chair, of course, it is a very difficult time for us as a SEF family, as we've already indicated. Really, we have deep sadness and profound shock at the passing of our colleague, whom we had interacted with the day before she actually passed on. So it really came as a big shock for us to learn that she passed on with her husband as they were traveling to Johannesburg, and they were involved in a fatal motor vehicle accident. And of course, as you would know, she was really a big pillar in terms of being part of this board, the SEF board, as well as being the chair of the legacy board, as it was outlined, which is really responsible for consolidating all the legacy assets from SFF, from PetroSA, from iGas, in support of the merger. And so we really believe that she took her role very seriously. She was very meticulous. She focused on governance. She was really committed. And really, this death has robbed us as a company, as a group, as the leadership. Our internal capability is now challenged. And of course, the broader energy sector, we believe, has been negatively affected. And so we would like to honor her contribution today and also commit ourselves as a group that we will really ensure that we deliver on what she championed when she was here. And may her soul rest in peace. Chair, I also would like to just highlight some few apologies as well from our side. Two chairs are not present today, Chair Rupa and Chair Swanepoel. And of course, the group CEOs for SEF, for Legacy, for SNPC, had to accompany the minister on the presidential visit to Mozambique. However, I do have a capable team that is going to take us through the results today. So again, Chair, I would like to underline this, which I always make a point of when we have the opportunity to come and present, that we don't take this opportunity and this presentation lightly, and we don't take it as a tick box. We really believe that it is an opportunity for us to be transparent, an opportunity for us to take accountability, as well as really just appreciating that it is our fundamental obligation to come here and account. And we also take our role as a state-owned company that is entrusted with a mandate that really impacts on the lives of the people of South Africa. It is important when it comes to the security of South Africa's energy supply. It is very important also for ensuring that the general economy does recover and is stable, and of course provides that resilience when it comes to industrial production. So we take that seriously because we understand the impact that it actually has. And so we believe that our appearance here also provides that opportunity for us to be open and to talk about our challenges, to talk about what we have managed to achieve, but also how we have become responsible stewards of the public assets. And of course, stewardship is one of our BRICS values. And really for us to just give the context again on how the rest of the globe and the activities in the globe affect and shape our operations, I thought I should also just highlight again that the global energy landscape has really been significantly affected by a number of factors that we are all aware of. Of course, the wars, Russia-Ukraine war, and the instability in the Middle East, they have a lot of impact on our operations. International protectionist tendencies, of course, we know about the US tariff that is being imposed across the globe. And all of these factors, they do affect how we do our business in terms of the investments that we make and where we play. And of course, when we look at the upstream development environment, we know that there's a lot of activists, NGOs, who do affect our operations, and consequently, they give a negative sentiment in terms of influencing investors who are jittery about investing in the country because of all of those things. And of course, the volatile economic policy position, it does also impact on our operations, because we talk here about interest rates, we talk about the supply chain disruptions, which directly impact on the projects that we invest in. And of course, generally, the global and domestic economic outlook, they all impact on our operations. It is important to also appreciate that the kind of investments that we make are really long-term. And so when all of these factors that I've outlined impact us as a business, they introduce significant delays when it comes to the projects that we invest in because of the procurement processes that become interrupted. And of course, we are in a capital and time intensive business. And so it does really call upon us to take into consideration what happens across the globe and how we can actually position ourselves and course correct as time goes on. Yes, of course, our year-end results, when you look at them, you will see they reflect a very positive financial position, which is really driven partly by the strategic investments that we have made. And also our balance sheet has consequently been strengthened, which is very positive. We find that, I guess, investment as well as the Ghana investment that is under the PetroSA, they continue to demonstrate a lot of value through the dividends that we do receive. And so we look at them as very, very important when it comes to our growth agenda. And also when you look at our balance sheet, you will see that it has benefited from the acquisition of some prudent assets that we have acquired, as well as some capital optimization that we have done. And so it is also against this same picture important for us to just acknowledge that we still have areas that are underperforming. So if you look at the AEMFC chair as well as PetroSA, they actually eat into the profits that we have made and they bring them down, and really our outputs and outcomes could be much better if those two assets could really deliver better. If you look at the sales volumes, both at AEMFC as well as the PetroSA, they really have been subdued and negatively impacted on the group's revenues and margins. And so we are aware from a board point of view, both the SEF board as well as the subsidiary boards, that when we look at the group as a whole, these are the two companies that we really need to focus on in terms of going forward. Chair, again, it's really important that we just look at how the energy sector operates as a whole, just for appreciation, so that as the colleagues also take us through the results, you also have that context that the way that the energy sector operates, it's not a short-term business, it's a medium to long-term business. And therefore, when you invest in it, you know that you start off from exploration and then you go through a process so that you can finally reach the production. And there's, of course, a lot of engineering work that has to be done. There's a lot of procurement that takes place. There's construction, there's commissioning. So it's a lot of activities that are long-term. And all of these, when you think about them, Chair, you need to raise capital in order to go through all of those different stages. You need to ensure that you've got very strong technical capability in order to deliver on these. Of course, our project management skills are very, very critical. Otherwise, your projects may end up getting out of kilter. And then, of course, we need a very robust and predictable regulatory frameworks. So the point with this that I'm trying to make is, you plant the seed today, but you're not necessarily going to get the results today, but we're planting for the future and also for future generations. And so it is a long-term business, and therefore we need to always make sure that we strike a balance when it comes to short-term pressures, in comparison with your long-term imperatives. We need to really have a good balance when it comes to that. And of course, we are the implementing arm of the Department of Mineral and Petroleum Resources, and therefore it is very important for us that we recognize that and also make sure that we continuously refine and redefine our trajectory when it comes to our declining cash reserves that we see in the company. When we look at PetroSA, who currently doesn't have feedstock for the refinery, when we look at companies like AE and PetroSA, who are mainly focusing or dependent upon a single revenue stream. And also we need to look at really making sure that we've got a very positive and strong value proposition across the group, even looking at the companies that are currently struggling. And so we adopted a strategy that we call Success by Design, which really wants to be intentional about shifting focus and looking at growth and diversification so that we can address these areas where we are focusing more or depending more on single customers. We want to look at asset optimization. We currently have the refineries, the 2 refineries, as you know. We've got tankage, we've got line fills, we've got a lot of infrastructure that we need to optimize so that it can really bring value to the country. We are also continuing to look at strategic acquisitions, looking also at strengthening our commercial capabilities, as well as looking for credible partners that will help us to invest in all of these assets that we have. And so we have also looked at this as a deliberate and disciplined effort in order for us to focus as a SAF group and ensure that we have a very capable entity. We have an entity that works right across the value chain of energy and also provides and creates a commercially sustainable energy entity in the form of the SAF group of companies. Again, I do want to underline the point that we are custodians of South Africa's energy security, a role that we take very seriously, Chair and members. And we also really appreciate that the work that we do today and the decisions that we take today will certainly have an impact in generations to come. Equally, if we don't do the work, we still have a negative impact, when it comes to future generations. And so, of course, with that, the stakes are high. Now, just coming to the boards, if I look at the SAF board and I look at the subsidiary boards, Chair, it really is important for us to look at some key priorities. I've got about 6 key priorities that I would like to just share with yourselves, which are really focused on ensuring that we accelerate our initiatives that are focusing on integration, on driving growth, on the exploration opportunities, and also just ensuring that we stabilize the 2 entities that I've highlighted as having some challenges. And also in all of this, ensuring that consequence management does take place when it is required. And that, of course, we strengthen various areas of operations and support. So the first one that I wanted to talk to is really the growth opportunities, Honorable Chair and members. And here I want to uplift the Saprif refinery acquisition, as one such that we are looking at restoring so that we ensure that we address the declining refining capacity of the country. And that was really a strategic decision that was taken so that we can do that. Our aim is to have a bankable feasibility study by the 31st of March 2026, which is the end of this current financial year, so that we can look for partners that can assist us to get the refinery back on stream. And of course, we do have the 15% allocation at the Island View terminal in Durban, which can allow us also to bring in additional finished products and place them in the market, which will then also give us access to the Gauteng or the central market in the country. The second one, of course, is the stabilization process, which really looks at the PetroSA and ensuring that there is stability in PetroSA, as well as ensuring that the AEMFC is also provided with some support. The third one is really looking at the consolidation and integration priorities, and this is really focusing more on the SNPC and ensuring that it's got its foot on the ground, it's working properly, and as you know, we have operationalized it. We do have employees that have been transferred across to the SNPC, as well as some assets that have been processed across. We have also brought back the service provider who assisted us with the development of the business case of the SNPC, so that we can be supported and assisted in accelerating the phase 2, which also has to do with additional assets that need to move across from the legacy companies. On governance and oversight, of course, this remains a very, very strong priority across the boards. We did ensure that we've got a legacy and SNPC board in place, and of course, ensuring that the leadership gaps both at PetroSA and SFF are addressed. Of course, you would recall that we still have an uncompleted process of a disciplinary process of an executive at PetroSA, which is nearing conclusion. You may also be aware that at PetroSA we have permanently appointed Dr. Saidini, who is going to be leading with the PetroSA presentation today. And of course, we are underway with the replacement of the SEF Group CEO vacancy, which became opened at the beginning of the year. I think we did report to the committee about that, and the recruitment process is currently underway. Chair, I also want to highlight that we are focusing on the reinstatement of both refineries. You would recall that with the PetroSA refinery, the delay was around the technical partner, Gazprom Bank, who had a very long opportunity to assist us and partner with us in ensuring that the refinery is back on stream. Unfortunately, that relationship had to be terminated for non-performance, and now the colleagues at PetroSA are busy looking at a revised business case and looking at different alternatives that are viable, and in January 2026, we are going to see from Team PetroSA what it is that they are proposing then as a viable alternative to the reinstating of the refinery. And then the last point really talks to the group corrective measures and investigations, Honorable Chair. We have some AG findings that relate to the results that we are going to be presenting today, and I would like to assure the room today that those recommendations are currently being implemented, and we are going to provide the oversight as all the boards to ensure that those recommendations are implemented. Chair, just to share as well that as the board of SEF, we had a 2-day annual board strategy session that we undertook recently, and just to share again that we had a theme that we called navigating change, fostering resilience and innovation, and building sustainable growth paths. We actually took this time off, as we normally do annually, to pause and reflect and really try to recalibrate. And I think one of the key takeaways for us, Chair, was that the greatest challenge when it comes to the SEF group of companies is our execution capability, which we really need to strengthen. And we also need to make sure that when we strengthen our execution, it is for high impact. And this is something that we felt from a group point of view, we are really not short of ideas or plans or transformative ambitions. We have a lot of that, but translating that into meaningful and impactful deliverables is something that we really need to strengthen and focus on as the different boards. And of course, we understand that if we continue to deliver consistently, then we will gain the trust, and then we would really add a lot of value to the department as we strengthen them. Chair, I think let me try and draw to a close. And as I do that, I really do want to just go to the next slide and just share with you some of the highlights in terms of our performance for financial year 2025, which ended on the 31st of March. And really the first one is just to highlight that we made 553 million in net profit. When you look at our group assets, they are 39 billion, 39.8, or let me say 40 billion assets that we've got. We've got about 17 billion cash and cash equivalent in our books. As I've already mentioned, SNPC is operationalized and the Section 197 process was implemented. We do have a very healthy group project pipeline, which you will see also in the presentation. And again, there our focus is to make sure that we are able to deliver on it. When the one critical investment that we made, which is the 25% shareholding that we have in Aqua Redstone, a 100 megawatt CSP, this is really a very exciting story because it is now 99.2% operational. It actually is now pumping into the grid. We have also finalized and ring-fenced the SNPC acquisition, as mentioned, and it's really added positively to our balance sheet, as you will see. There are some closeout report details that relate to the shale gas project, as well as just noting that our liquidity and solvency position, Chair, is very, very healthy from a group perspective. Again, it will be remiss of me if I don't highlight that we do have the operational challenges. We have been speaking about reinstating the refinery of PetroSA for quite a while now, and it is an area that we really need to redouble our efforts and make sure that it does happen. And of course, here we need partnerships again to ensure that our refineries come back on stream. And then AEMFC, I've also highlighted that it is an area of focus as well as PetroSA, without going into too much detail. Chair, as a concluding remark, I really would like to thank yourself, the committee. I would like to thank our minister in his absence, our DG, as well as the department as a whole, for really being the guidance and being our conscience and calling us to account and getting us back in the straight as we, from time to time, get off the rails. And so with that, I thank you, and I would like to hand over to the SEF group leadership, and they can also just introduce themselves. As I indicated, the CEOs are not here today, but I do have a capable team, and I will hand over to Mr. Msabala, who will take us through the initial parts of the report. Thank you.
Thank you, Chair, Chair Noah. A very good morning to you, Chair. Thank you. A very good morning to you, Chair of the Portfolio Committee, members of the committee. Let me also acknowledge our DG and his team, our colleagues, executives, chairs of different subsidiaries. Chair, thank you for this opportunity. My name is Fiso Msabala. I'm the acting group COO at Central Energy Fund. The slide in front of us, Chair, as we take from the foundation that Chair Noah has presented, we are presenting our results for 2024-25 annual report. A good story, Chair, I must say, to share. We do have major challenges that we are dealing with, as the Chair has indicated, but in the midst of that, the previous financial year, or the year that we've just concluded, has given us hope that when we continue to focus, deliver on the key KPIs, we do have the ability to change the picture. Chair, the slide basically just gives an overview of our group with our shareholder, DMPR, ourselves, with that key strategic mandate, which deals both with those two key elements, Chair, the commercial and the developmental mandate. The rest, Chair, as you can see, SNPC, which is our giant that we are building, which will take a very serious and a focused market position with both SFF, PetroSA, I guess, being the legacy entities that we are busy making. AE will continue to play a key role, Chair, in terms of ensuring that the mining space have participation by the state. PetroSA, led by Dr. Saidini, in terms of its regulatory processes and governance and framework in the oil and gas space. And again, Chair, safe trading. Safe trading, Chair, is a child that is born out of our vision to ensure that we optimize our resources, not just in South Africa, but also ensuring that our Safe to Africa strategy get to be realized. We talk to monetization of our mineral resources, both from a hydrocarbon point of view as well as critical minerals. So that's a position that safe trading will play. Chair, two key elements, our vision and our mission, very strong, ensuring that we remain a diversified investment company in the energy space, as well as to ensure that we play a key role being a catalyst for economic growth in the energy sector. Next slide, please. Chair, I won't dwell too much on this slide, just to indicate being led by our chair and her team, and of course, to mention once again, may her soul rest in peace, our director, Figlin, who basically has been called upon to answer by the court, and the chair has also reflected on that. So the subsidiaries that I listed there, PetroSA with their teams, led by the chairpersons, AE, Legacy Board, SNPC Board. Chair, this is a slide that shows the type of leadership and purpose, the governance and the leadership that we receive to ensure that some of these key strategic pillars that we try to achieve are being led. Next slide, please. In terms of our strategy, Chair, one of the key elements of scaling up for growth has been focused on three elements. The three element, Chair, deals with our revenue diversification. We are making inroads, and we've made serious inroads in the previous year with the type of balance sheet that we have. But of course, for us to strengthen that so that we are able to deal with issues of commercial sustainability. The other one deals with the portfolio diversification, which touches on our list of projects, which we'll also share with the committee in terms of how diversified and which areas of the energy value chain some of those projects answer to. Strategic partnership, Chair, we believe that the energy sector is transformed, it's evolving globally. And for us to do some of our key projects that we have put ourselves to achieve for the country, we will need to form strategic partnership. And some of those partnerships are already bearing fruit in terms of some of the key strategic elements that we are busy with. Operational excellency, when we look at some of the key objectives, it's what we need and continuously want to improve, Chair. Our ability to execute projects, as the Chair has indicated earlier on, it's what will define our success. We are a project-driven organization. We gain our revenue or our commercial strength from us being able to deliver on some of these key projects, which are mega projects, Chair, which require very capital-intensive participation. But if we don't have some of these strong teams that we are building up, we will not be able to achieve some of those. Human resource, in terms of human performance and organizational alignment, it's a process that is very much ongoing, Chair, just to ensure that we get the right type of people, we get the right type of systems and processes to ensure that we become efficient in terms of what we have planned to achieve. Next slide, please. Chair, when we talk about impact delivery, which has helped us in the previous financial year, I would like to focus just on the scale up for growth, which basically is where we are currently, where we talk about our strength in diversification, but also in ensuring that we build a very high performance organization. The merger of the three entities, it's in line with that. It aims to achieve a maximum central point of ensuring that we build that capacity to deal with some of the key strategic element that talks to our model. Our developmental approach, which always has to be commercially linked, has been the one that has been also assisting us to ensure that we create the right project, we get the right resources, whether it's from a perspective of us, as we'll reflect later on the work that we've done on the SNPC refinery in terms of its turnaround, some of the options that we've put up for PetroSA to turn around the GTL refinery, or just to talk about how we ensure that overall the work that the three entities we're conducting is actually managed in a more systematic way. So that element of scaling up, Chair, require us to have a very focused business growth strategy to ensure that some of our desired position get to be achieved. And those desired position, Chair, at this particular point of 2025 to 2031 relate to us being a diversified and integrated energy company, to remain a very strong commercially, and also have a very strong element of incubation. The role that SAF plays, Chairperson and members of the committee, not only in terms of its business of managing the entities on behalf of the state or the shareholder, but also to act as an incubator in projects because of our strong balance sheet. And we demonstrate that for a number of projects that we've done for the group, which we'll also highlight. To ensure that our element of being a developmental leader in the energy space, and we always say this, Chair, that when we have some of our, especially the broad-based black companies in the country coming through SAF, and we always say they cannot leave the SAF house or the SAF house in Sentin or any of our subsidiaries and have a feel as if they've visited some of our majors or all majors. There has to be a difference because we have a different approach, we have a different behavior towards some of the needs. So that's what also prides ourselves to actually continue to play that role of being an energy developmental leader. Next slide. Chair, from our value chain, just to re-emphasize our value chain, where we play in terms of strategic participation, we play in the full value chain, Chair. We do focus on maximizing our participation in some of those areas where we do not have a strong presence. But from an E&P perspective, we have a strong history, a history that has its own gaps that we continue to want to close so that we can get back to the real business of the oil and gas. PetroSA history, Chair, as you know, where we used to drill wells, we used to produce, we have the feedstock, the plant used to run, and the dividend get paid. Those were good days. And some of those things, it's what reflect on our value chain. So on the E&P side, members, we do have PASA, who plays the role of being the license and the regulator, as I indicated. Of course, SNPC will get into that space, ensuring that some of our operations and assets start to play the role. Again, with AE, into that space of ensuring that from a mining perspective, whether we're talking about critical minerals, we're talking about just pure PGMs and other critical resources that AE will want to get involved in from a mining perspective, that role start to be cemented. Of course, we go to the midstream business where we do trading in a number of ways. The processing of our resources, obviously, is what, in the meantime, has not been happening. And I think our pursuit, Chair, is to ensure that the country get back to have the two critical facilities, which is the SNPC refinery in Durban, as well as the GTL, so that we can get into the business of processing some of our own resources and get the benefit commercially and socially from that perspective. Chair, the key strategy that we're also embarking on through the 15% allocation that we have been granted by the Minister of Transport for throughput facility in Durban. What does it allow us to do? So it allows us to ensure that we can place cargoes, we can then be in a position to do a throughput and then get the product into the market. We understand the business of the oil majors and how this operates. if we don't have the downstream side of the business, being the fuel station, the depots, we will not be in a position to fully utilize our 15%. And this 15% is going to do an incremental case of 20%, 30% based on the performance. Hence, we then have this clear strategy of ensuring that some of the acquisition that we do downstream, which with the minister's help, we have had the Section 54(2)(c) that has recently been granted by the minister to take one of the downstream asset so that we can start to play a role in that space, so that we can also be in a position to place product and push product down to the customer. That's our concept of wanting to touch the customer. Touching the customer with the SNPC brand is part of what we will want to achieve so that we can complete the full value chain in terms of that process, as you can see, Chair, in this element. Of course, we deal with clean energy, renewables, as you see later on in our portfolio. Ours is to ensure that the state participates meaningfully through this engagement. Chair, next slide. Chair, just from a perspective of the drive of key strategic initiatives in terms of performance that has been achieved and how those have been predetermined with a view of creating value. I think the first one, Chair, talks to growth and key acquisition. As I've just indicated, through Section 54(2)(c), we have had a number of those that have been granted through that process, which then enables us to then conclude some of these acquisition. But of course, Chair, some of this growth comes from organic, whereby we develop projects. We've got a few projects that are in execution, infrastructural projects, where we have signed joint development agreement with key strategic partners, just to ensure that we're not only utilizing the balance sheet of the SAF group, but also to share the risk and ensure that we then benefit from the project execution. In terms of SNPC being in operation, Chair, this is one area where each day we are actually picking up to ensure that we get to the finish line of merging the three entities. And our view, Chair, is that this is a champion in making, and already some of the key results that needs to be achieved have been clearly been defined. Operational excellence and business optimization. The AE and the PetroSA story, Chair, is a story that will want to ensure that we change it in a short space of time. What do we mean, Chair? In terms of AE, we're fully aware of some of the challenges that AE has been facing. We have also went further through our board, SAF board, to appoint a specialist to assist in just doing a clear view of oversight in some of the execution that the AE has embarked on, and that work, Chair, has already been embarked on to ensure that we have that clear line of sight. And this will help, Chair, in ensuring that some of the projects and some of the opportunities that AE has defined get to be turned around to make sure that we get the result that we desire. PetroSA, Chair, has been indicated. The key critical element for us is to ensure that the refinery comes back online. That's our key element. Human capital and development and integration. Chair, our training focus, change management, understanding how our people behaves and what makes them tick, and how to become the employer of choice, it's what actually centers on this. And some of the best processes that we have been looking at from different framework, just to ensure that we get the right skill set to help us achieve. That has been the work. And of course, focusing on project execution and the excellence and benchmarking with international partners that we are working on from a transfer of skills becomes critical. Strategic partnership and stakeholder engagement, Chair. Our belief continues, Chair, that if we don't understand our stakeholders, we'll continue to offer a service that is not in line with market expectation. And hence, our view and our effort has been to have a clear strategy or framework in terms of key partnership that we've been embarking on. Chair, this is a slide that we normally showcase just to show our business for today and tomorrow. It's quite a busy slide, Chair, but what it demonstrates its possibilities and some of the elements that we derive value from. We have projects that are in execution from renewables, from upstream projects, acquisition of downstream assets, gas to power. And I think, Chair, and the committee members, some of these projects are critical because then they are able to unlock, especially on the issue of gas cliff, on the offtake side. And that's a work that we've been doing both from the South African and the Mozambican side, just to ensure that the product that get to be delivered through our Romco pipeline get to be pushed into a credible off-taker. And we do have those credible off-takers, Chair. The market is here in South Africa. And as you can see, a number of those projects are projects that have been presented to the board, and some of them are projects that are still sitting within the energy project division space. Critical other project, Chair, just to highlight one, which the board has recently just given an FID approval, is the one that deals with the issue of bioethanol, creating a blending opportunity for South Africa to ensure that our vision of clean CF2 or clean fuel 2 get to be realized. This is a project that will be going through to the minister for his consideration, but it talks to enabling a policy that deals with the bioethanol. And that will cement our role to be an enabler of the shareholders' policy. LPG, Chair, continues to be critical in our portfolio, as well as, of course, that deals with some of the element on the coal side, just to ensure that ESCOM get the type of product that they want. So when you talk about the washing plant, you talk about issues of systems and processes that AE needs to implement, we fully much focus on those, as well as the bankable feasibility study that relate to the crude refinery in Durban. Next slide.
Just before the next slide, go back to that slide. I know it's not question sessions, but is there a particular reason why the acquisition of fuel stations, one is in green, one is in yellow?
Yes, Chair. So, Chair, if you can see at the bottom, so the one in yellow depicts an acquisition that has reached a section 54(2)C. So it means that we have received the ministerial approval on that with the National Treasury concurrence to actually close the deal. And the one in yellow, it's basically depicts a work that is been undergoing, whether it's a due diligence in this case, because we are acquiring, and that work has not basically completed itself to reach section 54(2)C. Chair, on this slide, I think it's just a reinforcement, and also the colleagues will also deal in detail with some of these key elements. But we felt that it's critical to highlight issues around the GTL reinstatement. There's been questions that the committee has been asking before. And at this position, Chair, there are three options that are being pursued rigorously, and those they relate to ensuring that we get the refinery back on stream. The SNPC operations, I've highlighted some of those issues that we are dealing with. We are also engaging with key strategic partners as well as external, just to ensure that we close and we get the operational at a more improved performance. Remember, Chair, just to remind the members, the SNPC refinery exists as a company, it's operating. These are just the element that deals with its improved operational structure. SNPC refinery, quite a few projects that are at the level of implementation. One is the LPG reinstatement, which was approved by the board in terms of its partnership. We are reinstating that. We are busy with the cleaning up of the tanks, which will also give us an element of having a revenue stream. We are also busy with a blending project, which also the board has approved, which talks to us being in a position to provide products through those facilities that we have reinstated. The shale gas, Chair, talks to our ability to ensure that some of the key elements that have been brought up are closed. Issues around some of the studies and the work that has been happening to ensure that the monitoring work get to be done properly. PASA will also go in details on this, just to highlight some of these elements. Again, with the continental shelf claim, the PASA team will also highlight some of the work that has been happening in this space. Chair, just to close on the business model, I think it's important that we share with the committee to indicate some of our value, how we actually derive value and what actually bring us to an element of understanding the work that we do. So, Chair, in terms of our resource input, we take seriously the ability for us to have a financial capable company. Hence, our cash flows in the project that we get involved in, the tenure of those cash flows, the turnaround of those cash flows become critical. So if you look at our annual report, it's very clear in terms of that focus. Industrial capital, Chair, in terms of our infrastructure and asset, how do we continuously sweat this asset? What becomes our drive in terms of ensuring that we actually understand the ability to actually manage and maintain these assets? And I think with the PetroSA asset, there's a lot of lesson learned that we continue to derive from that. Innovation, Chair, without innovation, investing in R&D, we will not exist in this market. And hence, some of our budget goes towards ensuring that we get subscribed to some of the best subscription, whether it's that deals with benchmarking or deals with the issues of LNG in particular. And there's a capacity that we are building up, especially with some of the like-minded national oil companies, whether it's PetroChina, Petronas, Pertamina in Indonesia. We're engaging on that level, Chair, so that we also build capacity from that element. Human capital, as indicated, a very strong workforce of 1,400 people who have all types of skills within this space. And our key is to ensure that these people get to be utilized in a more appropriate way. Social capital, as a state-owned, our view is that if we don't play a key role from our enterprise development, which is a program that is running, we are running a second year now, whereby we're actually trying to get some of our local SMEs into that space, and then we support them in terms of the work that needs to be get carried. And we always want to support, Chair, in terms of ensuring that they are participating in actual projects instead of just giving hands out and maybe dealing with some of the gaps, but ensuring that we can actually sign a joint development agreement and hold them in terms of that. We've got a particular example with the LPG where we are doing that work. We've entered into another phase where we actually will be doing more work as we execute some of our key projects. Natural capital, Chair, some of it deals with the element of safe trading. Our belief, Chair, is that we've got a number of our natural resources that as raw material leave the continent, come back as finished products. Our belief is that through the safe trading is that we can take a position where we can create some of the best performing trading desk and we deal with issues that AE needs to deal with, whether it's from a coal perspective, from a mineral perspective, or even from the critical mineral perspective. That space and that market does exist, Chair, and that's why we view this with a critical focus. Next slide. Chair, as we continue doing our business, of course, we operate in a global space, and there are some trends that we have picked up which continuously positively or negatively affect our business. The geopolitical tensions, Chair, have its own impact in terms of our business. We note that the oil prices and also the global inflation and interest rate position, which always have our impact in terms of how we do our trading business. The market competition, Chair, we want to participate in that market, but you can only participate in this market if you have all the right resources and processes. And for us, is to ensure that when we say we want to participate, as we have had the 15% and going up, the question is our readiness. And our readiness has always been a case of ensuring that we perform not just on average, but above what the oil majors will actually perform. In terms of some of the exit of oil majors, I think we've noted this, Chair, which for us present an opportunity to get our house in order so that we are able to respond to those gaps that the market creates. In terms of growing our upstream business, Chair, we very much focus on this. We know very well how strong the green activists are, and some of the work that PASA will also deal with is to highlight some of our successes in terms of how we respond to this. And it's always good to say, Chair, that when we talk about gas, which becomes the clear case from a gas to power perspective, One of our key projects, which is the 800 megawatts in Komati Port, managed to get its EIA authorization in place. And we are pursuing that project with the eager that it deserves. I think it's one of the few, if not the only one, that has managed to actually obtain that EIA license. The members will know what the position in Richards Bay in terms of the ESCOM position and the court case there. But our position, Chair, remains very strong. And some of the terminal operations that we've been doing in terms of infrastructure has been around us achieving a clear case of fast-tracked infrastructure development so that we are able to receive gas into the country. We are building a terminal in Richards Bay. We are finalizing the feasibility study to that. The chair has reflected on the issue of SNPC refinery, which we are working towards a bankable feasibility study by end of March so that we can get a clear business case as we move forward. While that is happening, there are other key projects that are happening in the refinery that are going to start giving us a revenue generation in the short to medium term. The PetroSA story will be shared in terms of the option, Chair, and also the gas to power project that we actually are also embarking on. Chair, with that, I would like to hand back to Chair for further direction. Thank you.
Thank you, Chair. Good morning, Honorable Chair, honorable members, DG and chairs of boards, CEOs and colleagues. Chair, I'm going to focus on the performance scorecard of the SEF group scorecard that shows how we performed against the predetermined objectives. So if you look at the year ending 2025 March, you will notice that there is a substantial improvement in the overall achievement of the group. In the previous financial years, we have been having challenges around commercial sustainability and also consolidation and turnaround. But you look at the 2024-25, we have achieved in all areas, in all objectives that we have set ourselves. And in other areas, we also achieved beyond the norm, which is level 3. So we have a couple of areas where we performed at level 4 and level 5. And I'm going to also talk to the major contributors on the financial sustainability that we always had a problem with when I deal with the financial statements. On the next slides, where we showing the group audit outcomes, Chair, we need to just present that we, out of the total of 10 entities that we are responsible for, we managed to record 2 clean audits, which has been continuing since 2020-2021. And we also need to mention that iGas regressed in 2024-25, where in the last financial year we obtained a clean audit, and in the current financial year we had one material finding that led to a regression to unqualified with findings. We'll talk to the details when we get to individual subsidiaries. But the last thing that is important to note on this slide is that 4 entities out of 8 within the group had only one material finding, which is material misstatement on the financial statements. And the other 4 recorded more than one material misstatements. The next slide, Chair, talks to the improvement that is visible on that graph. Since 2020 and 2021, we have closed 10 material findings, and we have only one material finding remaining at group level. And this material finding was pulled from the parent company, which is SEFSOC, where we had material misstatements to the financials that led to non-compliance with PFMA in terms of preparation of financials. There are corrective actions that we are going to implement to correct the situation to make sure that we move to clean audits. As identified by also AG, is that we need to capacitate our financial accounting unit that is responsible for preparation of financial statements to make sure that we are capable to deal with complexities that come with the new acquisitions in the group, and also address the issues of the numbers, capacity in terms of numbers, to make sure that the quality of preparation of financial statements is enhanced. On the next slide, we are going to talk to financial performance of the group at high level and financial position. Important to note is that our financial performance has been strengthened by the new asset that we have acquired, which is the SNPC refinery that is housed in the self-trading entity. If you look at the analysis between 2020 and 2021 financial year and 2024-25 financial year, you will note a noticeable increase in terms of profit and losses that we have registered of 2.4%. And also on the cash balance, we recorded 8.5% improvement compared to 2020-2021. The net asset value has grown by 16% since 2020-2021. Looking at the comparison between the two past financial years, which is 2023-24 and 2024-25, you'll notice that the profit that is recorded is 194% as compared to the previous financial year, as we were moving from a negative 522 loss in the last financial year to 553 million profit in the 2024-25 financial year. And looking at the cash balance, the opening balance in 2023-24 was 13 billion, and we have closed with 16 billion in 2024-25, giving us an improvement of 21% if you look at the opening balance versus the closing balance of the prior year. And the net asset value has increased by 3%, and I'll talk to those details when I get to the statement of financial position. On the next slide. Chair, as indicated by the speakers before me, the acquisition of the SUBREF asset has given us lots of benefit in terms of asset base growth. Our assets have grown by 2.2 billion as compared to the prior year, which represents 6% growth. And I would like to highlight few areas that recorded positive and negative variances and highlight critical points on those areas. If you look at the PPE, here we have the PPE that was rolled over from previous financial year across the group that has been depreciated. But in addition to that, we also recorded the PPE in relation to the acquisition of the SUBREF refinery. You look at the variance on the net variance on the PPE, we recorded 1.393 billion. But important to note is that included in there, we have recorded 1.9 billion in relation to the land that came with the acquisition of the SUBREF refinery, buildings of 54 million, and 2 tanks, we recorded 100 million there. Furniture and equipment, we recorded 607,000. And important to note, Chair, is that the PPE that we have recorded here, it's PPE that was ready for use at the end of the financial year. That doesn't require additional investment before we can utilize that PPE. There are tanks and buildings that are not accounted here because they require some maintenance before we can use them. So as we maintain and refurbish those tanks and buildings, we're going to perform the evaluation, and then the asset base will also increase based on that. And under cash and cash equivalent, we recorded a variance of 1.782 billion as compared to the previous financial year. This is mainly due to the cash generated from operations. Most of our entities generated positive cash, and the performance of Romco share that continued to improve, and also the interest income that we received from the investments, the cash investment that we made throughout the financial year. And Chair, on the current assets, you look at the inventory. In the previous financial year, we recorded 2.1 billion. This was mainly the inventory that was held by PetroSA at the end of the financial year. In 2024-25, we recorded a reduced amount of inventory of 989 because the stock that PetroSA closed with at the end of the financial year was lesser as compared to the previous financial year. And this stock is in relation to the finished product that PetroSA buy and sells. Important to note on that inventory, Chair, is that we had a benefit that came with the acquisition of the SNPC refinery, where we recorded 443 million in relation to the crude oil that we acquired with that asset. On the next slide, looking at the equity and liabilities, our liabilities increased by 7% or 1.8 billion. And I'm going to highlight few areas in the liabilities that resulted in this variance. You look at the provisions highlighted there, included in that 11.9 billion. There is 982.4 million in relation to the decommissioning liabilities for the SNPC refinery, as recorded in the self-trading entity. And you look at the trade and other payables, PetroSA recorded higher trade and other payables of 10.5 billion, which is a variance of 1.8 billion as compared to the previous financial year. This is in relation to the money that is owed to the suppliers of finished product. And then you look at the net asset value that was added into our balance sheet is 345 million for the financial year. And moving over to the next slide, Chair, on the statement of financial performance, as indicated as well by the Chair, the impact of the acquisition of Subref is visible on this financial performance, where we recorded 553 million in profits emanating from cash profits that were generated in the group, as well as accounting profits that were generated from the acquisition of the SNPC refinery. Important to note on the slide, Chair, is that our revenue reduced substantially as compared to the previous financial year. This is mainly as a result of PetroSA not securing the planned volumes or less volumes as compared to the previous financial year, and also AEMFC experiencing challenges where Eskom was suspending their contract, the coal supply contract, in year from time to time. So this resulted in the two entities not performing as per the original plan. Chair, if you look at other non-operating gains, you will realize that we recorded 1.8 billion in relation to that. That 1.8 billion is in relation to the gain on bargain purchase as a result of the acquisition of the SNPC refinery. Meaning that if you take the total liabilities, the total assets of the SNPC refinery, and you subtract the total liabilities and the R1 that we have paid for the asset, we had a gain on bargain of 1.8 billion. And that is why our net profits improved as well as compared to the previous financial year. Moving over to the statement of cash flow. Chair, on this slide, you will note that our operations generated a positive net cash inflow. And this is as a result of a good performance of the Romco asset, as more volumes were transported through our gas pipeline. And also the dividends which resulted in the high dividends that we received from Romco. And then also the interest that we received from the cash that is invested boosted our operating activities. And if you look at the investing activities, the movement for the year on investing activities is 1.9 billion. It's negative 845 million, and the operating our investing activities gave us a net movement of 71 million. And then important to note on that area is that we had received repayment of CMG loan. As you know, when we concluded the additional 30% acquisition of Romco assets, the 15% was in relation to CMG, and we have loaned CMG some amount to make sure that they pay for their 15% portion of that additional 30%, and they have since paid 330 million in that regard. And all in all, Chair, our net cash increase was 1.7 billion as recorded there, and it represents 12% if you look at the movement for the year. On the next slide, we are dealing with financial governance. Under irregular expenditure, we closed with a balance of 5.4 billion. And then the total irregular expenditure that was incurred in the year under review is 1.6 billion, mainly coming from PetroSA, SFF, and AEMFC. So what we have done in terms of rectifying the situation, we are going to implement consequence management. Currently, the assessment to establish whether there was value for money derived from this expenditure, we have concluded that process, and we have confirmed that we did receive the equivalent value out of this expenditure. The processes that are going to be implemented from here going forward is consequence management to deter the reoccurrence of these transgressions, and also strengthening controls and make sure that there are no repeated cases of this nature. Under fruitless and wasteful expenditure, we closed with a balance of 34 million. And then in the year under review, we recorded 9.4 million coming from PetroSA and AE. And as I've indicated, consequence management will be implemented as well on these transgressions. And in cases where we have identified recoverability of these losses, we are going to recover those losses. This brings us to the end of the finance presentation. Chair, thank you. I'll hand over to Chair Noah.
Just a minute. Honorable members, that was the presentation by SFF group. And they are going to subsidiaries. Do you want to take questions on SFF now, and then we'll allow each individual subsidiary to present and ask questions at the same time? Can I hear your views? Honorable Lorima.
Mr. Chair, there's a lot to get through. I suggest it's easier to kind of grasp the whole thing if we take it in sections. So I'd like to ask now.
Is the view agreed? Agreed. Let's park AE for now and take questions on the already presented slides from the SFF group. Can I see honorable members who wants to engage? Honorable Lorima, Honorable Zondi, Honorable Selepe, Honorable Zungula, and Honorable Senne, Honorable Zungula, and Honorable Chabeling, and Honorable Hassan, in that order.
Thanks, Chair. There's certainly a lot to get through and to understand in this. So I'm going to need some explanation. First of all, something that occurred to me, Mr. Msabala talked about happy days when he used to produce a dividend and PetroSA was going well. What happened? What went wrong between then and now? Could you tell us some more about the downstream expansion? I'm a little bit wary of great expansion plans into new sectors because it doesn't seem like the core business is firmly founded yet. Correct me if I'm wrong, and please motivate for that downstream expansion. We heard about the EIA license for the Nkomati terminal. We need a backstory on that, please. As I understand it, that Nkomati terminal is going to take gas imported via Matola. Is that Matola terminal going ahead? Once it goes to Nkomati, what happens to it? Does it go into the Romco pipeline? Can you give us an idea of volumes, costs, etc. on that? You talked about trends and storage revenues going down because the price of oil was high. Well, that price has been declining this year, both on Brent and WTI. So is that getting better now? The audit outcomes, material misstatements on SANPC and CF trading. Could you tell us what those material misstatements were? I'm sad to see AE has regressed on its audits. Could we get a bit more why? Or perhaps that question should hold over until they talk to us. Onto the finances, slide 27. So we got, or you got, 443 million in crude oil when you got the refinery for R1. That sounds like the deal of the century. But why were they so keen to get rid of it? Is it the liabilities on that come with that refinery that made them just give away this present of 443 million in crude? And then what happens to that crude? I mean, does it just sit there in tanks because we don't have a refining capability at the moment? Does that just stay on the books? Could you give us an indication of how we realize that gain? And I've also got slide 31. Sorry, just let me look at that again. Yeah, that was the irregular expenditure. Could we just get a bit more detail on the PetroSA 956 million irregular expenditure and the SFF 579 million? Could we get the full story on that, please? Thank you.
Can we respond to those questions before we proceed to the next honorable member?
All right. Thank you very much, Chair, and thanks to the honourable member for the questions that have been raised. Maybe then let me just start with Mr. Msabala, if you can also just deal with the questions that you can, and then CFO can assist with the finance-related questions. Thank you.
Thanks, Chair. In response to the member's question, let me start with the downstream strategy. Maybe let me start with the IVT allocation, which is a throughput allocation granted by the Minister of Transport. Of course, as a group, we have subsidiaries. At this point, we still have PetroSA who do trading, and part of the challenges that PetroSA has been facing has been around the issue of placing the product at the market level because of our non-existence in terms of having that market presence. What it does, as we speak now, you've got product that sits in tanks, and if the majors don't pick up, then it means we don't have a business. But on top of that, with the IVT allocation, it starts to present a more bigger challenge if we do not have that line of sight of where we place the product. Hence, our engagement and participation jointly with strategic partners who are also in government. SNDF is one, COCTA is another, through National Treasury. Just ensuring that from a position of investment in the downstream infrastructure exists, not only for PetroSA or for SAF business, but also from the country. Honourable Member, through you, Chair, we conducted a study in the financial year that has just been concluded. That study was looking at the structural setup of distribution of products in the country, mainly obviously from Durban, because that's where 70% at most comes from to go into our country. We understand the issue of security of supply from a perspective of having one line of distribution that if something happens, and we know, honourable members, what happened during the unrest in KZN, or any disruption that happened when that line gets to be disturbed. So what then the board gave us guidance on was to have a view of how do we ensure that the country becomes security secured for building strategic infrastructure that will service the distribution of fuel in the country. Hence, part of the investment that get to be made answers to those questions, honourable member. So our downstream strategy, as you know, PetroSA has two what I call fuel integrated energy centers. One located in Bizane on R61. The other one is located in Amata in Intsigayetu area. They are fully PetroSA branded downstream fuel station because they dispense petrol to the motorist. So that vision and that strategy to grow in ensuring that we are also in a position to touch the customer so that we are able to then finish this mile of distribution. It talks to us being able also to comply with what the Minister of Transport has set us up from a performance point of view, because if we don't have that ability, we will not meet the target that has been set in the directive from a throughput perspective. I hope I've answered on that. To deal with the Komati Port Chair, gas to power in terms of volume cost, this is one of the flagship projects for the country in terms of readiness to do what is called gas to power. I think, Chair, one of the key challenges, if you look at the bid window one, has been around the security of gas. But more than that, other issues around the power factor and so on that were more technical, which the Minister has come back to clarify now, hence the date has been moved. But I think what is critical to this, Chair, is the ability of a state to ensure that it demonstrates capability to put in infrastructure so that the market can gain confidence that to do a gas to power at the scale of 800 megawatts and beyond, it's what the state is serious about. Indeed, there are avenues that talks to us applying for a ministerial directive, but we are going through a normal process of ensuring that we get a power purchase agreement. We have a partner with, and we have a number of strategic partners that we have concluded. It's a ready project to be executed. Where does the gas come from? We understand the Romco Panditamane project, but it comes from Mozambique. That's the main. It will come from Mozambique. The Matole development is being dealt with on the Mozambican side because we understand that there are other strategic locations that the Mozambican are also looking at. Enasoro part is being one. But our view is that any decision that gets made on the other side of the border must find a market in South Africa. And we've already created that market. So we've already created the 800 megawatts within the line of Romco going down to Ekurhuleni. We are sitting with power purchase agreement of around 1,000 that we have also secured. So from a readiness of take side to have a credible market, that does exist there, Honourable Member. In terms of cost or volume, we are looking at close to about 50 petajoules that will require just on Komati at the mid-merit level, which is about 50% power factor. If we include the other project that I've included on the same line, we are then climbing up to about 75 petajoules, which will also talk to the gas cliff, which also will then unlock a critical investment on the side of Mozambique. And I think our recent engagement with the Mozambican, especially on ENH, has been very much positive, simply because they can see the side of that. PetroSA and ourselves and also ENH are also working very closely to ensure that those particular molecules get to find its home in South Africa. The EIA, I think, Honourable Member, as you quite indicate, yes, we do have the EIA, which is a good plus for us. And it's because we went on a very transparent process of demonstrating how the project would benefit and also will not affect the environment and our people. So I think that was our most transparent process. On the cost side, of course, the project will be funded through a blended approach. We are talking to a number of strategic partners on closing on the funding element of the project. I think, Chair, I've addressed those. I think PetroSA can address the other one. Yeah.
Yes, I think CFO, can you just deal with those ones? And then I'm wondering if the strategic fuel fund related ones should not be captured by the colleagues when they present. So there's one on the oil price, and then there's the irregular spend by PetroSA. Perhaps also just capture that in detail as they present. Thanks, CFO.
Yeah, and it will mean that SFF have noted that question. They start with it when they respond to the questions. Yeah.
Thank you, Chair. So the first question in relation to material misstatements for self-trading and self-SOC. When we acquired the Subref refinery, there were employees that were transferred to self-SOC. So what we did, we captured their expenses under self-SOC. So when Auditor General came through, indicated that those transactions should be captured in self-trading. And what we were looking at when we captured the expenses of those employees in self-SOC is that part of the contract, the transfer contract of the refinery had indicated that self-SOC must house those employees. So when AG came through, then they indicated that what they are looking at is substance over form. So meaning that all those expenses are linked to self-trading, not self-SOC. And then in self-trading, there were additional adjustments by AG as well. On the decom liability was increased, and the assets were decreased. So those were, when you combine all those adjustments, they constituted material misstatements on the financials. And then the intention about the crude that we bought with the Subref asset is to sell it. As I've indicated, there are employees who were transferred with the refinery, and there are about 40 contracts that were also transferred with the contract. So those contracts as well as employees, we have to pay for their expenses. So the sale of that crude will assist us in terms of covering those costs. I think I have covered the two questions. The others will be responded to by SFF and PetroSA. Thank you, Chair.
Thank you very much. Chair, if I just may, maybe just to support the team. The first question from the honourable member was really to just ask what happened to the happy days of PetroSA, and I think a very simple and straightforward answer is that the feedstock to the refinery got exhausted. I think that's a simple answer. There's no gas feedstock to the refinery currently, and we're trying to look at how we can resuscitate the refinery based on that. And then I also wanted to maybe just supplement on the downstream presence. You will be aware that we always make the point that we play right across the value chain, upstream, midstream, and downstream. And downstream, our presence has really been very limited to the two stations that Mr. Msavala referred to in the Eastern Cape. And now we're saying that we really want to have to grow our presence in the downstream area, and also to make sure, Honorable Chair, that, with the current challenge of product placement by PetroSA, we also want to resolve that challenge, so that we're able to get our product to, placed in our own stations. It really then talks to the complete security of liquid fuel supply, in our view, so that you don't get stuck in the value chain. You can get the product here and then it gets stuck. You can't get it, to the end consumer. I think that's really also this thinking about the strategy, if I may just conclude it there. Thank you very much.
Thank you. Honorable Lorima, do you have a follow-up?
Mr. Chair, you can read my mind. Does this downstream plan, was it affected by the difficulty that you had in selling tainted fuel? And is this a way of getting around that you can retail directly to the public rather than going to the majors who are not prepared to take that stock?
Ms. Nsawala, do you want to just attempt and I'll support you? Thank you.
No, thanks, Chair. Chair, through you to the member. I think the answer is no. It's no in the sense that the incident of product quality was one particular incident. And I think PetroSA can go in detail also on that element. It happened in Mossel Bay, and that's where our understanding is being isolated at. Our downstream strategy, Honourable Member, is on us answering to the business requirements of ensuring that, number one, the security of supply exists. Now, what do we mean by that? We have a very clear understanding of how the measures have been behaving in terms of also wanting to sell in that space. And it's public information of number of them who are offloading some of their assets. The state cannot be caught in a situation where these assets have been not been attended to, and then of course will be the last resort to ensure that there's fuel at the pump. So in the main, and what also brings comfort is that some of these acquisitions that we're doing are much in talk with some of these oil majors who are basically knocking on our doors to actually offload some of these assets. But because of our strategy, which is both organic as well as external, talks to us also not paying a premium on acquisition. I think, Honourable Member, we're all aware of some of our big oil majors. For example, Shell, who had a process that we participated in, where they were selling the downstream asset. That process is underway. It's a demonstration of how the state needs to organize itself to ensure that we don't get ourselves caught napping when some of these operations may not be in the position to actually want to continue doing business. But outside that is for us to also answer to the market, because there is a market to answer to, and to grow the landscape of how fuel gets distributed in the country. So it's not only about, Honourable Member and Chair, fuel stations, but also depots, because they become a hindrance in terms of how products get to be distributed across the country. Hence, our partnership with strategic partners that are also state linked to ensure that we create that new landscape of distribution of products. So that's our fundamental point. And it also came out of a board-approved study done by independent company, whereby some of these investments are basically supported. So it's purely a business and strategic and developmental in nature. Thanks, Chair.
Thank you very much, Honourable Member. I think I'm also adequately covered. I just wanted to amplify the fact that it really is a strategy that is looking at ensuring security of supply throughout the value chain. So when the oil majors are now exiting, we should not leave the country stranded when we have the security of supply mandate. And I think that is really the truth behind getting into downstream. Thank you.
Thank you. Honourable Zondi.
Thank you, Chairperson. Chairperson, I think a lot of our time in Parliament, government, is spent in producing a lot of plans, but really the part that seems to be an issue is implementation. And if we look at the issue of the gas to liquid refinery in Mossel Bay, it shows those characteristics where there are a lot of plans, but not a lot of implementation. The Gazprom deal failed. There wasn't implementation there. Initially, I think you'd agree with me that the wrong partner was chosen. We are back to square one. In fact, I would say even before square one, because we now have to try and get another partner or realistically would need another partner. Now, the plan that is presented here actually is not a plan, just the comments that were made with regards to that refinery do not bring a lot of confidence to me. For one, the report says that there would be a feasibility study at the end of Q3. The chairperson in the prelude, when she started, she said at the end of Q4. There's already a contradiction with regards to that particular plan right off the bat, which really does, for me, it doesn't give me a lot of confidence. The question that I want to ask with regards to this, where is the money for the feasibility study going to come from? I believe at the time when the RFP went out, Gazprom Bank had committed, I'm not sure how much, but it was in the billions. Now, the plan that I saw in some of the statements that were released was that it was going to come from Infrastructure South Africa. I would like to know if that has been approved. And why the change of tact now? Because initially, the RFP went out and the partner that was going to be chosen, they were supposed to provide the financing for the feasibility study. Why now burden or overburden ISA with funding the feasibility study, and have they approved this? Because if we say, whether we are saying at the end of Q3, which is almost over, or at the end of Q4, we need to know that there's financing for that feasibility study. So where is the money going to come from exactly? And why not go to tender again? Why go through ISA to fund the feasibility study? Then, Chairperson, my second question is with regards to the status of the SANPC. What is the status of the SANPC? At this point, I'm not sure exactly where we are with regards to that particular entity, because we get a lot of conflicting reports. I try to go even on their website. There are some elements where you can't see certain things. So maybe just a brief on what is the status of that particular entity. The other one is, I think if I heard correctly, is that PetroSA owes 10 billion to suppliers of finished products. I would like to know if these suppliers, again, were notified that SANPC would be leasing some of the assets from PetroSA to once again get that assurance. I've asked this question before, but I would like to get that assurance again, because we do not want a situation where there is a court case because these suppliers feel that they were not notified of these changes in PetroSA. And then my other question, Chair, is with regards to the Senpec refinery contributing to profit for the group. This baffles me, but maybe it's because I'm not very fluent in economics as a field. But maybe if we could get an explanation, because how I look at it, if Shell and BP are selling a refinery for 1 rand, it definitely then comes with a lot of liabilities. I think that is how I would assess it. So, with all the liabilities considered, and you look at the asset itself, so do you get more, or do you get a positive balance if you consider the liabilities that come with the refinery, as well as the asset itself? Looking at the environmental liabilities as well, because if they do not close it, then they do not have the NEMA Section 28 prerogative to actually decommission the asset because they've sold it to you, so that would transfer to you as an entity. So considering all of those liabilities, is it still really a cash positive asset? Are you not maybe understating the liabilities and overstating the value of the actual asset? How have you evaluated that particular value and you've arrived to say this is the particular value of the asset and this is the amount of liabilities we have, considering the environmental liabilities as well and the decommissioning liabilities as well? Also, you still need to look at the restructuring of the asset itself. It was flooded, so you still need to rebuild that particular asset as well. We are moving to clean fuels, so you have to have those provisions in place. My own assessment, but again, as I said, I'm not very fluent in economics. It would seem that it doesn't seem like a very viable asset to me, but that is my opinion. I'm hoping you'd have the facts to say this is why it's a viable asset. Then my other question, Chairperson, is with regards to the project that you had there in terms of biofuels, the production of bioethanol using sorghum. Now, unlike economics, this is my field. And sorghum seems like a very abstract source to use for biofuels. I'll explain why I say this. I do exactly the same thing for my studies as well. I produce biofuels, but I use corn cobs to produce bioethanol and biohydrogen. So in this project, you are using sorghum. And there's a reason I didn't choose sorghum as well. Sorghum, if you look at the sales and the production in South Africa, it's in decline. Sorghum also, if you're going to be, unless you're going to be using the waste of sorghum, but if you're going to be using sorghum itself, then there's also the issue of food security. So it seems like a non-viable plant to use for the production of biofuels, like bioethanol. Now, if you're going to be using the waste, like the leaves and all of that, I do understand that. But even with that, there's still the issue of pre-treatment, because to produce bioethanol, you need to access the monomer in terms of the energy molecule, which will be your glucose. And to do that, you need to be able to pre-treat it, which is very costly. So again, I do feel, why sorghum? Why not maize? Because in South Africa, in terms of production, actually, maize makes more sense. Unless you're in the USA, then sorghum would make sense. But in the composition of the market in South Africa, sorghum seems like an abstract choice to me. Chairperson, that would be my last question. Thank you.
Can we please respond to those questions?
Thanks, colleagues. I think let me start with Mr. Msabala and then CFO, and then we'll see what's left.
Thanks, Chair. Let me just see which one, Chair, that I can take. Okay. So maybe let me start with the issue of Q3, Q4. I think through you, Chair, the Chair was referring to the target for the South African. So there's two refineries that needs to undergo reinstatement or reconstruction. Let me start with the SNPC refinery in Durban. As part of the corporate plan of SAF-SOC for this 25-26 financial year, Q4, we need to produce a bankable feasibility study. And that's a work that is currently being pursued. The PetroSA element is separate to that. So that's a separate case, which I think PetroSA can also take in terms of the questions that we have raised in terms of partners and the funding that you referred to. On the bioethanol case, you are quite right. I think your assessment, Honourable Member, is quite right, to a point where it led us to take sorghum as the option. it's a viable for us because the project is of significant nature. So from a feedstock perspective, we took a view that we do not want to engage on the crop that will disturb the food security of the country. So that's number one. So through the partnership and the assessment and the DD that has been conducted, it then proved that we can have an intensive farming program because we are answering to a very strategic problem, which is blending, or call it creating a clean fuel, not just for those products that are manufactured in the country. Chair, I think this is one of the key elements that, since the member has raised, it needs to be dealt with. So the current regulation talks to blending on the bioethanol case for 2% level. And it goes further to say only for those that are manufactured, products that are manufactured in the country, meaning that refined. We understand our refining capacity is very low. So you will not get the capacity to even get to a point where you can answer to the why will you choose such a crop of sorghum where you don't have the market. And our view, as the board deliberated on this matter and approve it on the CPs or the conditional precedents, that talks to ensuring that everyone, even the import, must blend, which then just do an upside case on the requirements and also support the case of actually focusing on a crop that can have a massive volume uptake, not just answering on the petrochemical side, but also answering on the farming side, meaning that job creation that will then come from a farming perspective. So it was a very much deliberate approach. So we are working with the likes of farmers across the country, but that work will continue because part of what the board has advised us to do in the approval was to have a very clear strategy on the farming side of the feedstock, so that it's very deliberate and it's clear on the numbers that we have produced. But I'm willing, honourable member, to even engage technically with you outside on this topic, because it's a topic that is going to drive and help us to deal with the issues of CF2 as we try to comply. Chair, I think on those, I'll let you take direction. But I think I've answered on the Q3, Q4 part, Chair. Thanks.
Thank you, Chair. So in responding to the question around the gain on bargain purchase, it's indeed that if you take the total assets of the precinct that we have bought and you take out liabilities and the R1 that we have paid, the net effect is the 1.8 billion gain on bargain purchase. So the assets are more than the liabilities. So when we did the analysis of this business in the hands of the sellers to establish the economic substance of the business in the hands of the sellers, the business was in two portions. The first portion was the allocation that they had in Island View to bring in finished product. And the second portion was in relation to the actual refining of crude into a finished product. So if you look at where the sellers were making money, they were not making money at the refinery itself. And some of the contributing factors there is that the refinery was very old. So they had to pay a lot of taxes in terms of carbon emissions as well. So it was eating up, that element was also eating up in their profits. So they were making money more in the allocation for bringing in finished product. So you look at what they have sold to us. They have not sold us the portion of the IVT. So they continued making money at IVT, and they sold us the precinct. But if you look at our position now as the implementing arm of government, a SFF group of companies, SFF Trading in particular. Our focus is not only on getting financial benefits out of the refinery. The other critical element that we're looking at is to get socio-economic benefits. So this project is considered a developmental project. So that is why our interest now in buying the actual refinery, to make sure that we address the issues of energy sovereignty. So that's why it's critical for the state to take over the precinct and think about refining. So our plan to resuscitate the refinery will involve also making sure that the refinery aligns with the Clean Fuels 2 regulations. So the lot of money that we're going to invest there is going to assist us in government to make sure that we secure jobs. We also don't import the byproducts that we would normally get out of refining. So we don't import those byproducts like your bitumen and all that. But then another thing is that I think the priority of socio-economic benefits is the priority of government. So the sellers, as they are a business concern, they would be more interested in increasing their profit margins than looking at the socio-economic benefits. They are more interested in financial benefits. Thank you.
Thank you very much. Let me go to Dr. Braff for SNPC. I think they are not necessarily, I think let's deal with that one because we don't have a special presentation for it. Thank you.
Honourable members, thank you. I'm standing in for CEO Mr. Moahi. So I think it's very important that we just reflect on the process of creation of the SANPC or SANPAC. Let me remind you that the formation of SANPC consists out of 3 phases. The first phase was the formation phase, which has been completed. The second phase is the operationalization of the SANPC, of which we are currently in that phase. And the third phase is the growth phase of the SANPC. So where we find ourselves now is absolutely on the second phase, and that is the operationalization of the SANPC. And therefore, we have transferred over 400 people into the enterprise. We have also transferred key assets as in terms of the lease and assignment model. In particularly, let me name the 3 assets that have come across. It is the Saldanha crude tank storage, that's now fully under control of the SANPC. The second asset is the downstream terminal in Montague Gardens, 50% of that, and 50% owned by BP, as well as the Milnerton tank farm, which is a non-active activity at this point in time. So the priority of the SANPC is, in the short term, immediately try to optimize those assets to make sure that we can diversify the revenue streams and increase that optimization. The SANPC, as part of the growth phase, is currently looking at, are there any other assets within the group? I think you mentioned potentially activities in the Southern Cape. How do we optimize those assets of which SANPC can access? I think, as Chair Noah has indicated, 80 Kearney consultants who were fundamentally important as part of the business case development has been brought back to review and obviously look at the bankability of the case and where are there further opportunities for the SANPC given the dynamic market in which we operate. That process is currently underway, and we are confident that that will lay a significant platform for SANPC in 2026 to optimize and go after the revenue optimization as well as the diversification as in the original plan of the SANPC. So very much on the go, very much in the second phase of capacitating the South African National Petroleum Company. And I think as indicated in one of the slides is emphasized very clearly that the free carry of 20% in the upstream blocks in terms of the UPRDA is obviously a fundamentally important enabler for the SANPC. So that promulgation of the regulation will obviously be a major step forward for the SANPC. But we are not fully completed with the project. There is still assets to be transferred, but we are well placed to continue with that process. Thank you, Chair.
Thank you very much, colleagues. Maybe just for amplification, I wanted to also just support the colleagues, maybe starting with the finance, that we are dealing with audited financials as well. But I do think that the colleague has responded to how the whole SNPC refinery was actually audited. And hence, we actually delayed, I think as Chair put it at the beginning of the presentations. I do want to also concede, as I did initially say, that our biggest challenge as a group is really slow implementation. I think that one we concede, and as a board, I think we need to really just strengthen on that and make sure that as we go forward with the future plans and all of those that have not happened, we need to have a different tack and strategy and focus. The SNPC refinery is really crucial for the industry and for SA agenda as a whole. I think that we also have to look at it from the perspective of the dwindling refining capacity, and that we actually want to use it for reindustrialization. We believe that this is a great opportunity. Also, when we look at the byproducts, I think CFO mentioned the byproducts that are also used by other industries. You know, in agriculture, there's byproducts there. In construction industry, there's byproducts there. So you don't want to import all of those, because then it becomes expensive just to build a road, you know, as an example. So it's very important also for that. But I think the third thing as well is that as we develop upstream, this really could be a very important and critical hub that processes the products of the upstream, you know, outputs. So it's a very critical refinery that we seriously need to get on back on stream. You know, in the form that we contemplate, so that we are able to really do all of these things that are desired for the country. Thank you.
Thank you. Honorable Zondi, do you have a follow-up?
Thank you, Chair. Yes, I do. Maybe the answer that I'm not getting is with regards to the GTL refinery in Mossel Bay. The funding element of it, where is it going to come from? Has the Infrastructure South Africa committed to funding the feasibility study? Where exactly is the money going to come from? And also, why change again from looking for a partner who will also do the feasibility study to doing the feasibility study as government, and then presumably going to market to find a partner? That's the question that wasn't answered. And then maybe, Chairperson, also to ask with regards to, again, this is a conversation I think we probably should have outside in the sidelines with regards to this biofuels thing. But what I wanted to register is, I accept that, you know, creating like farming opportunities for sorghum, that would be good for employment and all of that. That I accept. But I also do think it's crucial for us to look at a circular economy where we are looking at the waste rather than using a product that can be used for food security to produce biofuels. I think a circular economy makes more, not only financial sense, but environmental sense as well. But again, it's a conversation we can have on the sidelines. And just the last one, I do accept that we also have to look at the social impact of the Sunpack refinery, not only the financial impact, because that's the whole reason that government has these state-owned entities. But I also do think financials are important in terms of these entities. And I do accept the answer that you do get that profit of about, I think you said 1.5 billion rands. What I would ask, maybe a request, is if we could, if the assessments of the liabilities as well as the assets within that precinct could be given to the committee, maybe for us to satisfy ourselves with going over them. And maybe just one curious question with regards to that. If you were to sell the asset today, how much do you think you'd get for it if you were to sell it and go to market? Thank you, Chair.
Thank you very much, Honourable Member, for those additional questions. Apologies for missing this one. I actually meant to say that I will ask the CFO of PetroSA to just start with it, and I think there was another one from Honourable Lorima to just deal with those as she starts her presentation, when we get to her presentation, if that's okay. I think the others were really just comments, and I don't know, CFO, do you want to try this one of selling the SNPs?
Okay. Thank you. Through you, Chair. I think we'll have to do a thorough due diligence to check how much it can give us if we were to sell it today, because there are factors that are really moving. They are not stagnant, so that we need to consider in establishing the value of the full asset. But I just need to mention that we are going to continuously perform valuation on liabilities and assets. And the plan is to do those valuation on a yearly basis so that we can inform whether we still have that value at that point, whether it's increased or reduced. Thank you.
Thank you. Honorable Selepe.
Thank you, Chairperson. Let me start by this. Can SEF indicate to the committee for the group to return the operational profitability? 2, what steps is SEF taking to verify ownership of the crude oil and financial risks? Does this dispute pose to the group if the claims succeed? The second one, the multiple subsidiaries depend on SEF for loans and transfer for survival. What structural changes is SEF considering to improve financial sustainability and reduce subsidiaries' reliance on the internal bailouts? Then, on your presentation, you indicated that you will be undertaking the bankability study of the Sunpack refinery. Does that mean you did not do so before you purchased the refinery? On the PetroSA, can you indicate plans that will enable improve finances and operational? What is the plan to fund the 6.2 billion, the decommissioning shortfall? Thank you, Chair.
Okay, can we respond?
Thank you very much. Again, PetroSA CFO, if I can just ask you to note those questions as they come. Colleagues, do you want to start with the first lot of questions? Thank you.
No, thanks, Chair. Chair, let me deal with this question that relate to the before purchase, if and now we only want to do the bankable feasibility study now. Honourable member has raised. The process of acquiring the refinery started when the refinery was in an operational status or mode. While that was the first part of the negotiation, as that was coming to a close, we then had the floods that occurred in Devon. So obviously the plan before was a very clear plan because they were going through a refinery that was just an offline refinery, but could have operated on day one with minor modification. That changed the face of that refinery after the floods. Hence, even the sale purchase agreement that got to be concluded became a critical different SPA based on the status now of the refinery. Hence, part of the assessment, as the CFO has indicated, allude to us getting some of the asset up and running. So the call for a bankable feasibility study talks to that business case of ensuring that we understand the new type of a refinery that we are looking for. And also we are increasing the nameplate of the refinery. It was sitting at 180,000 barrels. Based on our business case now, we want to operate it at a more optimum level, just to deal with issues of cost. And that's what's happening globally. These small refineries become very much economically not viable. So hence the view, and we've got the land to actually even push it up to 400,000. So that was the whole basis why of the call for the BFS. Thanks, Chair.
Thank you, Chair. So the claim against the crude oil that is that we acquired with the refinery, we acquired the separate refinery as a going concern. And you look at the contract that we have signed with the sellers, all the assets are mentioned there that we're acquiring with this transaction. So we are going to defend our case in terms of that against that claim because we believe, and the contract contains the crude oil as one of the assets that's supposed to be transferred. We believe that if there's a claim against the crude, then the claim should be addressed to the sellers. Thank you.
Thank you very much, colleagues. I think there's also just another question that has to do with the subsidiaries, particularly those that are requiring support from SEF, and what is the strategy? Currently, if I can just go back to my opening remarks, I spoke to AEMFC, whom we've supported, as well as PetroSA, who is currently under the radar in terms of just from a SEF point of view, and we continue to have, regular interactions through the war room with PetroSA in order to see how they can be supported and what other self-help measures, they can be encouraged to do. And we do find that process, albeit slow, it is successful, but it needs to be speeded up somewhat. AE is also now, we've just started with a similar process where we would like to assist them and strengthen our oversight in ensuring that when it comes to opportunities like really just diversification on their part, because they do have a diversification strategy, but we need to assist them and to support them in implementing that. And I think it also talks to the whole implementation drive that we spoke about as a challenge that we need to address. So that's really what we're doing from a SAF board point of view. Thank you. I think we've covered all the questions, Chair.
Thank you. Honorable Selepe, do you have a follow-up?
Yes, Chair. Just to check on those companies who are depending on the internal bailouts, what time frame do you have for those companies? Looking at the AMFC, on their profits, it doesn't show any improvement. And then how long will SAF carry those companies who are not even showing any indication of improving? How long is the time frame given to those companies who are still depending on the internal bailouts?
Thank you very much for that. It's quite a challenging and very fair question to ask. Honourable Member, I think when it comes to AE, our belief is that within 12 months, certainly they should be able to get into a positive situation, looking at previous performance, financial performance that they have actually demonstrated. We often say that AE, we find that the performance there, it is a bit erratic. Sometimes it's very good, other times it's not. We believe that if they can get the wash plant in place, they can sign the CSA agreement with ESCOM, and also, which I believe they will also just talk about that, and we also believe that if they can really start implementing, some of the diversification plans that they have, really in 12 to 18 months, we should be able to see a change there to the extent that they should not need any financial support from SAF, but they should be in a position now to actually start paying dividends. PetroSA is really a bit tricky, and part of the solution around PetroSA is also to ensure that the SNPC gets up and running. I think that is a very important one, and hence we also felt that it's very important to get the service provider that helped us with the business case and got it approved back on board, so that we can accelerate the stability of SNPC, so that it can also in turn help in finding a solution to PetroSA. But the biggest one for PetroSA, if they can get the refinery up and running, if we can get it as a group, the refinery up and running, I think that it would really be the first prize, and that is what we're really trying to push for. So from a timing point of view, I'm afraid for PetroSA at the moment, really, I cannot say for sure that in 12 months, in 18 months, and so forth. But I can also say that we haven't given them any financial support. I think CFO is also here. She can support, and the CFO will also talk to it. We haven't given them any financial support. So they are managing. Thank you.
Thank you. Honorable Senne.
Thank you, Chairperson, and let me appreciate the presentation. Chair, my first question, with regards to self-trading established to diversify the investment of the SAF group, what has been the focused mandate of the entity with regards to national priority elements and ensuring security of supply? And my second one, Chair, there is a mentioning of SANPAC's operationalism. Oh, my word, this word. Operational, yeah, it's December. as South Africa's energy champion with 20% free on slide 13. Regarding this, what is the target date for this plan? And what are the remaining aspects of the S197 transfer process? And additionally, Chair, regarding the SL97 transfers, is there a strict adherence to the migration plan presented to the portfolio committee, including the promises and assurances the SAFE group gave to this committee regarding the well-being of employees and the prioritization of their interests? Yeah, thank you, Chairperson.
Thank you. Can we please respond?
Thank you very much, Honourable Member, for the questions. CFO, do you want to talk to safe trading or Mr. Msabal?
Thank you, Chair. Chair, the question on safe trading as a diversification mechanism. Currently, safe trading plays a role of hosting the SNPC refinery, has been indicated. But of course, the broader strategy of safe trading is to deal with the beneficiation of trading of our minerals. So it cuts across. So it talks to our ability to complement the work that AE is doing in terms of the ENP from exploration and production, and AE growth plan that talks to focusing on critical minerals, so that those critical minerals, when they are explored, produced, they are able to be placed into the market. And it cannot be that they will be placed through a market through going out of the country as raw materials and coming back as finished products. Hence, we will have this mechanism of ensuring that safe trading actually does this element of beneficiation in a form that takes both the processing of those minerals in the country, of course working with strategic partners, DFIs and so on, but also just the view of ensuring that if we are to sell these products outside the country, they go through our trading desk. This work, honourable members and chair, have already started from us just engaging on a benchmark exercise, so that we have a clear understanding. The private sector does it very well, and in the mining sector. But of course, us from our position is that we first need to ensure that AE get to be stabilized, so that their growth strategy actually becomes clear. We have a safe SOC to Africa strategy that talks to how we take even our sister companies into the continent, because the continent at times cry for our assistance in terms whether it's technical or commercial or just basically hosting some of their projects. And again, this will be another opportunity where we actually get to deal with some of those objectives. Thanks, Chair.
Thank you very much. Can I ask Dr. Braff again to just touch on the operationalization of the SNPC? Thank you.
Thank you, Honourable Member. I think, as you've indicated, the operationalization phase is two parts. It is the asset transfer as well as the employee transfer. Just to recap, on the 1st of May, we transferred 402 employees from all the employees from SFF and the Shared Services Organization of PetroSA also came across. And fundamental to the merger process is the principle of the people will follow the assets. And as indicated, there are a number of assets that we are currently in the process of facilitating the transfer. Obviously, in terms of the current arrangement and the lease and assign operating model, we cannot just transfer the assets without going through a commercial process. There are certain restrictions, and therefore transactions need to be at arm's length, and it needs to be able to withstand any scrutiny that due diligence has been processed. So unfortunately, there has been a delay, I must acknowledge that, in that process of transferring the asset and the remaining staff. And therefore, the principles as concluded in terms of the agreement with Labour still remains intact. However, we need to acknowledge there has been a delay. I think the other key aspect which I need to highlight is that actually, as we heard today, that there are a number of initiatives within the group itself, because the market is extremely dynamic, and the external geopolitical processes that we currently witness is a key fundamental aspect of which we recognize. And therefore, operationalization of the SANPC cannot be done in isolation of the activities within the wider group. And therefore, the matters are not mutually exclusive, but more complementary. So the principle remains exactly the same, that we will protect the jobs, we will make sure that we honor the obligations under the Section 197 process, but we are also very careful that we do not rush and then create a risk to the sustainability of the SANPC. And therefore, the critical element and underlying concern that we are currently dealing with is to ensure and give employees the assurance that the sustainability of the SANPC remain of cardinal importance. So there's no deviation from that principle, even though we must acknowledge the process is taking longer than anticipated, but it is absolutely sacrosanct for us to remain focused around that principle. Thank you.
Thanks very much, Dr. Braff. I think what I would want to just supplement here is that if you look at the delays that have taken place, I think this is primarily why we've also said we need to get this service provider to really just work with us so that we can get back on track. And the continuous engagements do take place, between management and the executives. In fact, the unions had raised some concerns, which they translated into a formal dispute to say that they are not happy with the pace, because there were dates that were committed to, and they were not happy with the pace, of some of the issues that they that were raised or signed off on. But I think what is important for us is that first, the conditions of service as per Section 197 were not tampered with. So the employees are definitely, moved in line with Section 197, as well as the cooling off period, that was agreed upon. We've also made sure that, that is adhered to as well. But the engagements are continuing. And I think, with the unions being the interested parties, it's very important that those engagements do continue and we finalize any gaps that we may have. Thank you.
Thank you. Honorable Senne, do you have a follow-up? Thank you. Honorable Zungula.
Thank you, Chair. I just have a few questions as well. On slide 6, you advised there that the GTL refinery in Mossel Bay did not work the whole year because of challenges from a strategic partner. I want to understand who exactly is this partner, what exactly was the problem, and do you have a set date in 2026 where that refinery will produce fuel again? Similarly, when it comes to PetroSA, did not sell anything the whole year, and I fail to understand how a national oil company of South Africa can go an entire year with no petrol or diesel to sell. What is the plan and the date in which PetroSA will have its own fuel to sell again. The question about the CEO, I need to understand how long has the CEO been acting in that position, and is that period in which he's been acting reasonable, and what are the plans to fill that position permanently? And I note your response about the crude oil issue, the asset, the 443 million inventory issue. But I want to understand that if the other party wins the case, what will be the financial implication to the group, as the CF profit is based on the refinery purchase? And also on this one, from an accounting point of view, will the 443 million be raised as a contingent liability? Have you done so? Are you planning to do so? I just need to understand what is your thinking about raising it as a contingent liability. And then on slide 23, which is the group audit outcomes, for me that slide does not look good at all, because if you have 9 out of 11 subsidiaries with material findings, it can't be a good picture. And the group profit is due to non-recurring to a non-recurring transaction and not operational performance. And if you look as well as the subsidiaries, they are relying on internal loans and transfers from the group. And with the subsidiaries having audit outcomes with material findings, there's high levels of irregular expenditure, and major projects continue to be delayed. They continue to be delayed, and in some instances, yes, there are isolated financial gains, but in my view, the entity did not perform well for 2024-25. Now, with that being said, I need to understand, how then do you score yourself 3.8 out of 5, given the realities of what I've mentioned? Thank you.
Thank you.
Thank you very much, Honourable Member, for the questions. Can I hand over to the team to respond?
Thank you, Chair. So even though we believe that we are the rightful owners of the crude oil, when you look at our financial statements, we have put a note there that raises a contingent liability. So what would happen in case Sasol wins the case? Obviously, we'll have to transfer that crude to them. And I believe the plans to sell it would only take place after we have concluded this case of the claim by Sasol. And the impact on the financial performance would be in the subsequent financial year, or maybe in the year in which we will have to transfer this asset to Sasol. But I need to mention that what will reduce is the current assets. They will reduce the current assets. But looking at the impact on the income statement, there won't be that much of an impact on the income statement, as you have indicated that this is a non-recurring transaction. Thank you.
Thanks, Chair. Honourable Member, just a question on how do we arrive at that score? As per your question, I think if you refer to page 20 of the slides that we have, just to demonstrate that the position that was reached of 3.8 actually is a result of the achievement and the non-achievement of some of those items that have been put up there. And of course, if you look at the scaling up of the business, and some of those support the building factors that the SEF group have been putting into the subsidiaries, just to ensure that we get the focus correct. So just to give you that confidence that indeed the 3.8, it is a true reflection of the KPIs that were set for the financial year under discussion 24-25. I think the rest, the chair, were for PetroSA. They can deal with it at that particular point there.
All right. Perhaps let me just deal with, just to assist to deal with the length of the acting of the CEO at PetroSA. I think the first thing that I just want to highlight is that we still have a disciplinary process undergoing, which I mentioned in my opening remarks, that it is nearing completion. I know that the hearing, all of that has happened. We just await the outcome, and therefore, while we have the that process underway, we need to allow it to conclude in order for us to then decide on the next step. I can't recall now. I think colleagues at the back will have to help me with the duration of acting. I see Director Bonagele is here from the Legacy Board. Perhaps he can also just assist. We can deal with it maybe now, yes. Later. We'll deal for consistency, apologies, we'll deal with it when we get to the PetroSA slides. I just wanted to deal with the other part. I believe we've answered all the questions.
Okay, no, wait. Wait. Honorable Zungula, do you have a follow-up question?
I was referring to the SEF acting CEO, not PetroSA.
Okay, my sincere apologies. So you'd recall that the previous CEO was medically boarded, I think it was in January this year. So Dr. Mukoka would have been acting from that time. I think it was January, February, up to today. So in the process for recruitment, I did also indicate that we've started the recruitment process. So it's currently on the go, and when we have concluded the process, we'll come back and announce. Thank you. Apologies for that.
Thank you, Chair.
Thank you very much. Honorable Nchabeli.
Thanks a lot, Chair, as well as honorable executives. Morning and good day to honorable members. I think maybe just to get back to the question of the CEO of SEF. One, is very troubling that we're sitting here listening to an annual report and there's no CEO. Because the chair cannot play the role of a CEO. The CFO, yes, is supposed to direct us financially, but with regards to operations, even a CEO would have done. Is there any reason in particular you don't have the key executives?
Are you saying the COO would have done?
Yeah, for operations. CFO. Okay, COO. Fantastic. Because I thought the gentleman, when he said he was a CFO, so I wanted to understand that part. The other part of it is, was there a reason why Mr. Mukwaka couldn't come except?
It's Mozambique.
Is that the trip?
Yes.
Oh, okay.
That's why CEOs are not here.
The follow-up on that part of it is, I just wanted to understand quickly. You spoke about the CEO's role, that you're finalizing the process. How long is it still going to be before the CEO is fully appointed rather than on acting capacity, or you're looking at a different CEO?
Let's do this. Do you prefer
Yeah, it's fine. I just want to...
asking and respond?
Yes, ma'am.
Okay, let's do that.
Yes, sir.
Okay. Thank you very much, Honorable Member. Just again to re-emphasize, at the beginning I indicated that all the CEOs have gone to Mozambique with the Minister on the presidential visit, and hence I said, I've got a capable team to support. And then on the process of the recruitment of the CEO, I think the process started probably about a month and a half ago. And first of all, we've outsourced it, and so it is, there is support from an external company that is running the process with us. And I think the long list has been provided. And apologies for looking a bit hesitant. Chair Figlen was actually running with it as the HRRN chair. So my understanding is that the long list has been produced, and the service provider was now working through that long list. And I think the plan had been that possibly by the middle of this month, we would have been looking at a short list and then allocate, some dates for the actual interviews. At this point, I'm unable to give, definite timelines and so forth. But the process, of course, would be that we'll have to go through the interviewing process, and then we will have to go through the cabinet process in order to have that, the list submitted and approved at cabinet level. But I would think that, in due course, we will be able to provide better clarity. Thank you.
Okay. In continuation to that, can you just provide us, because the last time we were at, I think it was PetroSA offices, there was a major discussion as to your current investment partner, which was Gazprom, and you said you had some relationship issues with them. And as a result, the Gazprom deal with PetroSA had to fall apart, as you're reporting today, due to the fact that the relationship had to be terminated due to non-performance. Can you just give us a gist as to what really happened? Because in our view, and this is a perspective which we've been following very strongly, when the Gazprom PetroSA transaction came into light, PetroSA received a lot of attack from the media, and they made it into a Russian deal. And then eventually, I think the Russians on their side then decided to say, look, we're not being protected by South African government as well as PetroSA in this case. And they took a lot of flag. And as a result, Gazprom almost pulled out, probably because if you terminated the relationship due to non-performance, it's based on the fact that the other party was not capable to come forward. So to give us an impression that Gazprom does not have money is a lie. Gazprom is one of the largest petroleum company as well as gas company in the world, if not one of the first, apart from Aramco in Saudi Arabia. So Gazprom does not have a problem of money. What really happened in this relationship for it to come to that level of being terminated as a result of South Africa's bilateral relationship issues and maybe failure in making sure you give the investor a level of protection and confidence in terms of their investment. This was a major investment into PetroSA. It would have helped with the refinery, with regards to Mosgas, etc., and even ensuring that PetroSA infrastructure and refinery can be upgraded. It's a major loss to South Africa, and it's something that we cannot just, on this annual report, just brush it off and assume that just because the termination of the relationship, what was the result? We want to get to the understanding, at least the truth part of it.
Can you help me, help protect me? Lie, let's say it's not true. Because
Yeah,
once you say
maybe a
lies,
misrepresentation or
I
not
will have
truth.
to facilitate the charges to a person who lies to Parliament.
Correct.
And if I don't do that, I may be in trouble. So it's not true.
The chair is
That's
correct,
what he's
not
saying.
true. Let's avoid litigation.
Honorable Member, I was going to also maybe suggest that we package it with the PetroSA list of questions, because they will be competent in responding to this particular question. Thank you.
Okay. Let me move to the next one. The 40 billion in assets, as well as the cash liquidity with regards to Central Energy Fund, what is the composition of that 40 billion assets? What are we referring to when we say, Central Energy Fund has 40 billion worth of assets, as well as the currently 17 billion in liquidity or cash, within the organization? And, the last time I recall, we did make an approval of, there was an injection from Treasury, if I'm not mistaken. And I'm really moving from memory here, where Treasury did approve a significant portion of cash investment, I think, into Central Energy Fund for the acquisition of certain particular infrastructure, whether it was refinery or, I think it was an SANPC, Sunpark company. Can you maybe explain to us this composition of the asset value as well as the liquidity cash part?
Thank you, Chair. So included in our asset list, it's PPE. I have indicated some of the elements of that. And the investment in associate, the ROMCO, 40% ROMCO share, is that we have 25% of shares that we hold in Aqua. And the amount that is owed to us by CMG in acquiring their portion of 15%, which is 1.9 billion. And we have other trade and other receivables that that are recorded at 2.9 billion. And also the strategic stock that is held by SFF is also part of our asset base. We have that cash that we have indicated of 16 billion as well. That's what we have in our list of assets. And the other the buildings that we have, we own, like your SEF building, your PetroSA buildings, SEF trading buildings. It's the buildings that we own. We don't rent them. Thank you. We don't have any cash injection from National Treasury. We haven't gone to National Treasury to ask for any cash injection, so we are sustaining our operation, our expenses by the money that is generated by the business itself. So much as PetroSA sometimes is experiencing problems in terms of their business, but we don't go outside the group in terms of assisting to make sure that we remain financially sustainable. But I've also mentioned the performance of the ROMCO asset that is giving us more dividends. I've mentioned that. That's why our ratios are looking healthy in terms of the presentation that was done by the chair. Thank you.
Thank you very much. What I just wanted to maybe supplement here is that one of the things that we often emphasize is that we are a Schedule 2 company, and I think I often say that we have to work for a living. So we haven't received any kind of bailout or injection. PASA, however, does get a grant from National Treasury, so they will talk about that when they do their presentation at a later stage. But otherwise, no cash injection or anything of sorts. Thank you.
You indicated that the sales of your 3.5 billion in terms of liters on product were not met. What was the reason why was the sales could not be fulfilled?
I think that's also another PetroSA matter, if I can just ask them to deal with it as they talk to their presentation. It actually falls under PetroSA. Thank you.
The element of your coal sales from EAMF, should we refer to EMF as well? Yes. Okay, good. All right. Let me finish with. I don't know if I should ask you guys this question, but maybe I must ask it. Sorry, executives. Yeah. I don't know if I should ask this question. There's a very question relationship here between, I think, Central Energy Fund and its acquisition of shareholding in Aqua Redstone. And you know there's hanging concerns around that particular transaction issues. The fact that there is a company linked to the deputy president right now, who's another shareholder within the Redstone organization through his entity called Aventro, poses a challenge, an element of a conflict of interest, because you are a major shareholder in an organization that is involved in a shareholding with a questionable interest, and there's been a lot of media write-ups about it. You should know.
Just a minute. Honorable Hassan, your hand is up. What is that?
I'm not sure why the mic is not working, Chairperson. I just want to call a caution. We're making particular statements as if they're facts, and the reality is these are very much allegations, not facts. Now, I fully respect the need for honourable members to push and hold various departments and entities accountable, but I think we're about to cross a line in which we are trying to present something as a fact when in reality it's just a statement that's been made. So I just want to bring a caution, and then if it becomes an order, it can be said so. Thank you, Chair.
Okay. Honorable Nchabirin, can I request that you add alleged on your submission?
Thank you so much, Chair. Yes, on the resumption of the same question, the allegation that there is a company that you're involved with where the deputy president is a shareholder in, and that allegation dates back to a trip where the deputy president was the treasurer general of a well-known majority political party when he went to raise the funds in Qatar. Allegedly. No, I've started with allegedly, so it covers everything. Whatever I say is allegedly. So I'm just trying to clarify, is there any known link by Central Energy Fund to this particular conflict of interest relationship? Because you cannot be a state-owned company in bed with the deputy president, currently a sitting deputy president, allegedly, and then tell us at the same time that the investment that you've put in, which when we look at the analysis of the particular investment, that investment is benefiting on the basis that it's got strong political ties to existing political personalities. I'm not going to mention the names. I am mentioning the titled people in titled offices so that it gives an indication. News 24 has written extensively on this issue of Aqua Redstone transaction, has written extensively on the people who are players in this particular transaction and how it happened. I think you've got Business Insider that has done work on it as well, including Daily Maverick that went into even a deep dive to connect the people related to this particular transaction, and yet Central Energy Fund shows this as part of its flagship project. Are you aware of it, Chairperson?
Honourable Member, I will be honest, this is the first time that I'm hearing what you are putting on the table. It certainly has not been brought to the board by the executives. And this is, as I say, the first time that I am hearing about it. But of course, I speak for myself as well as for the board. I don't know if colleagues can.
Everything I'm saying is on document. It's properly documented. It's researched. We've got all of the information.
Can we do it
so
like this?
I'm saying allegedly. Yes.
Can, when I try and intervene, try and accept that? When you ask a question and somebody says, I'm not aware, you are aware and you have something, let's not ambush them immediately. They are not aware. You can make them aware after. You're welcome to do that. Or make them aware now, but they are not aware. It's a fact that they are putting to you. Can you proceed in that manner? And
Thank you, Chair.
let me indicate you started speaking at 16 past. It's 32 now. Can you please?
I'm the only
try
one
and
you're
wrap up?
time marking because everybody else had time. I was outside marking it.
Yeah,
but I'm the only one you're time marking.
Because
it's
they
fine.
tried to be within the timeline. I had no intention.
No,
to
no, let
stop
me.
you.
I will dial down the heat. But I'm just saying you're the only one. I'm the only one you're marking. When everybody else had time to speak properly and engage thoroughly on the issues, nobody had a problem. But anyway, I'm just saying. I just wanted to raise that. The reason I showed the proof is so that it mustn't be made as if I'm saying things that have no validity.
Let's do it like
I can
this.
share this openly.
Let's do
as
it
well.
like this, Honorable Nchabeleng. Can you speak until you are done?
Oh, yeah, thank you so much, Chair. You're very generous, thank you. I really respect that. Okay, fine. I wanted to understand the question on, now this is now on friendly grounds. Really, I'm not being in any way facetious, but you know, I think maybe people don't understand what we do from this side of the desk, especially from where we're sitting in the green side, camouflage and green. Our work is to hold the executive accountable, yourselves. You're presiding over billions of rands that belong to South African taxpayers. So sometimes we would ask you questions that are highly uncomfortable. It is not to attack you as individuals. It's to hold the integrity of the institutions and the people that we represent as public representatives to account so that they can know and be sure the people in charge are giving them the value that they have voted for and are holding their public purse to account and to respond to his responsibility. So we're not being nasty to anybody. We're just trying to execute a public mandate. So on those bases, my question was just to set out the issue of the negotiations around the 15% Island View storage terminal. You say you have the refinery in Island View, which you bought a facility, but you didn't buy a facility access to the berthing of your storage terminal. What was the reason for buying something that you cannot use now, and then at the same time needing access for ship docking when you know the majority of PetroSA currently right now, you're importing fuels? The second question of that is the 15% you're referring to that you are currently negotiating has not yet been agreed to. And the likelihood of it is it might not be agreed to because the terminal is currently oversubscribed by the current players who are currently pushing for a Section 79 to be allocated in terms of a 25-year long leases on that particular terminal. So how would you mitigate against that in relation to your strategy, Chair or executive members?
Okay, thank you very much for your question. I think we can indicate that on the IVT, we actually do have a directive from Minister of Transport as we speak, and maybe the colleagues can expand on the acquisition of some assets and then not others. Mr. Msaba.
No, thanks, Chair. Honourable Member, as the Chair has indicated, the 15% is in the directive. We are currently engaged in the TOA, Terminal Operator Agreement engagement, to finalize that those agreements. The format of the refinery get it crude because it's a crude processing facility. So part of what we have access to is the SBM, which allows us to bring crude to service the refinery in terms of processing, and of course with the tankage, and then evacuate that. Part of the permit or the Section 79 approved by the Minister has an SBM for finished product. We are currently also engaged on the land allocation in the IVT so that we can actually have a terminal that can allow us to take product, finished product, through the SBM, not through the bed, because we understand the congestion that also comes with that. So that is part of this directive that the minister has issued. Thanks, Chair.
So you are definitely sure that this is going to be offered and awarded?
Through you, Chair. So the directive include the 15% allocation on the current existing terminals of the oil majors. On top of that, it includes the SBM, which is specifically for SEF to actually be in a position to bring finished products to the facility that will then be allocated land for as part of the negotiation that we are engaged.
The refinery, second question?
In terms of
the facility that you bought in the same vicinity?
The facility that we bought has a SBM, which is a crude.
Thank you, Chair, and my apologies for interrupting you, sir. I think, Chair, it's going to be unfair to all of us that still needs to come in terms with how the questioning is going, because we won't get our time to also ask questions. I think we'll propose that if there's follow-up questions that the Honorable Njabeleng still want to ask, maybe perhaps he can do it in a written form. I mean, Parliament have been open to giving us those platforms, but to have this dialogue now like it's a committee between him and SAF alone, and we are not here, and we are not here to hold SAF also accountable from other political parties, will be really unfair towards our role as members of Parliament. So I'm pleading for your intervention.
Thank you, Honorable Ntlangwini. I was actually waiting for that because the allegation was that I am unfair. And I only look at, I mark Honorable Njabeleng alone. There is a view raised by Honorable Ntlangwini, honorable members. I want to hear, in fact, by show of hands, how many members feel he has to stop.
No, Chair, I was concluding already.
No, can
so
you?
I don't need to continue.
Honorable Ntshabeleng.
I agree. I agree. I'm stopping as well. So don't worry.
Okay.
I agree. I'm stopping already.
Thank
so
you
that was
very
my
much.
concluding question.
Thank you very much.
I myself.
Honorable Ntlangwini. Go ahead. Yes.
Yes, ma'am.
Thank you so much, Chair, for saving us there and bringing democracy back to the committee. I think all of us are here, Honorable Njabeleng, to hold the executive to account, no matter what color your political party is wearing. All of us are here to hold the executive to account. Chairperson, I would just want to check from you, maybe perhaps, and I think you have alluded as well to some of the slow pace in implementation in some of the plans that you are having as the SAF group. Can that also be the slow pace of the environmental NGOs? Is there an impact? Or have you also maybe perhaps take a step in terms of engaging them if there's any blockage in terms of development in terms of oil and gas? And then I want to, and I think it interlinked with the question as well with the insolvency part with PetroSA, in terms of how will that impact as well your financial status in terms of the other entity that we are busy creating as a state-owned entity in terms of petroleum, because one wouldn't want to have that financial burden on entities that were fully well in their financial capacity and bringing something that is going to spoil the rest of them in terms of your balance sheet and so forth. And then I want to also ask my last one is to find out, were there any strategic consultations done with PetroSA and with AEMFC in terms of with the alignment of these two parties? Were they consulted, and if yes, when was those consulted meetings conducted? Thank you, Chair.
Thank you. Responses?
Thank you very much, Honourable Member, for the questions. I think I'm not quite clear about the last question, but maybe we can deal with it as a follow-up. PetroSA is here to talk about the possible slow execution extending to the environmental aspects, dealing with the upstream side of the business. So we can deal with that maybe when they do their presentation. And then on the PetroSA insolvency impact on SNPC, what I would like to remind, just the whole concept around the merger was that we will take the assets that are currently functioning and lease them across to the SNPC, and what is not functioning currently will ring fence and it will remain behind. And a substantive asset that falls into that category currently is the GTL refinery, and it has stayed behind so that it doesn't contaminate the SNPC in any way, because as a principle we said we need to ensure that the SNPC is not saddled with the decommissioning liability, non-performance from any assets across the merging companies. So we have protected the SNPC in as far as that is concerned, and so the refinery remains behind to be fixed, and when it's fixed it will then come across to the SNPC. So the strategic consultations done, I'm trying to just understand in relation to what. Apologies for that.
Do you have a follow-up, Honorable Ntlangwini?
Thank you, Chair. I just want to find out maybe perhaps when is the time frame for the sort of cleaning the house of and cleaning out all of the I don't want to say negativity, but sort of getting it on the feet. What time frames have you given yourself to establish and get that in order? Because you have mentioned earlier on that also there's a slow pace in some of the implementation, and I want to also find out what are these slow-paced stumbling blocks or blockages that you sort of are not meeting your targets as you are putting it out for yourself. And then on the last one that I think you asked the clarifying question is the one that I just wanted to find out, is there any strategic sessions that you are having with all of these entities to sit down and pave a way forward, how we gonna establish and or attain our goaling posts? It's basically just a question like that. It interlinks with the previous one. Thank you.
Thank you very much. I think I've got better understanding now. I think that if I can just start with the, the strategic consultations with PetroSA and AE around their current non-performance, that really requires now that from a safe point of view, we actually have an elevated and strengthened oversight. So we have held engagements with AEMFC specifically. I think it was about 2-3 weeks ago, and we agreed that we will have follow-up engagements, bi-weekly, to try and support them and assist them in ensuring that they can really turn around the business. I indicated earlier that we do believe that based on historical performance, from AEMFC, it is possible for them to turn around in 12 to 18 months. We really believe that if they can just, get focused and supported. With PetroSA, I also did indicate that it is a bit tricky there to say how long it's going to take, because we have been ongoing with, oversight around PetroSA. We have seen some improvements, but the improvements have really been very, very incremental. And we really need a huge step change. And we believe that the step change will come from the refinery coming back on stream. And that's where the focus really needs to be, from that perspective. I think that, the execution difficulty really is comprised of many factors. Some of the factors are resourcing, other factors are, funding not available. It really is a myriad of factors that, would need to be systematically addressed in order for us to ensure that we can improve on that side. But we seized with it as the boards. Thank you.
Thank you. Honorable Hassan.
Decides when it wants to work. Yeah, sorry, Chair. It's temperamental, the particular mic, but you can hear me. All right. Thank you very much, Chair. And let me also appreciate the interventions from honourable members in protecting us and ensuring that we all have a sufficient and fair amount of time to pose our questions and to really get across our issues, given that we're all elected here dutifully as members of Parliament as well. To the SEF group, I think the first question is around the interventions you've put in place to address the scaling up for your growth strategy, which you spoke about at length, particularly considering the operational issues facing the legacy entities, and of course the operational deficit that's come about particularly through PetroSA. What are some of those interventions? How do you measure success against the adaptive strategy framework? Let's ask that first, and then the second one is a little bit different. Thanks.
Thank you very much for that question. Can I ask the colleagues to respond? Thank you.
Thank you, Chair. Honourable Member, with regard to that question, so if we look at our scaling up framework, it talks to us being in the position where we have a diversified portfolio of projects. What does it mean? It means that and we've done this at the SEF group. So if you look at the project pipeline, in majority, those projects sit within the SEF SOC. So we are now engaging with the subsidiaries just to ensure that that principle and that understanding actually get to be implemented through, especially within the SNPC new business. What does it mean? It means that a diversified portfolio assists you in terms of balancing your exposure level, right? So that's number one. From a perspective of financial capability, and we've seen we are in the situation that we are in simply because of some of financial incapability of running particular projects, and that level of expertise that we then bring up from scaling up is just to showcase that we can bring in the required type of funding in a blended format that will not also expose the group balance sheet. What do I mean by that? We have been engaging with DFIs. We have term sheets from majority of the DFIs in South Africa and in the continent. We also work strategically on what is called an EPC plus F framework, which assists us to lessen our exposure in terms of the funding element and also controlling the exposure from a technical perspective. So most of our work, in fact, in majority of our mega projects, are going to be done on that framework, because what it does, Honourable Member, it allows us to share the risk. If we look at the case of PetroSA, where we had to spend in the past, it was purely because PetroSA was just doing the project on their own. So when the project does not succeed, it means that the whole balance sheet gets to be exposed in that manner. In this particular manner, we are saying, let's blend the type of funding, let's blend the type of partnership that we need, but those also must be critical partners that we work with who are also adding value from a technical and a commercial perspective.
No,
Yes.
thank you. I think I'm answered on that. My next question is, take into account the amount of large-scale projects that the SEF group has in the pipeline for the development and infrastructure funding, but also including some of the poor performance on those KPIs, on the development of the group funding plan for large-scale projects. How will this gap in planning and existing projects be reconciled? That's the first question. What has resulted in this large variation between what we've planned and what we can actually pay for in fund? And what are some of the corrective measures that have been implemented to ensure that the group funding plan for these large-scale projects is actually implemented and rolled out? Thanks. I'm just going to leave my mic on because it's deciding when it wants to work.
Thank you, Chair. So to address the funding of projects, we have a funding framework that details the approach that we're going to take in terms of funding our different projects. Firstly, we have noted that the amount of money that is required to resuscitate the refineries, we don't have that money in our balance sheet, and that is why we opt for partnerships in that regard, where we get partners on board to develop the refinery for us and share in the profits to get their money back, and then they will exit at some point. But another approach that we are taking, because we still have some funds that we can commit, particularly within the SEFSOC, the parent company, what we do, we structure our funding in terms of equity that we want to pay from our balance sheet, but balance that with the loans that we want to raise with financial institutions. So that's the plan that we have in terms of making sure that we cover the costs of the project pipeline. Thank you.
I think, Chair, I recognize that it's an ongoing process, but I think this is something that we need to watch because we can have excellent plans and ideas, but if we don't have the money, especially in this industry, to implement, it's going to mean almost nothing. So I acknowledge what's been said, but I think maybe going forward and the next times you appear before the portfolio, maybe dedicate a few slides to that. So what kind of loans are we looking at? What's the structure? What's the interest rate, et cetera, so that we can also determine where we need to intervene and where we also need to put in extra accountability mechanisms. And I think that could also be used as an additional form of perhaps even security when one approaches the different financial institutions to say, well, we actually do appear before Parliament in XYZ times, and that's an additional accountability measure to ensure implementation. So I think, Chair, that's something to look at. Leading on, there's also a financial question. SEF Group, you made a profit, excellent, but it must be said that you've only made a profit because of a once-off accounting gain from the buying of Sandpec refinery. So in terms of your core operations, you've actually made a large, very large operating loss of 1.8 billion rand, which shows and demonstrates some serious operational and cost management problems that still exist. I think you need to indicate to us the kinds of plans that are in place specifically to return us to operational profitability, because you're going to come to us in the next financial year and then we're going to see a drop, like a literal cliff kind of drop in the graph, and then we're going to ask you very harsh questions. So we might as well anticipate it now. Thank you, Chair.
Thank you, Chair. The plans that we have, as we have indicated, that we're scaling up for growth, and within SEFSOC as a parent, we do have some resources that we can invest in new projects. So development of the project pipeline, particularly with funds that are contained in SEFSOC, is aimed at making sure that we diversify revenue streams while we're dealing with resolving issues in AE and PetroSA. So development of the project pipeline will make sure that we get those revenues flowing from new projects that we are definitely sure that we will get returns on. And one such project, the Aqua, once it becomes operational, we're expecting to see the revenues trickling from that. And the new acquisition of the SAPREF asset within the SAF trading, as indicated by the COO, we are considering using the 10 kg for blending purposes. So we still have the assets that can give us money in the current state of the refinery. The SBM can bring in crude steel, and the 10 kg can store that crude, and that we can evacuate it and transport it to where it would be required. But as I've indicated as well, the blending is one of the options that we have, where we can use the tanks that are there to blend a finished product and sell it. Thank you.
Chairperson Noah, I'm not too happy with that. Are you going to add on?
Yeah, so what I wanted to supplement with is that, you know, from one of the things that we look at from a board point of view is to actually look for opportunities where we can support the executives better in order to ensure that we deal with the issue of speed. And one such intervention is to actually have a board director who actually sponsors, you know, particular areas, you know, in the business. So we have a sponsor, for instance, who looks after the projects. And the slide 14 that was showed to you, you know, to show the pipeline, we do believe that, you know, if we look at that pipeline, the important point for us is to really try and race to getting it green. In other words, to Section 54 to see. I think once we get to that point, it's one very critical KPI that we actually look at. And also to ensure that from a governance point of view, when colleagues need to bring, you know, submissions to the board level, we are really, when it comes to time, we really avail ourselves so that we can support them, because, you know, sometimes it's really a matter of getting, you know, onto the board. So this project pipeline, we certainly watch it because we do believe that it is an opportunity for us to start topping up, you know, our revenues, you know, when you look at it. Because if for example, you know, the one example that's given is that the CSP project is going to start paying dividends. And at some point, yes, we know that the dividends will probably go towards the loan initially, you know, for a period of time. But what we are putting a lot of pressure on the executives is to try and give this slide to be more green, because that is what is really going to give us assurance that we will get more projects getting into commercial operation. So the pressure for us is really going to be looking at this and turning it green. And I think that's our big challenge from a board point of view. Thank you. That's
No, I'm very glad for that,
That's your
Chairperson.
last one.
That's the last question. And let me also just say, I think it's more important to get SEF as a group running optimally, because this is a space where sometimes you have very good commodity prices, everything's good, we're great, and then the moment it tanks, we have a crisis. So I think we need to put in greater focus on actual optimal performance within. My last question is around the AG report, Chair. The AG's issued repeat findings, particularly including financial misstatements, the SCM non-compliance, the poor IT systems, weak internal audits and capacity, and of course a lack of consequence management. And now this is to group, because I'll ask similar and very particular questions both on the financials and the actual work in each entity, but it is important to ask this to the group. How is SEF ensuring that these reoccurring AGSA findings are resolved permanently, and what timelines have you been putting in place to implement stronger internal controls? Because you cannot come to us every year with the same AGSA findings and then you say the same story, nothing changes. Thanks, Chair.
So one effective measure that ensures that there's no repetition, that would deter repeat transgressions, is consequence management. So we intending to implement consequence management, but also strengthen the controls within the processes, supply chain management processes. And with regard to the material misstatements, we are intending to increase our capacity in terms of skills. where we are going to appoint IFRI specialists who are going to assist us in terms of advising on the accounting treatment. So that role is not prevalent currently in the group. So we're going to develop that capacity at parent level, and that capacity is going to also assist, support the subsidiaries. And the other issue that we are dealing with is numbers. So we are trying to capacitate as well our finance unit to be able to deal with increasing number of financial statements that are prepared as we are acquiring new assets and housing them in the special purpose vehicles. Thank you.
Chair, what I wanted to just maybe top up here is that we also have the Board Audit and Risk Committee that actually, oversees or provides oversight on behalf of the board to ensure that the corrective actions relating to the AG findings are actually tracked and implemented and tracked. Thank you.
Thank you, honorable members, and thank you for those answers. It's 1:03. We will break for lunch and come back here at 2. When we come back, we're going to take AE, PASA, and IGUES, and then ask questions. Now, I have given this format because I never had a problem before of asking questions until you have exhausted, but today I have a problem. And I will go back to our originally agreed format, where I time you. Once you are done, you are done. I was trying to be generous, but doesn't work, I can see, and we'll have to go back to the original format. You are all invited for lunch in the ground floor restaurant. We will come back at 2. Thank you very much.
ufuna impendulo. Hayi. Ngalendlela bayifuna ngayo. Yeyabo. Kaloku still niqokelele. Nayithatha nayigcina. Ngalaa nto yedezi.
Honorable members, we are back, and we did indicate that when we come back, we'll be dealing with AE, PetroSA, and I guess. I am not dictating the way they must come, but I'm just saying the three will be taken first, and then we'll ask questions, and then we'll go to the last batch. DG?
Chairperson, oh yeah, the chair is here. I was trying to buy time for the chair. Chair, I was just passing the baton back to you. For you to, apparently you can decide which order you want to take, but the first three must come.
Okay.
Like that.
Thank you very much, Honorable Chair and Honorable Members. I think the AE team is ready. Perhaps we should start with them. And then after AE, I suggest that we go straight to PetroSA. I think, Chair, you said AE, PetroSA, and strategy, and I guess, and then we'll do, I guess, third. Thank you.
Yeah, thank you and good afternoon, everybody. Thank you, Chair. Through you. There was a suggestion that before we start, we must answer those questions. There was the question about audit results. I think the confusion is the first one is the immediate year, and then the last one is 6-7 years ago. So if you look at it, the first year is last year, which is not we did not do badly in terms of auditing. But I think the years are from now to 6 years. So the last ones are, the bad ones are the ones that are 6 years ago. So that was the only question I remembered. Yeah. So just to get on the slides, you'll see by the numbers that we are actually on a red, and I'll give the reasons to that. Maybe the story started last year, September, when Eskom suspended the coal that was not washed to their facilities, and this is not an AE thing. It was done to everybody else who was supplying coal to Eskom. The reason being, when McRich was a minister, she actually changed the specifications for coal that was going to Kusile, and then non-adherence to those specifications, according to Eskom, was costing them around 600 million on their boilers. So to reverse that, they wanted everybody to have a coal quality control system, which is either a coal washing plant or a mechanism equal to a coal washing plant that can be automated so that the damage is not incurred by Eskom in the long-term structure. So that's where we are with the lowlights, obviously. The highlights, we always say, even though we're not operating at the 200,000 tons, you'll see we try and keep the safety records because we think safety is important as a mining company and as a state. The next highlight I want to highlight is that our second mine, which is, or a second operation, sorry, Tleporki, is going to be operational. We've done the mobilization. The last teething problems are the farmers agreeing on the equipment being on their sites, and that took longer than unusual for a mining company because we thought that was sorted out. But we finalizing that, and Tleport will be up and running, which will be another revenue generating program for us. Suffice to say, Tleport does not mean Vlakporki cost will be, we're running them as two separate projects. So Vlakfontein is the one that is suspended because it doesn't have coal wash plant. So whatever comes from Tleport should be seen as a revenue for Tleport. Combined, they don't make AE at this present moment a profitable company. I'm gonna just go to the CFO so that we can go into the numbers and the audits, and then I'll conclude with the way forward at the end. Thank you, Chair.
Good afternoon, Chairperson of the committee, members of the committee, the SEF Chairperson, and also the directors with us here, and also just the members of management. Thank you very much for the opportunity to present our annual report to the committee. I'm going to be talking to the financial statements, performance against predetermined objectives, the matters that were raised by the Auditor General, and how are we responding to that as AE. You can just go to the next slide, just straight to the income statement. As the CEO indicated, we had a very difficult year with the stoppage on the 29th of September last year, and then obviously for half of the year we are effectively not trading. You can see that in the significant decline in revenue. What you must also mention to the committee is that at the time of the stoppage itself, we were almost at the end of the previous contract with Eskom, so even our tonnage on the contract and the energy was also significantly less. So you can see if you compare year to year, our numbers are significantly different. Even though we are recording a positive gross profit margin overall, we reported a loss for the year, primarily because obviously of the stoppage, low revenue, plus also if you are not mining, you cannot allocate some of the cost of production or what the cost of running a mine to your cost of sales, so it becomes your normal operating expenses. So you see that we had an operating loss of about 432 million, but the net loss is less because we also received a dividend from one of our equity accounted associate, and also something we called an accounting adjustment called deferred taxation, kind of a tax credit. So overall, the performance was quite not what we have expected. And in the strategic recovery plan, we intend to improve this picture, as the chair of SEF was indicating, in a space of 12 to 24 months. So that was the income statement. Can move to the next slide. On the balance sheet, as you would expect, if the operational performance is weak, it's going to affect the cash. So if you see the significant decline, then assets is largely a cash burn because of the mine under kind of care and maintenance for half of the year. However, we are still solvent. I think we're not technically insolvent at the time. But what this highlights for us as AE, the board, the SEF, is that we need to invest more time and energy in our strategic recovery plan to restore operations, as the CEO was saying, at both Vlakfontein and Klerksdorp. So that's our balance sheet. If we go to the next slide. Who's driving? We also set a corporate plan, and this is the performance against that. I think the storyline throughout the presentation is consistent in that because of the half of the year where we were not operating, we have missed most of our KPIs. On the energy, so if you look at the first block, which is 40% of the total weighting, we did make the KPI on gross profit margin because of, at the time when we were operating, we could actually have a positive margin. We also met our BE level. We are actually at level 4. The cost per ton, we did manage to achieve that. We also achieved an unqualified audit opinion as well. The safety performance also, we did meet that specific target. But when you look at the human capital performance, we were not able to achieve those targets because in the second half of the year, because of the stoppage, we also had to implement Section 189, and about 68% of the employees in the company were retrenched, making it obviously a bit challenging to implement even performance management. So That was the scorecard. If you go to the audit file issues, earlier there was a comment about us regressing. We actually didn't regress, we stagnated in audit outcomes. It was in 2022-23 where we had a disclaimer. Last year we received an unqualified audit opinion. We also received unqualified opinion for 24-25. And also, even the AG, if we look at the management reports, they do acknowledge significant progress made, I think, from the disclaimer. Where the AG had findings, why we have what we call material findings, it was on 4 areas. First of all, it was on the financial statements. On the financial statements, because of where we find ourselves as a company, the AG was not, obviously it was a moving target as well, because the level of disclosure around going concern in the draft that we gave them in May was not kind of adequate. It had to be updated in July based on the information at the time of signing of the financial. So that adjustment or disclosure was quite material. Hence, we had to do that. So that was the main thing. Other than that, if you look at our numbers, the AG was generally happy with the quality of the submission. There were some small issues with the reclassification between assets, but nothing really major there. What the issue that was raised that is material was just the disclosure on the going concern assessment, which was corrected. Going forward, I believe that within AE we do have a very good and a strong reporting team in terms of just the capacity to do reporting. What we will do to strengthen that environment is that we will subject the financials to some external review and get some comments. But I've got confidence in myself and the team in terms of our ability to prepare financial statements. There were issues on the supply chain also. What caught us there was mainly the legacy issues, not necessarily the new items that are becoming irregular. When the AG tested our procurement, whether it's quotations or tenders, they didn't find instances of non-compliance on the new transactions. However, there is some contracts, legacy contracts, which are resulting in irregular expenditure for now, but that is something that we have. They also picked up some administrative issues like reporting to Treasury, which we did fix. There was a misinterpretation of a framework. And they've also raised the issue, which they did say that it applies to many entities that they audit around public entities, civil servant or state employees doing business with government. Currently, we don't have a system that allows us to determine whether or not a person is somehow employed in the state. However, AG has got some tools to be able to do that. Only thing that we have at the moment is just there's a disclosure form where if you put a tender or you're responding to a quotation that you must complete, but that seems not to be adequate. But AG also committed to assist us with using their tools, if necessary, to pick up whether someone is employed by the state. And then on contract management, of course, because of the stoppage, we then also could not conclude all the contracts. If you go to the next slide. The predetermined objectives, there were some discrepancies between what we have reported versus what they then audited. Going forward, what we are implementing is that the internal audit will review our performance report prior to submission in May to make sure that whatever that we claim is also something that is auditable. And lastly, on the audit, there was an IT, can you go to? In IT, there were findings on general control weaknesses on our systems. And the main root cause there is we had issues within IT, within AE, which what we've decided is to use the strength of the holding company, which is SEF, which has taken over, and we are now receiving IT as a shared service. And we believe that with the necessary investments and support, we should be able to eliminate the findings on IT. Chairperson, we do aspire to have a clean audit. If we look at where AE is at the moment, what is stopping us from getting a clean audit? Obviously, we need to improve operational performance and make sure that we are going concern, and also not to have any material misstatements or financial statements. I think that it's something that is within reach, and eliminate instances of material irregular expenditure, which, looking at the processes in the last 2 years, I think we are almost there. So our intention and the challenge that the board and also the shareholders given us is that in addition to a turnaround plan, we also want to see a clean audit going forward. Thank you very much.
Thank you, Spa. I think then the question becomes, what do we do, or what's the plan? So we have actually laid down the plan and discussed it intensely with our board. If you look at the first 4, they all depend on the last point, which we call the banker study. And I'm going to try to explain this in simplistic terms. So before we have anything, as in coal wash plant or extend the CSA, Eskom wants to know the life of mine, the geology in the ground. Unfortunately for AE, we don't have that data. So what we've done, we have now appointed a consulting firm that will study our competent persons report from 2014, 2020, and then we're going to update it so that when we go back to Eskom, before Eskom gives us a contract, they can only give us 24 months because we don't have a competent persons report that is signed by an independent party. So as a compromise, they said they'll give us for 24 months. What we don't agree on with Eskom is the price. You saw the price of 657. Eskom Finance have actually came up with an optimized pricing method that for them in gigajoule terms will be equal to something around 550. Now, at 550 and at 650, it does not make sense for anyone to mine or to send his coal at Eskom. So that's where what we're trying to do now is to look at another option, which is what we call...
Just a minute. Your hand is up, Honorable.
Yes,
Seleka.
thanks, Chair. My apologies. I know it's not a question session, but I feel like I'm missing something. The presenter just made mention of the years. I'm missing that. Maybe if he can repeat that years that he is going to get the competent person for the report. Just those years. I've missed that one. Thank you, Chair.
Thank you, Chair. So we've got an old one, which is 2014, 2020, and what we're now doing at 2025, we're not doing much, but we're just changing the financial numbers, which are in 2014, 2020 terms, and we're bringing the numbers into 2025 financial numbers, which means it should be the most updated thing. While we're doing that, we're going to determine how much we need to drill in Vlakfontein. We're going to determine how much we need to drill in Tleporki. T project has got its own CPR. We also just need to validate it. So by end of December, mid-Jan, we should have a 2025 competent persons report. Once we have that, we can then go back to people who want to build plans for us. We can then go to people who are at Eskom, because nobody's going to build a plant if you don't have a geology that can carry that plant for more than 5 years or for more than whatever amount. So what we're trying to do is to go back, validate what we have, then the suppliers will be able to talk to us in terms of what we have and how we're going to change. While we're doing that, any other materials that are not coal related, we have entered into a working relationship with Development Bank. So they've got a critical mineral strategy task team for the whole of SADC, and we're part of that SADC. So all our rare earth, uranium, and I think graphite, those have been now being sort of going to be, the CPR will be funded by that fund from the DBSA/IDC, whatever committee that they're doing with it. So once we've got the studies, what I'm trying to show is that somebody asked about the recovery time. Klepborg on its own, it's going to mine open cast for around 8 to 12 months. So Klepborg is fine. What we're hoping to do is that in 0 to 8 months, drill more, know more about it. Whereas on the other hand, Vlakfontein, we know what needs to be done. The only setback is we're still negotiating the price with Eskom. Because without a reasonable price, we don't see ourselves mining profitably at Vlakfontein, even if it's closer to Kusile. And I think that's it from us, Chair. We will prefer to close it from here. Thank you.
Okay, Honorable Lorima, your hand is up.
Can I go ahead and ask questions?
No, we agreed that we are taking 3, and then we'll ask the questions on the 3.
Good afternoon, Honorable Chair and honorable members of the committee, DG and officials within the department, SAF Group Chair, directors and executives, subsidiary chairs, directors, executives and colleagues. My name is Bongani Saidin, the CEO at the Petroleum Agency SA, newly appointed. We are led by Director Carmen Belwane in this session, Chair of the Board Audit and Risk Committee. PetroSA has a dual mandate. Our mandate is to regulate the upstream petroleum sector, meaning we process applications for petroleum rights. Our mandate is also to promote exploration and production in South Africa. And we do that through access to a petroleum database that dates back to 1965, when the state-owned exploration company SUCO was established. So we do an evaluation in terms of, or we assess the prospectivity of the country, having the privilege of being the custodian of the petroleum database, therefore access to all of that data, including data that's been recently acquired. We've performed fairly well from a financial perspective during the year under review. We generated a revenue of some 70 million rands. This led to a profit of some 24 million. That revenue, which is a significant revenue, some 80% in fact, compared to what is our allocation from the National Treasury. We get an annual allocation of some 87 or say 90 million on average. So the 70 million almost matches at 80% level the revenue that we're receiving as an allocation. What that has meant for the year in question is that because, while we had cash at some 385 million, we didn't have to dip into that cash reserves to fund our operations during the year in question, because our revenue has closed the gap that is left by an inadequate allocation from the National Treasury. And this revenue comes on the back of a seismic acquisition by and large that was conducted last year during January to April of the West Coast, which is the West Coast that's quite attractive currently globally because it hosts the Orange Basin. So there was one seismic acquisition conducted by a company called Searcher, which seismic acquisition was done at 51 million US dollars. So that's at 19 rand per dollar, rand-dollar exchange rate, close to R1 billion. There was just one acquisition that has meant that, and we received our share of the proceeds from that acquisition. That has meant that we've remained afloat, or one could say we could be financially sustainable on the back of tangible exploration activities such as the seismic acquisitions. And it is possible in a year to do one or two at the minimum seismic acquisitions, which would mean financial sustainability for PetroSA becomes an issue of the past. So it is critical, therefore, that exploration activity goes ahead in the country because it would mean a lot, not only in terms of our mandate of ensuring, I think, at a strategic level, energy security of supply, but also in terms of the financial sustainability of the organization. In terms of lowlights, our audit outcomes remained constant compared to previous years, unqualified with material findings. Other sources of revenue have dipped year on year. For example, the license fees have reduced, I think by 3% at least or so. Our operational, the allocation from National Treasury is also reduced by about 5%. So the license fees are impacted by lack of activities. So when activities are not allowed to go ahead through resistance by environmental lobby groups, challenging environmental impact assessments and litigating on some of these, it also means a number of activities that would have taken place do not take place, which also affect license fees. Hence, that slight dip during the year in question. There's also been a deferral of activities related to the shale gas research project, where we are acquiring geophysical data through 3 methods under a Section 50 of the MPRDA, where we are assessing the occurrence and nature of petroleum in the Karoo, and also deepening our understanding in terms of the subsurface geology and the risks associated with shale gas exploration and production. We've had to defer, or in fact, we've had to halt activities while underway during the year under review, because lawyers representing landowners and agricultural associations demanded that an environmental impact assessment be done, despite the fact that these activities under the Section 50, which is research leaning, do not require an environmental authorization backed by an EIA. 2 of those activities are also, even in terms of the NEMA regulations, not required to undertake an EIA, but to exercise due care, we conceded to that demand, which meant the project in terms of actual activities was delayed by close to a year actually. And I think this also then responds to the question raised earlier, I think by Honorable Ntlangwini, whether our execution of projects is impacted by back push by environmental lobby groups. So this shale gas project has clearly been impacted by those lawyers representing those farmers, representing those agricultural associations, and I think working with a very strong leaning as an environmental lobby. So therefore, yes,
Can you-
execution of projects is.
Can you just repeat that point since the questioner just entered the room? Please.
Okay, thank you, Chair. So Honorable Ntlangwini had asked whether the execution of projects, implementation of projects, is to an extent impacted by back push by environmental lobby groups. The answer is yes. And I've made an example here of the shale gas project, phase 2 of that project, which phase 2 seeks to acquire, is acquiring geophysical data through 3 methods. That project has had to be delayed on the back of lawyers representing landowners, agricultural associations with a strong leaning on environmental lobby groups. We've had to stop activities along the way to conduct an EIA that's not called for in law, but we considered on the back of due care and demonstrating that we are listening to stakeholders. I will hand over to the CFO at this point. At this point, Chair. Thanks.
Good afternoon, Honorable Chair. Good afternoon, honorable members, DG, Group Chair, CEOs, CFOs, colleagues, executives, and the public. Mine is simple. It's just to look at the numbers. We're going to look at salient points. I'd like to highlight the issue of revenue. Year on year, we had 47% approximately increase, and CE has touched on it. The SECHA amount we received did make a significant contribution towards that. I think it was approximately 80% of that revenue come from one customer, which is SECHA. Operating expenses decreased year on year by 21.3%. Though it looks like we're pushing our expenses, but it's positive because the increase is mainly due to a project, the shale gas project. We're trying to do a catch-up, so that's the main contributor in there. And then operating losses, or losses year on year, there's been an improvement, and again, major contributor being the money we received from SECHA. And ideally, that position we'd like to have at worst, well, at best break even. Finance income increased 2.1, it's marginal. And CE again touched on that. During the year, we didn't touch on our cash reserves, so our interest earned stayed constant. Net profit, and then again, labor on the point, money from SECHA, a major contributor. Operation allocation, I think across the board, National Treasury had made cuts to respective departments on the allocation due to the known economic conditions that we're experiencing. Capital expenditure, it's been a reduction, obviously not welcomed. We're trying to catch up in this financial year to ensure that the projects that are lagging behind, we do catch up. On the point of revenue mix, CE touched on it, and I think the impact on the regulated fees, despite an increase in the regulated fees, because of lack of activities, there isn't much we could collect this year, and obviously due to appeals, litigations, and so forth. So that's why I had a reduction on that line item. I think I've covered the first one on data and data revenue sharing. Next slide. That's more on the financial position. Obviously, in terms of our cash reserves, it has stayed constant, reduced marginally. I think the major contribution had to do with the shale gas spend. The other cash balances, as part of our risk management to mitigate the foreign exchange movement, we open an account with ABSA in a foreign denominated account to ensure that when we receive or pay amount, we're not exposed to foreign exchange movement. So that's the cash with ABSA. In current assets, it is reduced year on year, basically imply that we've improved on our collections. Current liabilities, bulk of that amount is the money we received from the department, but we haven't spent on shale gas, both phase 1 and phase 2. Non-current liabilities that reduced, meaning we've improved the payment of creditors in the year under review. Total assets marginally dropped from 440 to 439. Total liabilities reduced, and again, I touched on that it had to do with shale gas expenses. I think the next slide, the CE will take it from here.
From a corporate scorecard perspective, one of the key performance areas that were not achieved is the establishment of a national steering committee that would help create an enabling environment for oil and gas exploration and production. The mechanics of establishing such a committee proved beyond our control. That has now been elevated to the DMPR in terms of recognized in their strategy session in November for coordination by the presidency. Because the bigger picture there is that oil and gas could significantly contribute, of course, to national energy security, to economic growth and socio-economic development. And oil and gas impacts several departments, the DMPR, the DFFE. It could impact TTIC in terms of industrialization, and also the Department of Energy, Electricity, in terms of their gas to power program, because they will need gas, largely gas that would be indigenous, would make better sense compared to any other gas that could be imported from anywhere else. The next slide. The other area of underperformance is that we did not deliver the funding model. And that funding model is backed by a benchmarking. This is a benchmarking in terms of how other petroleum regulators are funded. That exercise was proved not as easy as we thought in terms of accessing data related to these other regulators. That those would be regulators in comparative jurisdictions, global in SADC and global, including leading regulators such as that of Norway. Broadly, operational excellence suffered from cost containment measures. A response to a National Treasury guideline, I think in August of 2025. And of course, our own constrained financial position meant that prudent management looked to cost containment. Next slide. Okay, CFO will take us through the audit findings in greater detail.
Thank you, through you, Chair. The audit findings for the year 24-25, the bulk of them come from the adjustments. And I think just to be clear, all those findings we did adjust for, but obviously there are areas of concern. I think one with we being within the assets, both intangible assets and PPE, which we're currently looking at with the internal audit, and I think as an intervention, we, through the leadership of CEO, every fortnight we'll sit and look at the progress made on these findings and try and improve our overall control. I think there's also one on the SCM part that has to do with calculation, mostly a manual error. So what we did do, there's an intervention. It doesn't affect the financial statements. It's just more inadequate controls within SCM. So what we did there was to include a spreadsheet in the interim to ensure that points calculations are automated. But then again, this year we're looking at acquiring an SCM system that will automate all the processes, obviously in line with regulations. The audit on predetermined objectives, that was more a manual error. Basically, when we copied information from the corporate scorecard to the set of financials submitted to AG, there was an error in that. I think it has to do with the transpose. That we subsequently corrected as well. what we're doing this year to remedy that is to ensure that objectives are signed off earlier before they go to AG, and we're doing that via internal audits, going through our internal interims financial statements to ensure that whatever reviews were picked up by AG are corrected going forward. And again, just to state, like AE, that we aspire to get a clean audit to reflect that our house are in order and to minimize any unnecessary audit findings as raised through the 24-25 financial year. Thank you, Chair.
In terms of strategic projects, I think I've spoken at length with regards to the shale gas project. But as of today, we are acquiring geophysical data, 2D seismic in the Karoo. We have we mobilized beginning of November, so we've been at it for about a month now, acquiring data. We've, of course, concluded the EIA process and all of that. And so we started activities after we had concluded all of that. In terms of the Extended Continental Shelf project, 3 of the 5 areas South Africa claimed at the UN Commission on the limits of the continental shelf have been endorsed by the Commission, constituting some 550,000 square kilometers of international seawaters. The Department of Transport now needs to amend Schedule 3 of the Maritime Zones Act to recognize that these areas now belong to South Africa. The other 2 areas which have not yet been agreed require additional scientific investigation backed by geophysical data at a cost estimated at 200 million rands. So that is the next steps in terms of that project. There are also ongoing engagements with the Commission related to the Prince Edward Islands, which are also part of our claim in terms of the Extended Continental Shelf project. I think that must be the last slide. Next slide. Thank you, Chair. Committee.
Thank you, Chair. Chair and honorable members, we'll go through the IGAS reports. This is one of our assets that continues to play a key role in terms of contributing to our financial sustainability as a group. Its performance continues to encourage us that the right decision, when they are made, we're then able to get some of these good results. Just to take the members through the highlights.
Before that, just remind us, why is it you presenting?
Chair, the CE, acting CE, Dr. Makoko, is not around, yeah. He's currently the acting CE of IGAS. Thanks, Chair. Chair, just to touch on the highlights, the increase of profits by 36% compared to the previous year, with no regular expenditure incurred, and of course, with the dividends that has increased by 27% in the current year. And of course, we keep on tracking some of those key low lights. One, dealing with the issue of impairment of long outstanding debts related to the seconded employees of 858,000. The issue around the CMG loan that the CFO spoke about earlier on continues to be on the low side of the business, and of course the fruitless and wasteful expenditure that was incurred to a tune of 81,000. I'll call upon the CFO to present the financial statement. Thanks, Chair.
Thank you, Chair. A few highlights on the financial performance of iGas. The actual net profit that is recorded is 1.2 billion versus the 912 million that was budgeted. This is as a result of the increased volumes that were transported through the Romco pipeline. And the NACM rate gave us returns of 8.44% versus the target of 7.34%. And our gearing ratio is below the target of National Treasury. The target of National Treasury is 40% liability that is allowed and 60% equity. We are sitting at 75% equity and 25% liability. This means that we have leverage to pursue other projects and fund them through the loans that we can raise from the market. On the operating cash flow, we have received the dividends that are more than what we had planned by 25%, which is a good performance. And I've already indicated that it's as a result of the volumes that were pushed through the Romco pipeline. Thank you, Chair.
Thank you, CFO. Chair, just to continue on the performance against predetermined objectives, a number of those were achieved above target. The one that achieved the lowest point, which related to the implementation of the operations and management agreement, achieved the one, and simply because of one of our partners, which is Sasol, not have signed off the board resolution to effect that. So that was one of the key reasons. That work continues to be pursued to ensure that that sign-off is received. The rest of the element that deals with some of the project that the company still looks into pursuing have achieved above 3 issues around the loan agreement by PetroSA board, and also technical assessment that were being conducted with a score of average of 4. And also critically to that, the project schedule with regard to the completion of transfer of assets and business integration achieve a 3, as that work is ongoing. And this is the matter that is not within the, I guess, sphere of control. The next slide. Chair, the last 3 key performance that achieved an average of 3. One related to the conclusion of all corporate capacitation arrangement, which support the formation of SNPC or the transition to SNPC, which achieved a 3. The one that achieved a 2 was related to the enterprise risk management plan, which the team has put a mitigation plan to ensure that they comply on the assessment so that they can get a score above the 2. Issues around stakeholder engagement plan, which needs to be approved and managed with quarterly reporting, the average of 3 was then achieved. I will then hand over to CFO on audit. Thanks, Chair.
Thank you, Chair. As indicated earlier, the audit outcome of iGas regressed to unqualified with 1 material finding. And the material finding is in relation to the material misstatements on the financials, the areas that contributed to this. The first one is the split between the current and non-current liability. So the split was not aligned, on the notes was not aligned with the face of the financials, the balance sheet. And the second issue was that accounting for the Romco, 40%, we accounted for 9 months instead of the full 12 months. I think this is misalignment in terms of the financial years of both iGas and Romco. Romco's financial year ends in June, and then I guess, financial year ends in March. So the material misstatements have since been corrected. Thank you.
Chairperson, just to close out on the next slide, which talks to the, I guess, priority programs and project overview, there's two key projects that are being pursued. The first one become critical because it talks to the new look of an agreement that has been put together from a trading perspective, which PetroSA, SFF and ENH has been engaged on. Chair and the honourable members, this has also been supported by an ESA approved license to be in a position to actually have this trading JV to be able to trade gas in South Africa. So this is a work that we are doing intensively to ensure that we also support work around the gas cliff. The second one, Chair, which is the Denmark Gas Pipeline Project. It's a project that the group is looking at, and that work is continuing to happen in terms of its screening for its position within our investment framework. Thank you, Chair.
Chair, thank you very much. So that concludes AE's presentation, PetroSA and I guess. And then we will be guided by the Honorable Chair. Thank you.
Thank you very much for those three presentations. Honorable members, those are the three presentations. Any take? Honorable Lorima, Honorable Selepe, Zondi, Senne, and Honorable Zungul. Perhaps just two questions before they come. I'm confused, AE, how this thing works. We supported you with pain when you spoke to us about your planned Section 189. You gave us reasons that the workforce you have is unsustainable. You can't pay them. But in your slides now, having lost those workers is registered as a challenge. How does it work? Or a problem. You have a problem now that 68% of the workforce has gone. Why were you initiating Section 189? What was the reason? I don't understand. It becomes a solution now. You have implemented it. It's a problem. If you can try, CEO, and explain that to me and honorable members, maybe we'll understand that. Dr. Saidin, if you were to be met with a person from Karoo who is uneducated and ask you about the shale gas and what is happening, what would you say to a layman? Where is the project? What is happening there? Outline the steps. You are speaking to a person who just wants to see fracking or whatever needs to happen, the happening. In other words, I'm saying, don't speak big English. People are listening out there. They want to hear what is happening in the Karoo about the shale gas. Honorable Ntangweni, I have noted hands. Do you want to be part of? You will be the last. Maybe respond to my questions, and then we will get to Honorable Lorima.
Thank you, Chair. Let me start on that slide 34, where we highlighted Section 184 as negatively impacting people. Is currently the morale is low. We're not saying it's a, and I'm not sure how we said it, but we're just indicating that the people who've stayed behind, they've got low morale, which is a challenge that we need to turn around. So one of the things that we agreed to do is that some of the operators will go to Tlepworky, but the delays in starting to operationalize Tlepworky also is the one that led to one of the challenges that impacted people negatively. I don't know if I've said it the way you wanted me to answer it.
Honorable Chair, what have we learned from the shale gas research project? We have learned that indeed the Karoo does possess shale gas resources. So we now know, based on the research that we've done, that the Karoo does have shale gas resources. It is through exploration or further exploration that we will know or ascertain that it possesses such resources in commercial quantities. But our assessment is that there is a significant amount of prospective shale gas resources exceeding 200 trillion cubic feet. Maybe that part I shouldn't have added to the simplifying, but there's a significant amount of shale gas in the Karoo in terms of our assessment. We also now understand much better the risks associated with shale gas, which include where the water will come from, because shale gas requires a lot of water, the risks of triggering minor earthquakes and so on. We have a better understanding of those risks and how those risks are mitigated and have been mitigated successfully by the industry in a number of areas where shale gas is produced, and even in areas where hydraulic fracturing, for example, is used for unconventional gas production. Thank you, Chair.
Thank you. I guess this is where the chair asks, do you have a follow-up question? And I do. And I do. Look, the situation of AE is not good. Financially, it doesn't look good. It needs drastic steps, and I can appreciate that there has been some of the efforts to change things around. You know, you are not as aggressive as you should be, in my view. There's a question I asked one day to Sasol when they announced that they are leaving their export business with an allocation of 3 million tons per annum. What is the status of your export business, and why didn't you get interested in acquiring that allocation at the Richards Bay Terminal to improve your financial status? As a result, the big companies like Tungela and what's the other one? Siriti. They get a top-up of already what they have. They have a big allocation. Why didn't you contest that space and have negotiations with Sasol? The same way that they are compensated by those two companies, I'm sure you could afford to do that because you are going to do well in that allocation. I don't understand. Maybe even SEF must get into this question, because as a parent, when a child is sick, you become part of providing solutions for the child to go to a doctor, to a nyanga if it's possible, and all of that, to be cured. What is it that you are doing to cure AE? Because we can't continue like this with AE. It's a very important state company to be left like this and not be improved.
Yeah, Chair, let me start with the allocation, and I hope the DG will take it from here. So when legislatively, when the allocation is reversed back, unfortunately it doesn't go to the state-owned mining company. It goes back either to Transnet or to the department. And then when it's in the department decides on the allocation. So I cannot negotiate. AE does not apply for allocation. It gets given allocation. And I agree with you, if I was operating in a private manner, I would have aggressively suggested long time ago that the optimum one be under our management, which is 6 million tons a year. I tried doing that and I learned that where the boundaries were, actually.
Chair, I think if I may just support on what we are doing as a parent from a SFF point of view, the one big contribution that we have made is to ensure that they get the financial support that was requested. That's the first part. But we also said that we want to be much closer to looking at their turnaround and what they are doing. And the option that we are raising now of RBCT is one of the options that we have also looked at to say we know historically that it has been an opportunity that they have been able to leverage, to improve. And hence we believe that it does provide that opportunity to really get the recovery back within a shorter space of time, as I was responding to the questions. But we have this dialogue that we have put together now with the team. We've met once. We are due to meet shortly again, just to have a look at how then can we have more oversight on their turnaround plan, but also look at additional required support that we must give to them, and that we can only get when we are much closer, in terms of oversight and seeing what it is that they are doing. Of course, working together with the PASA board, with the AE board. Thank you, Chair.
No, thanks, Chair. I thought you were going to clarify your question back, because the allocation you're referring to, the response from Mr. Pito is responding to Quattro. The allocation you're referring to, I think it's Sasol's allocation at Richards Bay. It's not the Quattro. So we are not involved in that. The department with RBCT was given an allocation which is outside of what the members have allocated. I think that's the part I needed to clarify. That Sasol allocation was a Sasol allocation that was available, I guess, for Sasol to decide how they want to go about it. By the way, Chair, it's not only Sasol. There are other entities. For example, I think Eskom has got an allocation there that they're using it. They've given it to somebody else. So it's members who've got private allocation, and they decide how to commercialize it, because it's a commercial, obviously, arrangement that they have there. So this one for Sasol as well, it was obviously a commercial arrangement that they have, and they followed their own process. So it didn't come back to the state. Has got no say in that regard. The state probably has a say insofar as the rail allocation by Transnet, etc. But there's obviously commercial arrangements behind those. Yeah. Thank you.
Okay. Thank you for that. Anyway, we have scheduled a meeting to discuss Quattro in the early next year. So we'll get some of the information there. Honorable Lorima?
Thanks, Chair. I'm a little confused. So just please correct me where I'm wrong. Tell me what's going on. So you're still negotiating with Eskom a price. Is that one contract for both mines? Or are they separate contracts for the two different mines? And is there a possibility that if you don't get it right on one mine, you might get it right on the other? So that's the first question. And is it just so? I mean, is it just now a price discussion? And as I understand it, you need that contract in place before you can spend on coal washing plant. Is that correct? So the question becomes, well, if it doesn't work with Eskom, what's plan B? Do you have another client in mind? And is it the case that you've just not been mining this financial year? That there's been no production pending this contract? And could you not have been searching for other clients in the meantime? And then finally, I guess it's the IT question, is it possible to say whether SEF IT has sorted out your IT problems, or does that require you to be operating at full capacity before you know? Thank you.
Thank you. Can we get the responses?
Thank you, Chair. So the Eskom CSA is one for Vlakfontein, one for Tlaporki. What we're trying to do is to send the requirements, which we've done for both. Tlaporki's got a plant next to it, so that part is sorted. Unfortunately, at Eskom, the procurement side does not function with the financial side. So the transport cost is out of the procurement side. So if you talk coal price, that's procurement. If you talk transport, it's another department. AE has never seen an increase in transport, and which is what we're saying to Eskom. So the compromise, and I'm going to give fictitious numbers because I can't talk the real numbers, but if it's Eskom is at 100 for coal, we had 32. 32 because from Kusile to our mine is 32 kilos. Anything else, Eskom doesn't want to negotiate. So if we have to supply Majuba, which is 50 kilos away, we've got 100 kilos that we must cover. Out of the 100, we get paid 32. Now, when you discuss with Eskom procurement, the price is something that they can fix, but the finance department cannot fix the transport side. So you've got two SOEs telling you about PFMA and not getting anywhere because everybody else got its own, like the minister said, their internal processes. I respect that, but I don't think the private sector, the guys who go to Majuba get paid for Majuba. So unless we get a multi-mine contract which allow us to go to other mines, then the transport cost varies. But you cannot be at Tlaporki and go to Val, which is 160, and not pay for your cost. So to answer to your question, what is plan B? Then there's no plan B. Unfortunately, you can do the coal deal, but somebody must come and pick it up at the gate. Plan C, you can put it in rate, but I don't have allocation that can cater 134,000 per month. I only have 12,000 that I can send to Richards Bay. So the plan is plan A, and to try to make plan A work. If plan A doesn't work, it's somewhere between making plan A work and making plan A work. I don't see, and SPA will tell you there was a rectification contract that we did, and Eskom was supposed to rectify the transport costs, and they didn't, and we operated at 9 rand per ton loss, which is something that if they stuck to their word, we wouldn't be where we are because we wouldn't have done it. But we knew if they don't change, then we're going to lose 9 rand per ton, and our board was not very impressed with the deal that we did, but Eskom did not come to the party. So this leads to the question of the plant. If we don't get the price we want, Fraser Alexander, DRA, Consulmet, they're not going to build the plant. And we need that commitment to say the price that we're going to get from Eskom will make us be able to pay the guy who builds the plant, because the model that we want to do is build, own, it's a bomb model, build, own, and maintain. So they must come with their money, wash the coal, and Eskom must pay us the money. So it's not a chicken and egg, it's just an egg situation. If we don't get the contract signed, there's so many things that are affected. Spark, can you talk to the pricing model?
Thank you, Chair. And also Honourable Member. Maybe just to, the Honourable Member also asked, there's two assets. We've got Flagfontein, we've got Clay Pocky. The Flagfontein asset is primarily an ESCOM spec mine. That's where the issue is, where we are stuck on the issue of pricing. What happened in fact, obviously, we started operating from 2011, and effectively the good coal kind of been mined first. And as you wind down, then to get that coal to the ESCOM spec, you need either some beneficiation to wash it. That's basically where we are starting. But to beneficiate or to wash, it comes at a cost. And hence, that's why the price becomes an issue, because now even your cost of mining goes up as you try and access that reserve that is almost not meeting the specification, and you need to wash it up to a level of. So that's where we are now. So what is happening though, although ESCOM is trying as much as can to help us in terms of reaching an agreement, so what is on the table is that ESCOM says, we understand that an investment in plant is a big one. So we want to give you a period of about 2 years, so we have what we call an interim CSA. 2 years so that we can figure out whether there is coal or what on all of that, and whether that can be mined at the cost that is reasonable. So we've got that 2-year window which we need to have a plant. And then, as the CEO was saying, where we are stuck is maybe on the transport cost. But what ESCOM has also done to assist us is also just to give us some information as well to say how can we help AE in terms of managing your own cost, whether you're paying the right price. So that's where we are. So hopefully we do get an interim arrangement. But beyond that, on that long-term arrangement, we need, as the CEO was saying, that we need to complete a study on the bunkers, where we used to store crude oil. If we look at that asset, we have at least 100 million tons, plus minus, sitting there, which obviously we need to determine what is the safest way to mine it, so that obviously there's no environmental issues and all of that. So that's a study that we are busy with now. In the next 2 months or so, we should have some kind of an outcome. Then that will confirm a business case for a plant in the long term, beyond the 2 years. So that's where but I think where I'm sitting, I think that we probably will find each other with ESCOM on the pricing and going forward. On the Clay Pocky, it's in 2 phases, honourable members in the committee. The first phase, we are mining the 5 seam, which is actually not an, as ESCOM said, they're not really interested in the, it's primarily for the export market. So that's the first about 18 months. So that's we're primarily going to export that, about 1 million tons that we are looking at in phase 1. Then we've got a bigger project, almost the similar size of reserve as we have in the bunkers in Flagfontein, that requires development. That is primarily 4 and 2 seam, which will be an ESCOM product. Once fully developed, ESCOM has already indicated that we will obviously have to conclude a CSA, look at our cost model and all of that. So we do foresee a CSA in phase 2 with ESCOM, but phase 1 is purely an export product. Is RB1, I think that's what we are looking at for phase 1 of Clay Pocky. So that's where we are. And if everything goes well, committee members, you will have this bit of export, and phase 2 of Clay Pocky being ESCOM, and if the bunker study is positive, then we do have a sizable operation in Flagfontein with a wash plant. So that's what we are running. And there was a question on IT. I think, to be honest with, what we did after the audit, I also asked the internal audit to look at it, because it was a repeat issue. So what is actually going on? And the report that came is just recent now, that there was issues of capacity within. It's a long report about issues there. So what gives me comfort now is the fact that when SUNASEF took it over, we could see the benefits almost immediately in terms of even the cost of how do we procure licenses. And in the last audit committee, we also deliberated on the quantum, how much investment do we need? And we agreed on the figure and the breadth, what needs to, especially on the infrastructure side, which then SEF, obviously, through the intervention, is also assisting to fund that. So where I'm sitting, I'm foreseeing that there will definitely be improvement on the core systems, but on SAGE, SAP is the main one. SAGE is like a payroll, it's not a heavy system. There's something on the ton track, which is the way bridge. I think we'll only see the improvement on the way bridge when the mine starts operating. Then you can conclusively say that we've seen the improvement. And then also on the fuel management system also requires some operation so that we can see that the current fuel management system is actually fit for purpose. So I think that the self-intervention has been of great value, and the audit committee of AE, even the AG, has actually noted that as well. Thank you.
Thank you. Honorable Lorima, do you have a follow-up question?
Yeah, quick follow-up. Just to help me clarify in my mind when that the Klippoortjie export coal, when does that start operating? And are you confident that you can actually, will you be able to export it? Will you have transport, buyers, etc.?
Yes, Klippoortjie we started mobilizing in June this year. So technically speaking, you've got around 56 equipment already there. And we've cleared, we're just almost on the call. The plant is next door. So we should be, once we finalize with the farmers, because there was no space to put this 56 machine and it was an issue. We've made a royalty payment on mining. We never made the surface. We thought that will include everything. But then they came back and said, no, mining is mining and the land use is the land use, which was an oversight or greed, whichever way it is. Yeah. But we should be able to continue as soon as that is done.
And
another,
just can I ask a quick question to PetroSA?
Yes.
In fact, two questions. The offshore continental shelf areas. Good to hear that we've got the three. Could you give us just an idea of what those three are and what where the two outstanding ones are? And then just on shale gas in the Karoo, can you give us an idea of what the process is now? How far are we away from commercial exploration of that resource, and what needs to happen for that to happen?
Do you have a question for IGAS? Okay. Honorable members, when you ask all three, and then when you make follow-ups, you will make follow-ups on all three. PetroSA?
Oh, okay. On the extended continental shelf project, which areas have been agreed? It's the Orange Cone, the Agulas Ridge, as well as the Northern Mozambique Ridge. Those are the three areas that's already been agreed. Or the question on shale gas, how far are we in terms of exploration, I guess? Okay, exploration can only happen once the moratorium on hydraulic fracturing has been lifted. So the DFFE gazetted what we think should be the final round of, or gazetted the regulations for a final round of public participation, I think around 6-7 November, with a 30-day commenting period. The expectation is that thereafter they will gazette the regulations as a final gazette. Once that has been done, the Minister of Mineral and Petroleum Resources can lift the moratorium backed by regulations that are now in place. And once the moratorium is lifted, we can process applications for exploration rights. And then exploration will then take place in line with the exploration rights that would have been awarded. Time frames can be, let's assume to be optimistic, by March of next year, the moratorium is lifted. Applications for exploration rights are put in. The actual exploration, in a 3-year time frame, for example, you can already have made discoveries, commercial discoveries, in a manner that you can begin to apply for production rights to move into development and production. A case in point, although it's deep offshore, but it's even much more complicated in environment, Namibia, over the last 3 years, drilled 23 wells. Close to 20 have been successful exploration appraisal wells. They are at a point where they are now looking at development options. And the offshore environment is much more complex in terms of development than onshore, including shale gas. Hydraulic fracturing is not a complicated process as compared to offshore drilling and development offshore.
Thank you. Honorable Zondi, with your permission, can I allow Honorable Zungula to come before you? Or it was Honorable Slepe before he steps out. Honorable Zungula.
Thank you, Chair. I'll start with AE. The issue about ESCOM and the coal, I think you have explained, because I had a question about it, because I wanted to understand much deeper what are the plans to ensure that you'll be able to supply coal to ESCOM, and perhaps do you have plans to expand your client base over and above ESCOM? And then the AGSA made material findings against AE, which include that there were no contracts for some suppliers, the reporting to National Treasury and AGSA was not adequate, and there was lack of consequence management for irregular and wasteful expenditure. Now, I wanted to find out, given what AG had stated in terms of those material findings, do you perhaps not think that the environment of AE allows for potential misconduct and corruption? Because the manner in which they're highlighting those findings, in my view, it creates a breeding ground for corruption, breeding ground for all manners of misconduct. I've got only one question for PetroSA. The issues when it comes to engagements with communities to deal with the environmental groups that we know that they block some development or progress in that space. How much was allocated and what were the activities that were done? And in your view, would you say those activities were successful? Thank you.
Thank you. AE.
Thank you, Chair. Let me start with the client question. So, unfortunately, in coal, you've got 3 products: one for ESCOM, one for export, and one for iron ore making, which is anthracite, which is in KwaZulu-Natal, and we don't have that. So the 2 coals that we have, the 2 types of coal, is one for ESCOM, one for export. Again, which is unfortunate because the 2 clients are the 2 SOE, one being Transnet, one being ESCOM. So when we talk about client diversification, I'll just like to talk about any other materials which is not coal. We do have, I've just mentioned rare earth, manganese, and oil in Northern Cape. So the strategy and the going forward of AE is not to be a coal mining company. It is to be a mining company which has access to rare earth, manganese, iron ore, lithium in Northern Cape, and then the coal products as well. So I'm not talking badly about coal. We made money with coal when it was time, and we will make money when we've got access to coal. But if we talk client base, for coal, it will be Transnet and ESCOM, And then for rare earth and for manganese, it will just differ from there to there. And maybe Spa will add on the the AG thing. But since we took over, I'm the longest at AE, which is from 2022. There's never been a financial loss due to corruption and any malfeasance or so on. So the historic part, which unfortunately we cannot erase, is coming to live with us, and then Spa can go ahead and explain that.
Thank you very much, Honourable Member. Just on the material findings by the AG, I think, as the member quite correctly, as per the presentation, the issue of reporting to Treasury, that was since fixed because that was just an interpretation of a circular. So even at the time of the audit, we managed to get over that issue just of reporting. So AG said there was, in some entities, also the kind of a similar interpretation. The contract's not in place. What happened is that at that time when we had a stoppage, we had all the contracts ready to approve, kind of in a draft format, ready to sign. So, but when the only customer stops, basically the taking of their coal, to go ahead and sign a contract, for instance, with the yellow equipment, as an example, becomes an issue because you cannot execute according to that contract. So we have to put a stop in resolving the issue of signing the contracts when ESCOM has not sort of resolved the issues around the long-term contract. So that's why we had to stop, and AG acknowledged that it's a bit of, because we have to put the contract under suspension, it's a kind of in a way. So as soon as we resume operations and we have some normality, then we'll obviously make sure that every contract is signed. And then the issue of consequence management, it's something that we also, the board also deliberated about, that we need to strengthen or do more about it. Not necessarily because there is corruption. I think what the National Treasury instruction note on fruitless and wasteful expenditure requires that you do some kind of an assessment and investigate what actually happened and determine whether there was a loss in this whole situation. If somebody was responsible for the loss, then there must be consequences of that. So what we've done so far, in terms of, we've done most of the steps, then if there is no loss and all of that, then obviously have to go to the National Treasury and ask for some kind of a condonation. So where we are, although we've taken steps to deal with the issue, but the consequence management is an element that I think we have not fully implemented. And the intention, obviously, from the board and management is that those responsible, it doesn't mean that you have to dismiss people, but obviously, depending on whether there's a loss or not, you must hold those that were part of those transactions to account. So that is something that we are busy with, and we acknowledge that we can do better on that front. Thank you very much.
PetroSA?
For the year under review, the budget related to stakeholder engagements was 13.8 million, if that is the question.
Okay. Do you have a follow-up question, Honorable Zungula?
Yes, the question was the budget, the activities, and whether those activities, from your view, were successful. And then to AE, I'm not sure if I'm hearing you correctly. Are you saying that you only take action if there is a loss in terms of the wrongdoings?
PetroSA, come first.
Okay. Maybe if I focus on the activities related to the geophysical data acquisition, meaning those activities that were halted on the back of an insistence for an EIA to be done, which EIA is backed by public participation. There were 17 public consultation meetings that were held across the Eastern Cape and the Western Cape, and the So we concluded an EIA report in a manner that those activities are now going ahead. As I've said, we mobilized and we've started we resumed the activities. So which means therefore that consultation process have yielded results because we have been able to go ahead and acquire the data. That process is currently underway.
AE?
The successful part, you have not touched on it.
No, the success is the fact that we are able to now acquire the data, meaning conduct the activities. Because remember, the resting on public consultation was the fact that whether these activities will be enabled, will be allowed to go ahead, or will be challenged in a manner that we could find ourselves in the courts. Those activities are going ahead, but it's a program of geophysical data acquisition. That alone, that's going ahead is a success. But when will that program end? It's in a year's time. So the geophysical data acquisition will take a year in terms of acquisition. Then there's processing of that data and analysis of the data coming out of there.
AE?
Thank you very much. Maybe just to, apologies for not being clear. You take the action on both, just the severity of it differs. If there is no loss, regardless, so that someone has deviated from a procedure or something like that, whether there's a loss or not. So the action in that regard will depend on the magnitude of it, and also the punishment will differ, because we'll have to decide whether this person requires retraining on the policy or must we give them a written warning on it. Where there's a loss is much more serious, because the framework says that you must make steps to try and recover the loss from those that are responsible. So the action there will be much more different than if there was no loss. So, but you take action on both sides.
See you.
Sorry, Chair, there was a, I think we missed the question of when will Klepore have coal on the ground. That will be first quarter next year. It was a question from, yeah.
Okay, thank you. Honorable Slepe.
Thank you very much, Chair. Yeah. My first question is with regarding the findings from the AG that there was a conflict of interest identified.
Who are you asking the question?
The AE.
Okay.
Yes. And then, if it's possible, who is the owner that was identified by the AG, and were you aware of that particular individual or that company? Then, was any disciplinary action taken with regarding to that, or financial penalties, or repayment if possible? The criminal prosecution for that company was conducted. Number two, as you were mentioning, the CPR for your coal, I'm just checking. Did you do your washability studies so that your approach to ESCOM will give them confidence that the product that you were supplying after you did your washability study, it's no longer going to be the one that was rejected, but the indication on your washability, it will show that perhaps the product might be acceptable. I'm checking that. Did you do that washability and submit it to ESCOM? Also, I want to check on your phase one, as you've mentioned, my other colleague, Honorable Lorimo, of your SIM 5, that is not the ESCOM specification of coal. Then your client on this particular call, have you already met or did an agreement so that, as mentioned, that the first quarter, the call will be on the floor? That means the agreement should be in place already, that if the call is on the floor, already you've got a potential client for that call. I think that one we need perhaps to be put up to speed. Also, Chairperson made mention of a potential client in that regard. Did you consider perhaps your call, whether is it not the Sasol spec that they might be interested in your call, so that you can try by all possible means to revive AE from the situation that it's under? Then the annual report indicates that spontaneous combustion of coal of stockpile caused losses of 2.6 million. What operational controls have been put in place to prevent future incident on stockpiles? Because there is a lot of ways that you can do the prevention, because with the combustion, it's not something that you see when the coal is on the stockpile, but while still is in the pit. Then what are the future controls has been put in place that to eliminate such incident? AE lost its court case related to the rental of mining equipment for the Vlakfontein operation, and entities ordered to pay 13.7 million. How will you pay other operation obligation? Then I think this is a last one, Chair. I think it can be practically, it's been covered by Honorable Lorimo. The operation of Kleporki and the agreement with Eskom. I wanted to check whether is going to have their own direct contract from Eskom or is going to be under yourselves. For ICAS, the committee has been informed that gas crisis, where exactly is the gas trading joint venture going to get gas? What is the 140 million budgeted for? PetroSA, can you provide detail regarding the irregular expenditure you recorded? Thank you, Chair.
Okay, AE.
Thank you, Chair. Let me start with the case which we lost, but the latest is we went to Bloemfontein and we won the appeal. So that case is not, we did not lose it, because after, I think it's called Supreme Court or something in Bloemfontein of appeal, then we won the case. So it's back where it's supposed to be. The 2.6, okay, the Sasol coal thing is, we can supply Sasol anytime we want, but our mandate is Eskom. So we first have to make sure that we give Eskom the coal, and Eskom wants every coal that comes from us. So we don't have access coal to give unless it's like in case of Klepborg, which we have a RB1 spec. But basically there's that. And we, at Klepborg, the operation started by doing things correctly. We've got a mining contractor, a wash plant contractor, and a marketing contractor. So whatever happens is that there's going to be a logical follow-up whereby the coal is not going to be on the ground as long as it's being produced. The spontaneous combustion, it was not the coal that was on the pit. It was actually a stockpile, and the loss was accumulated because of the delay in appointment of the people who were supposed to buy. So we went out because it was 16 CV. It's not 18 CV that you can take anywhere else. We were looking for people who can take 16 CV because it's actually very bad for anybody who doesn't have high quality coal. You don't find people who've got that high grade coal. And the people that were wanting it, we were actually told we must follow the process. While we are following the PFMA process, in that 3 months, the stockpile was 220. By the time we finished, the stockpile was left with 160,000 tons. So the losses are created by, and I know because it's me that says PFMA, but it is. It is the delay of implementation. If we had it, I would have sold it on the day, then we wouldn't have banned as much coal as we did. But we then managed to get people who bought it from us, and then we made a little bit cash on it. And the other one was washabilities. I'm just going to go back to where I said, in 2025, we're going back to updating the validity of our geology. So all the things that need to be done properly, we have appointed the company called CEM, which is doing the whole tutti from A to Z of competent person, including washabilities, crushability. So the 2 months that we're talking about, mid-January, we should be having a document that will be all-inclusive. And that is the one that we are saying is going to determine the business case. And exactly to Tate's Lepes point, whether the coal is ESCOM saleable or it's not ESCOM saleable. But that's what the study is all about. I think that the conflict of interest, I'll leave it to Spur. Thank you.
Through you, Chair, can I just respond to the conflict of interest issue? What the AG does when they do an audit, they've got something called CAS, Computer Assisted Audit Technique, where they've got a database of everyone who is in employment of state. And then they check that against the contracts that you have. That's a tool that we don't have as entities, and only AG has got that. So when they do that, they pick up that someone works somewhere in a municipality or provincial government or national, and they say there's an issue here. So what control can you have as an entity in absence of a system? There's a form that you must sign as you submit a bid to declare whether or not. So in this case, there was no disclosure in the 2 cases that we have. So internally, we cannot say anyone was responsible within AE. But there must be consequence for a party or that state employee who's doing business with government. So after the audit, we then put this through a loss control committee and also report the matter to Treasury to say that we have this situation. And ideally, the person who benefited, somehow we should recover the benefit or the profit that they made out of a contract. But that takes its own process. But internally, in absence of a system, it's difficult to determine whether or not, beyond the disclosure that the person that makes on the form, that whether they are a state employee or not. But what the AG said, that working with Treasury, they will see whether they can maybe give some elements of this system to some of these entities to see whether we can also be able to pull who is a state employee. Thank you.
I guess.
Thank you, Chair. Chair, the 2 questions the honourable member raised, where the gas from, and also the budgeted amount, what is it for? So the JV is between PetroSA, ENH with SEF enabling that. So the gas is coming from Mozambique. There are engagement in terms of the blocks that are sitting in Mozambique, and how those blocks can be monetized. On the budgeted amount, it's to operationalize the office of the JV. Thanks, Chair.
Thank you. Pastor?
Thank you, Chair. The details of the irregular expenditure will only happen in this financial year. So during the audit, one of the samples from SCM, documents that were sent to evaluators were incomplete, which meant that the service provider was eliminated. And had that service providers been evaluators been given the full complement of documents, they would have won. So it would become irregular in 25-26, but the successful service provider is competent to do the job. So what we'll do in this financial year is to take that to the Loss Control Committee for condonation, obviously go through all the consequence management framework and take necessary steps. Thank you.
Thank you. Honorable Slepper, do you have a follow-up question? Go ahead.
Thank you, Chair. Quick one. On
who are you asking?
AE.
Okay.
Yes. On this conflict of interest case, do you have any records how much the company benefited? And then what is the current status of that particular issue? Is it the company still doing business with you or not? And then now is the owners of that company aware of these findings? That's it. Then on the issue of court case, CEO, you made mention that you did appeal for this case. Are you appealing because you don't want to pay the company that is being owed, or you are appealing that you are not owing that company? I just want to understand that, because it's a different story if you are appealing for any other reason. But if you are appealing for not paying the company owed, that is another precedency. I just want to get the clarity on that matter.
AE?
Thank you, Chair. Let me deal with both responses. Starting with the conflict, the value of the both, actually there were two transactions. I think it's combined, it's probably 3.8 million in total between the two transactions. We're no longer doing business with those companies, so that's just to give you comfort. The owners are aware. During the audit, we told them, we asked them, why did you not disclose? So they are aware only, obviously, soon as we got aware of it. Said, but you actually didn't disclose that you are a state employee, and there will be consequences. So between now, obviously, we're no longer doing business with them. We have forwarded the details to Treasury as well to say that these are the people, probably, I think, they will have to be blocked from actually doing business with government. So that's where we are. So we're no longer doing business with them. I've given a value. It's the process now of seeing how do we consequence management. On the issue of the court judgment, we petitioned the Supreme Court of Appeal for to hear the case, obviously, because in the lower court there was a judgment. At the heart of it, we don't believe we owe anything. That's the direct answer. Because in that situation, what the company is claiming, without going to the merits of what they are doing, they were awarded, supposed to have been awarded a contract, but they never did any work. So they are claiming damages for something that did not even start. That's basically, because if we end up somehow paying the company, but what were you paying for? Because we end up with kind of fruitless and wasteful expenditure. So that's where the dispute, they say that we should have got a contract of a value of so much. Please pay us. Even if you read the judgment, it's actually the value that was in the contract to say that we got a contract of so much. So we don't believe we owe them anything. And that is the strength of our argument in court. Thank you.
Okay.
Yeah, and before that, I think the court in Pretoria said that the contract was verbal, just so that I can put everybody in. So nobody in PFMA terms deals with a verbal contract, and that's where we are. But obviously, the lawyers of the opposition party, of the other party, thinks it can be legitimized one way or the other.
Okay, Honorable Zondi.
Thank you, Chairperson. I think colleagues have asked the questions that I had for for AE, so I'm going to move to to PASA. How many EMPIs are they that deal with the petroleum side, not the mining side? Now, I am aware that Section 31B of NEMA gives the Minister of Minerals the prerogative to have EMPIs. So it might not be a question that PASA is able to answer, but I believe because the DG is here, maybe we could have the answer from the department. But for PASA, just from the side of you monitoring compliance with environmental licenses that are issued with regards to petroleum exploration as well as production, how do you then enforce that particular mandate if there are no EMPIs that are present for the petroleum side? So that's my first question. The second question is with regards to rights holders, and this is for PASA again. With regards to the rights holders, is the public allowed the access to those rights to actually be able to see who holds what right, so that they can fulfill their duties of active citizenship? So that is my second question. If they're not allowed, how do you envisage that they'll be able to perform those duties that are bequeathed to them by the Constitution? Then my last question, Chair, is does PASA require a climate change impact assessment for rights holders with regards to onshore exploration and production? Those are my only questions, Chair. Thank you.
Thank you, Honorable Zond. CEO, you looked confused on the first question. Do you want to get clarity, or you ended up being clarified?
So I can be clarified, Chair. Is it EMPIs or EMPRs? So EMPRs being environmental management programs. So meaning is the question how many environmental management programs are there associated with existing exploration rights? Or EMPIs is the I that was confusing me a bit.
It's the inspectors.
On record, Honorable Zondi.
Thank you, Chair. It's the inspectors. I believe they changed when the department changed from, I believe they're now called EMPIs. Before, I believe they were called EMPRs, if I'm not mistaken. So it's the environmental inspectors. I don't remember the full. It's the environmental mining and petroleum inspectors, if I'm remembering it correctly. So EMPIs.
Okay. Yes, thanks for that clarification. Yeah, it's really, I guess it's a environmental management inspectors. We do not have certified, can I call it that? As the petroleum agency, we do the monitoring of the environmental management programs, meaning compliance to environmental management programs. We do it ourselves. We go out to sites, for example, do inspections ourselves, but not designated as such as EMPIs. But there is a process currently underway to satisfy us in that regard. Yes. So thanks. Okay, and then is the public, does the public have access to data related to petroleum right holders? Yes, that is in the public domain, in the sense that the public, it's out there who holds rights over which areas. That's readily accessible to the public. Do we require a climate change impact assessment? The recent EIAs have or include climate change impact assessments. So, and we've developed guidelines in terms of what a climate change impact assessment should entail. These guidelines are not yet part of regulations. For now, they are guidelines, but the most recent EIAs contain climate change impact assessments. Also, I guess, guided by the emerging case law. Thank you, Chair.
Thank you. Honorable Zondi, do you have a follow-up question?
Thank you, Chairperson. The follow-up that I have is again with regards to EMPIs. And the reason I have this follow-up, and maybe the DG can come in to assist here. This comes from a report from an NGO called CER, which has asked this question from PetroSA. And the response was because at that time, this was early 2024, across the country, there were only 94 EMPIs, and all of them were focusing on the mining side, and there were none for the petroleum side. So what I'm trying to ascertain is if that situation has changed, and if we do have those that are dealing with the petroleum side. And the reason I ask this again, with the enforcement of your mandate, I doubt that you'll have the footprint to be able to cover the entire country. So there has to be that cross-pollination of information from the department's own EMPIs to PetroSA to ensure that the rights holders are actually fulfilling the conditions of those particular rights. So that's where my question is coming from. The second one is, again, now the information I'm getting contradicts the response to this NGO from PetroSA, because with regards to the rights holders, in a letter, I can share this letter with you, the response from PetroSA was that the public does not necessarily have the right to have sight of these right holders unless the DG gives exception where there is request for information. This is a letter from PetroSA. I do have it with me. I can share it with you. So maybe just to clarify us there, because we are getting two contradicting positions with regards to that. So those are my only follow-ups, Chair.
Who has the response for the first one? DG?
Chair, the honourable member is correct. I'm aware that I think at the time the question was asked, there was a gap. Those were certified were more on the mineral side, but because the department works with PetroSA, the colleagues will double up when necessary. I know that the colleagues underwent training recently, and I think they've from the PetroSA side, and they have passed their tests and certification and all those things. So the gap that you're referring to is being closed. Thank you.
The second aspect.
I guess, okay. Does the public have access to who holds rights in which areas? Yes. We have, even on our website, who are the right holders in terms of across the country, in terms of all rights. That letter, if it said no, it might have been referring to details in relation to those petroleum rights, meaning what's contained in the petroleum right itself, not necessarily who holds it. So my answer is as to who hold what rights where, that's public domain information.
Thank you. Honorable Sene.
Thank you, Chairperson. For AE, what is the status of coal supply agreement? When will operations at Vlakfontein commence? And what revenue strategies are being pursued? Then for iGas, on the issue of shale gas to iGas, what are some of the collaborative measures that iGas has instituted with PetroSA to ensure that approvals for the licenses and environmental compliance are expedited? What shareholders have been lobbied to ensure that the extractive aspects of this shale gas are realized? Thank you, Chair.
Thank you. AE.
Through you, Chair, thank you very much for the question. On the status of the coal supply agreement, it's at a negotiation stage. Not the technical, but the pricing of, as the CEO was saying, whether how much Eskom is willing to pay for per gigajoule and how much Eskom willing to pay on the transport. And as soon as those matters are resolved, hopefully in the next, not now in December, it's not going to happen in December, early in the new calendar year, we hope to start some deliveries. Other revenue streams, I think the CEO, I think the question was about what other revenue streams we're pursuing. We opening up, obviously, Klepoki. That's another mining right that we have, which is targeted at exports. We do have also a quarter allocation of about 150,000 tons that we also delivering in line with that. So that's another CEO you want to add on it?
So through you, Chair, one of the things that we're talking to Eskom is if we agree on the two-year interim CSA, how can we then not punish AE on the transport side? So I think the importance of that will give us access to multi-power station, which will mean then we can get what we can source coal or outsource it. They call it ratification from anywhere with relative distance to that power station. That will be a game changer for now. That's what we're trying to achieve. If we don't agree with prices, then give us access to other power stations.
Okay, Honorable Senator, do you have a follow-up question?
I don't have a follow-up question, Chair, but I forgot one. It's a follow-up from the oversight visit that we had. In that visit, I'm the one who asked you, at that time you had so many service providers that were owing, and some of them wrote to the portfolio committee. We received complaints through our emails. So I just wanted to follow up, Chair, in terms of how did you manage to either settle or the court cases that were there as well? CEO, did you manage to handle those court cases? Are they finalized? And also the service providers, are they paid? Thanks, Chair.
Unfortunately, the CFO is here.
Thank you very much, Chair. At the time, if I remember, I think without mentioning the names, I think the ones that wrote to you, we dealt with those. I think one was the yellow equipment supplier, but it doesn't mean that we don't have issues with supplier payments in general, because when we stopped mining, I think a month after the Eskom stoppage, we were owing plus minus 60 million rand to suppliers. That is something that we are still dealing with now, but it's not in a court process. The one that is in the court is what we spoke about, the entity that is the public. I think it's LME, that's the company that took us to court, and that matter is at SCA at the moment. Yeah, but the backlog, the ones that were at the time of the site visit, that backlog was cleared we've got a new issue now. Thank you.
Chamas also mentioned ESCOM upgraded their SEP system, and when they did that in July, some of our, so some of the suppliers who were on the system, we couldn't pay because ESCOM couldn't pay us. And all those things. It is not because of we didn't have the money. At some point, ESCOM couldn't pay through the SEP. I think it took them 6 weeks, but once that was sorted out, then we paid everybody else.
Thank you. Honorable Hassan, were you noted? Okay. Honorable Ntangwini.
Thank you very much, Chair. AE, earlier on I asked a question, I think, to the chairperson of SEF in terms of alignment and consultation, broader consultation in terms of your role in aligning PetroSA and you in terms of strategic planning. Were you invited to such a meeting? And then when was that meeting in terms of broader alignment of a working plan? PetroSA, on your performance objectives on stakeholder engagement and advocacy, there's one that is in yellow, 2.5 average score, and then the weight, you say it's 2.5, and yet it's in yellow, and yellow is indicating, according to your scoring card, partially achieved. So what is the weighing card if the weight is 2.5 and yet you have scored yourself 2.5? Shouldn't it be that you on green? Why is it partially achieved? And I'm pointing exactly out to an earlier question that I've asked earlier on stakeholder consultation, because here the target is saying develop and submission of guidelines for climate change mitigation and upstream of oil and gas sector. And you say you have partially achieved it. So if we can get some indication as to why is it like that, and in terms of broader consultation with stakeholders. And then on SFF, there's no indication.
No, we have not dealt with SFF.
Oh, we have not dealt, sorry, Chair,
Yeah.
I've been. Sorry,
We had a presentation from AE, PetroSA, and IGES.
Okay, no, that is then in all fairness, that is the only two questions. Thank you.
Okay, answers?
Thank you, Chair. The question that was asked earlier was whether we've been to strategic alignment session. I would say, maybe the naming for me, we started a meeting 2-3 weeks back, like SEF chairs. There's a discussion between the two chairs. So where we said we'll discuss by every 2 weeks, bi-weekly. So that's where we're going to discuss our turnaround, or we call it a plan, the way forward plan for us, not necessarily turnaround, which is a plan that should be solid based on once we have those studies that we've talked about, technically speaking. So we have not gone deep on this is A, this is B, but that meeting, the initiation of that meeting started.
If I may, Honorable Chair, also just assist. The other part around the alignment at strategic level, we actually have done that for the whole group. So when we held, I think earlier I did say that we had a strategic breakaway for SEF, but the first day was actually dedicated to everyone. So all the subsidiaries came And we really did a lot of alignment on that day. And then following that, the different subsidiaries had their own sessions, and those sessions also I've had the opportunity to address them at those sessions. There might be one maybe that I haven't been able to reach. I think AE has not had theirs as far as I'm aware. And then of course that is also followed with some planning instructions that we do give to all the subsidiaries. So we do have those engagements besides the quarterly ones that we also do, all of us as a group. Thank you.
Okay. Pastor?
Thank you, Chair. A yellow is it's not achieved actually because it's partial achievement, but it's a 3 rating is achieved. The reason why this is not achieved, we had committed to develop guidelines for climate change mitigation, or at least impact assessment, which we did, but we were then supposed to have presented these to the DFFE and get a response from the DFFE. We did not secure a meeting with the DFFE before the end of the financial year. So meaning, whilst we submitted the guidelines to DFFE for engagement, we didn't have that engagement by the time the year ended. That is why it's a partial achievement. Thank you, Chair.
Thank you. Honorable Ntlangwini, do you have a follow-up question?
Thank you, Chair. I think just on maybe perhaps on AE, Chairperson, I think let's have the consultative and strategic planning with AE the soonest, because I think you have even indicated it was not done in terms of their alignment. Because when the CEO was responding, you in fact told him, tell he is bi-weekly. So which means there's no interaction between the two of you, or instead in terms of SEF and the AE. So it will be crucial that these engagements are happening, and we have it on good authority that it's not happening. And so please, so I'm just going to leave you with this comment. In the next few weeks or next year, whatever, it needs to happen soon as that you are meeting and paving a way forward in terms of alignment. And also we will want to see the bi-weekly engagements and targets, because we do have it on good authority that does not happen, and there's no consultation between these parties in terms from the SAF side. Thank you, Chair.
Thank you. Any comment?
Chair, I think I will take that as an input. I actually just wanted to check with Mr. Makanya if there is a date for the session yet.
Yeah, it's the 12th.
On record.
Apologies, Chair. Apologies, Chair. Yeah, the next planned AE board and management strategy session is scheduled for the 12th and 13th of December, so it's next week. And Chair, I think that maybe just to emphasize also on the planning instructions, I think the importance of the yearly planning instructions that get issued to the subsidiaries, it's a form of ensuring that strategic alignment, which really guides the budgeting processes, as well as the key focus areas for the planning horizon.
Thank you very much, Mr. Makanya. Maybe, Chair, just to close it off then, we will make sure that we are present on the 12th and 13th to engage, but also in parallel, the other bi-weekly will continue. Thank you.
Thank you. Colleagues and honorable members, feel free to step out, get tea, coffee, snacks. You come back because we are not going to take a tea break. Honorable Hassan.
All right, thanks very much, Chairperson. just have a few questions. I'm going to start with PetroSA, if you'll allow, Chair. The petroleum licensing landscape, and I think you've spoken about this at length around some of the litigious nature of it. And we acknowledge that that often stifles growth, investment in the sector, as well as just general infrastructure investment. I think then it becomes PetroSA's duty to ensure that all stakeholders involved adhere to that scope of legislation, especially when it comes to licensing, while promoting growth and investment in the sector. So I'm interested to know, what is the full strategic plan for PetroSA to ensure this? What initiatives have been planned by PetroSA? Are there any consultative processes to remedy it while adhering to the environmental background? And that's important given some of the, for lack of a better word, hostile relationships that's been created between, I suppose, the environmental lobby and the petroleum sector. That's the first one. I'll just ask all the PetroSA questions, Chair. My next question to PetroSA is about ensuring emerging players in the shale gas space are integrated and the resources of shale gas are utilized for the benefit of South Africans, especially following phase 1 of the closeout report, and what exploration licensing activities expected in this next financial year. Or let me put it this way, in the 25-26 financial year and the 26-27 financial year. And then, how are you preparing for the full implementation and rollout of the UPRDA? Thanks. Chair, that's just to PetroSA. Should I pose all of my questions?
Thank you. PetroSA. You still have questions for others?
I have for AE and IGAS, but only one slash
No,
two.
ask your questions, all of them.
All right, to AE, I think you've answered a great deal on the current status of the wash plant, so I won't repeat that. But I am interested to know about the full compliance, or rather after the full compliance with the CSA. How do you plan to put in mechanisms to ensure that such a limitation doesn't grind operations to a complete halt, seemingly as it has now? And you've mentioned around single mineral and some of the challenges there, but what you've said to us is verbal. I don't know if we've seen that in the documentation. I don't think we've seen that in some of the strategic processes. So I think going forward, AE needs to also start reporting on other minerals as well in terms of that expansion. And then on IGAS, the PetroSA ENH gas trading venture. It's been delayed due to ENH not being available. I think that's noted. But what are some of the reasons given for this unavailability? And what are some of the corrective measures that have been proposed, especially given, I think, just how incapacitating it can be? And then I had a question, I suppose it's to IGAS and PetroSA to some extent. And Chair, it's actually a follow-up from your question from earlier. And I don't think that people are clarified. Remember, we ask questions not only for ourselves, but we also ask questions for those who are watching online, who will watch this later, and try and make sense of things. There's the impending gas cliff. I don't think that we've answered that sufficiently enough on two levels. The one is, of course, to ordinary South Africans who are watching this, what does it mean for them? Why is there an approaching gas cliff? Why has no infrastructure development happened around discoveries? So that's one on households, but I also think there's an important point to be made for manufacturers, Chair, who are incredibly reliant on gas to run their operations and to run their plants, etc. So I think we need to explain further some of the challenges faced in this regard, because I don't think that we've unpacked that enough. That's it from me, Chair. Thank you.
Let's start with PetroSA.
Thank you, Chair. Where do I start? Okay, the litigious environment or petroleum licensing landscape requires that all stakeholders comply, I guess, with expectations. So meaning to avoid activities being challenged, there needs to be everyone needs to be aligned in a manner that there is compliance, such that there is no case, therefore, to halt activities. I guess that's the question. What are we doing as PetroSA to ensure that that happens, meaning activities are enabled? Environmental authorizations which authorize activities, exploration activities such as seismic acquisitions, drilling of wells, are backed by environmental impact assessments. And the environmental impact assessment has the public participation process embedded in it. Operators have been found wanting in terms of that, the EIA process, the public participation processes. We have developed guidelines in terms of how the gaps that have been pointed out by the courts could be closed. The EIAs are conducted through, or the operators or right holders must appoint independent environmental assessment practitioners. So this is done by independent people. So what we do to reinforce that process, we participate in that process as observers. So meaning where we pick up gaps in the public participation process as it relates to the matters that were pointed out as gaps by the courts, we then talk to the EAPs to say close those gaps, and the operators themselves to say your engagement of communities still had these gaps, close the gaps on the spot. So that is what we are doing. We ourselves have been quite proactive in stakeholder engagements and preparing stakeholders sometimes ahead of the formal engagements called for in terms of the EIA processes. For example, we've had engagements across the Eastern Cape such that we've even have endorsements by provincial governments, premiers, Northern Cape, for example, Eastern Cape premiers being on board. We've had pledges by kings in the Eastern Cape. Eastern Cape has a kings forum of 7 kings covering the entire Eastern Cape that have signed a pledge in support of oil and gas. And that is on the back of us sharing information in terms of the technical aspects of oil and gas, the risks associated with oil and gas and how those risks are mitigated, as well as the potential macroeconomic impact. So there's been an ongoing process of engaging local communities, augmenting the work called for in terms of the EIA regulations. We have an obligation, as another question, to integrate emerging players as it relates to shale gas exploration and exploitation. How are we planning to do that in the coming period, 2026-2027? Okay, emerging players. One, they are currently, besides the research that we are conducting, there are currently no shale gas related activities because there is a moratorium, which moratorium will only be lifted once the hydraulic fracturing regulations and related water use regulations have been promulgated. All interested parties, emerging players, will then have the opportunity to apply for petroleum rights. So starting with, okay, they will have the opportunity to apply for petroleum rights. In processing such applications for petroleum rights, say exploration rights, the current regulatory framework does bias us towards enabling black players into the sector, or opening up the sector to black players. So we will favorably, how do I put this? We will have that bias of saying the sector needs to be opened up to emerging players, black players, and therefore we will keep a close eye in terms of how we assess them, in terms of their competence, in terms of their capability. It must be in a manner that partnerships could be formed with more established players with capacity, both financial and technical. How are we preparing for the rollout of the UPRDA? The DMPR is finalizing regulations, the upstream petroleum resources development regulations, which regulations, once promulgated, will enable the president to proclaim the UPRDA in effect. A key element of the UPRDA is licensing by bid round. So we are well underway in preparing for a bid round once the UPRDA is in effect. Bid rounds are backed by data packages. They are backed by terms in terms of what would be the terms of the bid round and so on. We are well underway having those bid round, those data packs in place, as well as the terms. We are also, we have new responsibilities in terms of the UPRDA. For example, it calls on us to do production verification for fiscal metering, meaning verify the volumes of production that are reported by producers of oil and gas for tax and royalty purposes. We've brought in the skills that would enable us to do that. For example, you would need a petroleum engineer and a petroleum economist to do that. We also need to determine tariffs for third-party access to petroleum infrastructure. You need a petroleum economist for that. We've brought in those skills. And we also need to ensure health and safety of the sector. We've also brought in some senior people that could enable us in that regard from within the group. I think that is that, Chair. Or in terms of the impending gas cliff, why is there no infrastructure development, I guess, around where gas discoveries have been made, offshore in particular? Or in fact, any gas undertaking in terms of gas development must be underpinned by an offtake agreement in terms of the gas. So you need to have an established market, or you need to have a market for you to develop any gas. And that market must be a firm market in the sense of there must be a gas offtake agreement in place. That is the only time that petroleum right holders will develop. A case in point, Total Energies and Partners found gas and condensate near Mossel Bay. They could not firm up a gas market. Therefore, they could not develop that gas because your development calls for significant financial resources, billions of dollars. So you are not going to invest that unless you know there is someone who is willing to buy your gas, and that willingness to buy the gas must be in the form of an agreement. That's the only way they do that. So that goes also for onshore developments. There must be a fair market. And so the opening up or the gas to power program by ESCOM might be just the solution that we need in terms of there being a potential anchor market for gas developments. So the IRP 2025 calling for a significant amount of gas will open up a market. And once that market is opened up, it's easier for further markets to develop.
AE?
Thank you, Chair. I think I agree with the sentiments of Mayor Fasina. What we actually do, and then surprisingly, is that we've got a list of projects, one of them being T project, which is almost project ready. I think somewhere along the presentation, I'll have to put it in. It's probably our fault that I never communicated this information, hence my comment about client being ESCOM. There's what we're looking at in case of rare earth, for example, is dealing with people who understand that particular mineral and mineral extraction, not underscoring the value of transformation in this country, but those minerals of tomorrow, they really need another skill set, which we call pyrometallurgy. It's not your normal metallurgical separation, it's actually chemical separation of minerals. So what we've done from AE point of view, we've actually spent around 30 million rands. We did seismics, we've drilled with our own money when we had the money. And now we are on the process of trying to come with competent persons report for each and every mineral that we've done. That's why I'm talking about diversity and clients outside the coal sector, but I think that information must one way or the other find itself in the document that comes to the parliament. And I do apologize, Mayor Hassan, that I was talking something that was not in the documents. Thanks.
Okay, I guess.
Thank you, Chair. Chair, let me start by addressing the issue of PetroSA ENH. What measures are in place to improve that relationship? I think, Chair, even the current engagement that are taking place in Mozambique are part of that process, Honourable Member. But what is important to note is that the aim of this engagement are basically to ensure that there's continuous volume of gas that flows through Romco pipeline. Romco pipeline has been indicated through the gas cliff assignment. It's about the Panetamani field that currently supply the pipeline. It's being depleted, and that's why we then going to be exposed to this gas cliff. But the type of engagement and comment that Dr. Saidini has indicated, the minute you do have a strong offtake, which is the market, you are then in a position to then be in a position to secure that gas that needs to come from Mozambique. And on that pipeline alone, with what is currently existing for it to be tapped in from an offtake point of view, we are looking just around 1,500 megawatts that can actually be monetized in that. Again, it's going to talk to our ability to ensure that the execution of this project takes place in the manner that it deserves. Issues of domestic gas, yes, to an ordinary person. If we have domestic gas, the price regime will definitely change. But of course, we will have to contend with the issues around LNG, which could be another element that can be looked into. But we understand the challenges that comes with LNG in terms of pricing. But it is what it is. We will have to find a plan that will talk to the country's electricity framework, which will make it easier for us not to have a situation where our electricity prices will actually fluctuate, just like we find in our petrol and diesel situation. So those are some of the work that we are trying to do to ensure that even in Mozambique, we are able to secure domestic gas. If it has to be LNG, we'll have to have a blended plan of ensuring that our electricity on the side of South Africa does not get price affected. Thanks, Chair.
Thank you. Honorable Hassan, do you have a follow-up question?
Yes, it's more to PetroSA. On the shale gas, you spoke about the water and the hydraulic licensing, if I'm right, is yet to be promulgated. Do we have any timelines on that? What needs to happen to speed it up? Because you mentioned other departments, I would assume it may fall under. So I just want to understand that. And then similarly, with the UPRDA, you said that the department, and maybe this is also to the DG, regulations are being drafted. Again, timelines, where are we looking at those regulations of the UPRDA to allow for promulgation as well? And then, Chair, maybe just to say on this gas cliff thing, I think we do need quarterly meetings that are joined with the Energy PC, so we can call the different players here to pull us into one space, because I still think that we have a challenge as the state in addressing the gas cliff, because it's like we're dealing with this thing in silos. And a year and a half, 2 years from now, when we realize that the deadline is around the corner in terms of the industry space, I mean, really it is actually around the corner with the kind of timelines we're dealing with, then we're going to, we're going to plead for mercy then, but the reality is we need to be dealing with it now. So perhaps, Chair, just going forward, one of the recommendations needs to be another joint meeting, or regular, maybe quarterly, so that we can say, IGAS is doing this, SEF is doing this, but then we also need NERSA to also play their part. We also need the Department of Energy, et cetera, because I'm very concerned because everyone's saying different things. Thank you.
PetroSA?
The promulgation of the hydraulic fracturing regulations and is dependent on the DFFE. They have gazetted for a final round of public comments on 6 November with a 30-day participation, public participation or commenting period So one would then expect as soon as those comments come through, they will be processed and the regulations will be finalized. But it's really dependent on DFFE efficiencies in processing the comments coming through.
Thank you. DG?
Chair, let me maybe first to the question about the upstream, the regulations. The idea is to have them out before the end of this financial year, ASAP. That's the idea. Maybe Chair, I can talk to, we just comment on the dealing with the issues around gas. I can share in this meeting that we have been engaging with industry, specifically the gas users, and they had some proposals. Myself and the acting DG of DEE, we have agreed to establish and lead a interministerial as well as stakeholder type of forum like the NICOM type of forum, where we can actually have a structured approach to dealing with the issue holistically, because there I think for me it's less conflicting messages, but there's various solutions. What is lacking is bringing all the parties to the same platform and coordinate the solutions, because these various parties, they need each other to make the solution ultimately work. So that's what we've committed together with the DG from DEE, that will convene the stakeholders early in the new year and run a process that will make sure that there are clear timelines and milestones that we can report on. Thank you.
Thank you. Honorable members, we will now move to the last lap of our meeting, where we have, not in order of preference, SANPAG, SFF and PetroSA. Chairperson?
Thank you very much, Honorable Chair. I think firstly on the SNPC, our understanding was that we probably would not be presenting formally on that because it's not part of the Fs. However, I think the team is here, to give some additional information besides what we have already shared. What I would like to suggest, though, is that we start with SFF presentation, and then we do the PetroSA presentation, and then maybe just share guidance on what additional we should present on the SNPC. Thank you, Chair.
Thank you. Are you able to switch that one off? That mic? Okay. Honorable members, we will. I suggest that we don't have a presentation on SANPAG. However, if there is anyone who has a question, raises that question, those who are here will be able to respond. We take, as suggested, SFF, and then take PetroSA. Is that in order? Okay, agreed. Can we have less than a minute reorganizing ourselves? I want SFF this side. Quickly. And we will take both honorable members and deal with them at the same time.
Chair, if I may, just to assist the team to be reminded that SFF, there was a question on the oil price that has dropped and how it has actually benefited. I think it came from one of the honorable members, because in our presentation we actually highlighted that because of the high price of oil, SFF is struggling to get the storage contracts. And then PetroSA will deal with, there were about 5 questions that I will also pass on to them to address up front. Thank you.
Good afternoon, everyone. Thank you very much for the opportunity. Good afternoon, honourable members of the Portfolio Committee, including the DG, chairs, CEOs and executives of all the SEF entities. Today we've come to do the report of SFF as of the 31 March 2025. Obviously, we all know that after from the 1st of May, SFF changed completely and all of its staff and most of its assets has transferred over to SANPC. But SFF still operates as a legacy entity and it will be focusing on other corporate governance issues later. So, Chair, with the SFF mandate, for now it still remains the same. The mandate is to secure the nation's strategic petroleum reserves, safeguard infrastructure, and provide energy security for the nation. The SFF group for the previous financial year continue to demonstrate resilience and operational excellence with a headcount of 210 employees who work tirelessly across the various operational facilities and terminals to ensure that we reach all of our objectives and work towards our mandate. By the numbers as displayed there, SFF recorded revenues of 691 million and a profit of 45 million, supported by a strong cash position of 6 billion. The CFO will explain more of that. And then at that time, our assets had a value of 11.5 billion, of which most of it has been transferred now. Allow me also to highlight a few of the key achievements for the year. As an operational entity, we had 0 reportable Section 30 environmental incidents and 0 work-related fatalities recorded during the year, and for 3 consecutive years as well. The Saldanha terminal, where most of our operations take place, successfully handled 9 vessels during the last quarter and 35 vessels for the year, which is more than last year's 33 that we handled. Also operationally, one of our terminals is the OPC terminal completed the ISO 9000 surveillance audit with no findings, and various of our business cases for many of our capital projects reached their milestones and was approved for the next level by our legacy board, or our board at that time. However, we do acknowledge that there were some lowlights and areas where challenges still persist. While we did reach many of our milestones in the capital projects departments, we did have a few where we struggled and we didn't reach our objectives. And one of that would be the LPG pipeline and Berth 104 modification in Saldanha, where we, at that time of 31 March, we had finished and completed the tender process and was about to award. Subsequent to that, we have had other issues that came up. We had to go to the SEF entity for further approvals, and has since been asked that we go back to the drawing board and redo this. Since then, all capital projects has now been transferred to SANPC, and NPC will focus on them. Also, the Milnerton Tank Farm, the recommissioning project, remains pending. A new commercial business case is being developed to reflect the current market trends and to ensure alignment with the strategic priorities to mitigate the risk of misaligned investments for the future. We also realize that there's lots of infrastructure that is needed for the particular area to make that a successful project, along with the refurbishment of the tanks. Though that's something that we'll continue to focus on. I will move or hand over, Chair, to the CFO, that will then now follow with the financial performance.
Thank you, Natalie. Good afternoon, Honourable Chair, Honourable Members, DG, SIF chairs, and the executives and everyone that's in the room. In relation to the performance of SFF for the year ended March 2025, we performed relatively well from a financial point of view, ending off on a 45 million rand profit at a group point of view, which included Avidia Energy, and then at about 66 million profit at a company level, SFF on its own. So in relation to the detail, in terms of revenue, it was much lower in comparison to the previous financial year. So in 2024, we recognized 1.8 billion and 691 million in 2025. In 2024, we sold approximately 1 million barrels of strategic stock. And in 2025, it was business as usual, the 35 vessels that were handled at the Saldanha terminal, as well as the singular trading transaction of diesel that was handled over and above our usual revenue streams. In relation to our gross profit, after recognizing the required cost of sales in relation to the strategic stock as well as the diesel transaction in 2025, we ended on a gross profit of 127 million versus the 1.6 billion in the previous year, and that's mainly due to the different type of product that was sold during the 2 years. In relation to other operating gains or losses, this is very dependent in terms of the market, especially the rand-dollar exchange rate. So in 2025, we saw the rand strengthening in comparison to the dollar. And when we revalue our USD investments that we have, that resulted in a forex loss. So that 7.7 million loss that's reflected there is in relation to that, which is in comparison to the 166 million in 2024, when we had a weaker position. In relation to other operating expenses, there's also quite a significant deviation between the 2 years. 2024, we recognized about 2.5 billion, and in 2025, about 472 million. In 2024, we recognized about 2 billion rand, which was in relation to a payment that we made to National Treasury, which was part payment of the 6 billion that is owed to National Treasury. This was as a result of the request from National Treasury for SFF to dispose of strategic stocks in order to cushion the deficit that had been experienced when the oil price skyrocketed during the Ukraine-Russia conflict. So SFF ended off on a operating loss of about 345 million versus the 733 in the previous year. SFF in backwardation conditions normally relies on the interest income to fund some of the shortfall that stems from the revenue when we cannot sign up storage customers. So our investment income was 440 million versus the 464 million in the previous year, and that's due to the fact that we have seen the interest rate reducing. So profit from continuing operations at a group level was about 68 million and 66 million at a company level. As we all know, the SNPC is moving or leasing and assigning various assets from SFF. So part of the financials at 31 March took into consideration the assets which were expected to be disposed of in the new financial year. So at a company level, we recognize the loss in relation to the sale of Avidia from SFF to the SANPC. And then also at a group level, we took into consideration the loss from the Avidia operations, which effectively then becomes discontinued at the SFF group level. And that's how we ended up on the profit of 45 million at the end of the 2025 financial year. The question in relation to the price of the crude oil declining and the storage rentals. So there is an inverse relationship between the price of the crude oil versus when customers are willing to take up storage in our tanks. Historically, the sweet spot, if I can call it that, it's somewhere between $50 to $55 a barrel, and currently we're still hovering around $60 a barrel as about now. So we haven't yet reached that sweet spot in terms of it actually being a contango market for people to start signing up contracts. However, despite that, in December 2024, we did manage to sign up one customer in relation to reserving a tank in Saldanha, and that is for a 2-year period. So there has been reservation fees coming in relation to that specific tank from that specific contract that we had signed up. Also bearing in mind now that the respective terminals, Saldanha, Milnerton, etc., has now been leased and assigned to the SANPC with effect from the 1st of May. And SANPC will now be responsible to ensure that those tanks are rented out to potential customers. And I do understand that there is a potential customer in the wings, but it's early days still, that we could possibly see some revenue coming through in relation to that contract. Next slide, please. In relation to the statement of financial position, so SFF still remains in quite a stable financial position in relation to all the ratios, liquidity, solvency, etc. They're all well above benchmark, and we're able to pay our obligations as they fall due. So year 2, the statement of financial position took into consideration the changes that is expected, especially with the transition to the SANPC. In relation to the lease and assigned assets, SFF still remains the owner of the assets, but there were certain assets that were identified that would be sold to the SANPC. I've already touched on the 60% shareholding in Avidia. So year 2, you would note on the total assets, we have aligned the assets held for sale and disposal. That's effectively the 60% shareholding in Avidia that would move over to SANPC in the new financial year, and that has actually materialized. In addition, the line fill, which we normally recorded as part of strategic stock, which is reflected as part of our total assets, that was also part of the assets that was identified to be disposed of to the SANPC. So here we recorded that as part of our current assets with the expectation that within the 12-month period post 31 March, that the line fill would be disposed of, and that has also materialized. But if we look at total assets from the previous financial year to the current year, it's increased by about 600 million, and that's mainly in relation to our cash and cash equivalents. You'll note that it's moved by about 5.6 billion to almost 6.2 billion. So in relation to the trading transaction that we transacted during the financial year, we had received monies in relation to that sale, but we had not yet paid the supplier. That happened in the new financial year, so that's the reason for the increased cash balance as well as the increase in the total assets. Similarly, if you then look at the liability side of things, especially on current liabilities and under trade and other payables, you'll note a significant increase between the 2 years, and that was due to the fact that that very same supplier that I've just mentioned had not yet been paid at that particular point in time. That outflow of cash happened post year end. If we can move to the next slide, please. I'll hand back to Natalie.
So the performance against the objectives, the SFF scorecard, performance against commitments outlined in the corporate plan and operational priorities for the year under review, is as follows. So SFF entered the financial year with 16 strategic objectives aligned with the mandate and the organizational strategy. Of the 16, 11 were achieved, 5 were not achieved, and of the 11, 7 exceeded the achievement targets of 3. So the overall performance score for SFF for the year was 3.1, which is 69%, and these results were audited and verified by the AG. So we were quite happy with that. Next slide. So CFO will move on to the fruitless and wasteful and expenditure and the AXA.
Thank you, through you, Chair. So in relation to the AG audit, as already highlighted, SFF received an unqualified audit opinion. However, we did have material non-compliance findings, some of it stemming from the procurement and SCM space. However, even though we had these findings, AGSA did highlight during the audit that there was actually an improvement in the specific area in comparison to the previous financial year. So instances were identified during the audit, and there were also issues that we had actually self-identified in relation to non-compliance with the triple PFA and the PPR. Some of these issues were actually identified during the previous audit, which was the 23-24 financial year audit, where AGSA actually highlighted the incorrect interpretation by SFF of the PPR, which was then just newly introduced. There was a session that was held with National Treasury, and the SCM team had actually asked the question that in relation to quotations less than 30,000, whether we were able to not apply the PPR to that, and it was confirmed that it was. However, when AGSA then came in to do the audit, they highlighted that this is not the case. Then when we did a subsequent follow-up with National Treasury, they confirmed the position that AGSA had taken. Obviously, we were then already in the 24-25 financial year. And after the AGSA highlighted, we immediately, and the confirmation from National Treasury, we took immediate steps to rectify the situation, especially for transactions going forward. But it was always known that when we got to the 24-25 financial year, that there would be these non-compliance issues identified again due to our incorrect interpretation in relation to this. Furthermore, the one trading transaction that I mentioned earlier that SFF had executed also resulted in a material irregular expenditure amounting to about 565 million. So this was also one of the questions that was posed by one of the members earlier. So a decision was made to move the trading function from PetroSA to SFF. And the issue that stemmed, and this was mainly to assist PetroSA by making use of the SFF balance sheet, or the strength of the SFF balance sheet. But unlike PetroSA, which had a trading policy in place as well as triple PFA exemption, SFF did not have these in place. So the transaction needed to have followed a full-on SCM process, which it did not. What happened was the execution per the trading team was done in accordance with the PetroSA trading policy, which had not been formally adopted by SFF. So the required governance processes had not been followed. So we recognized the irregular expenditure. Trading was obviously immediately halted after that specific transaction, and we followed the required condonation processes. We've also, in relation to some of the other SCM-related findings, collaborated with our parent company, SEF, for group-wide training to be arranged for all our SCM officials and including BAC members. And in relation to the consequence management for that specific transaction, that will still be executed. We are very aware, as AGSA had given us the heads up, that when they do come back for the next audit, that this is something that is specifically going to be looked at in terms of whether the consequence management has been executed. So this is something that we are actively working on. Obviously, this has been through the Loss Control Committee in relation to the condemnation. Then the other instance of non-compliance that was identified was in relation to the annual return, which was not submitted on time. It was submitted a few days late. Unfortunately, this is really one of those scenarios that when you have a transition in terms of people leaving and a new person coming in, that this was just something that fell through the cracks, but here too, the deadlines have been recirculated to the new company secretariat. We were happy not to have any material misstatements on the annual financial statements. Then in relation to the audit of predetermined objectives, there were material misstatements identified during the audit in relation to the APR. These were corrected during the audit by the time we got to 31 July. But here too, the root cause was due to significant turnover in this department, where we had some people going off, and then also some people that were sick, and all sorts of issues that we had within that department. However, what we have introduced now in relation to this specific aspect is to ensure that internal audit reviews our submissions on a quarterly basis to ensure that our discrepancies that were highlighted during this past audit does not recur. Next slide, please.
So the next slide now is, it's actually the key focus areas for sustaining growth for SANPC. So going forward, SFF will no longer be focusing on growth initiatives. That role has been handed over along with the people and the assets to SANPC. SFF will from now onwards, for this financial year onwards, focus on corporate governance, because it is still a legacy entity and a formal entity, and it will focus on effectively managing the 20-year lease, maintain and operate agreements for Saldanha, Montague and Milnerton. It will then also manage the recovery for the sale and purchase agreements for Avidia and the Linefill that has been passed on to SANPC. It will continue to manage the Strategic Stocks Agency agreement until it is officially transferred to SANPC. And this is an ongoing issue that has been escalated via SEF to the DMPR, that is speaking to the DAE to make sure that this this Strategic Stocks Agency agreement is transferred to SANPC. And obviously, we will also, SFF will support SANPC's long-term growth and sustainability to make sure that we have all our growth projects and all of our assets maintained on the other side, as they are now the operator. We will continue to build on our strong financial foundation through disciplined cost management. We have healthy cash reserves that will be strategically deployed to enable SFF and SANPC to deliver on their mandates. Thank you, Chair. That's it.
Good afternoon, Honourable Chairperson, Honourable Members of Parliament, Chairperson of the group, as well as directors and all executives in the room. My name is Xolelwa Ntlango. I am from PetroSA, executive in the Office of the CEO, who has tendered her apology as explained by Chair Noah earlier. I am together with our CFO, but we are accompanied by our board chairperson, Director Bonakele, to our further left. I will start with the initial part of the presentation, Chair and members, and then hand over to the CFO accordingly. So if we're looking at this initial page, PetroSA's mandate is to ensure security of fuel supply for South Africa, and by participating really across the value chain, upstream, midstream, as well as downstream. And so in the upstream, we've got a number of assets in terms of gas fields, and midstream, it is the refining operation that is in Mossel Bay that has been a cause of much debate earlier on. And then downstream, we do have a limited presence in terms of those 2 retail sites that were mentioned, and also 2 depots situated in Zanin, as well as in Bloemfontein. We therefore seek to fulfill our mandate, Chairperson, through the provision of hydrocarbons and ultimately selling fuels to the end user in the country, but also looking at the export market. So I'm going to proceed to then present the results for the financial year ended. We can stay on that initial page. I'll spend a bit of time on this page. Thank you. Focusing on the lowlights, highlights, and our current position. So currently, as I've mentioned about PetroSA's participation in the value chain, upstream, midstream, and downstream, we currently sustain our business through the buying and selling of finished product. We import finished product, we store it at our Mossel Bay refinery or any other storage location we negotiate with, so that that product can be then distributed to the end customers. At the moment, our customer base lies in Mossel Bay, some in Cape Town, and we have really been putting all efforts to increase the representation of the market to the inland region. So the sales performance that we have seen, Chairperson, for the period in question is that we have recorded low sales volumes against our targets, which has then meant that even in terms of revenue forecast and profitability, we were unable to see a positive profit, as you can see highlighted on the summary page. As mentioned, that we do rely on import and selling of that product, but that revenue needs to continue to support all of our upstream asset base, as well as the resources that are supporting the GTL plant that is non-operational. So yes, we do make revenue through sales, but it's inadequate to cover all of our operating costs. As it stands, about 70% of our operating cost is dedicated to still care and maintain the assets that are not operational at the moment. So structurally, that is a challenge we deal with in terms of ensuring that the bottom line stays positive. So we have seen those low sales, and allow me, Chairperson, just to spend a bit of time in terms of the background and context of what are the factors that have had a material influence in the decline of sales that we see. First of all, it is true that in terms of our market penetration, we have had dependencies on few and key major customers. And in this case, Eskom is one of them. And as we have seen Eskom improve its operations, we have therefore seen them need less and less supply of diesel from PetroSA. And so this meant that we are then exposed because the other markets that we supply, which is the commercial market, the industrial markets, maybe and the mining markets, were not at a point where they could replace that volume that we have lost as a result of the entity or the major customer that has improved its operations. And so to superimpose on then, the question would be, why haven't you then increased significantly the volumes that you are able to sell to the remaining markets and customers? I would like to highlight, Chairperson, that We also have faced challenges in terms of our ability to price effectively. And by this statement, Chairperson, what is meant is that, yes, we import product, we buy it. In a perfect world where PetroSA's debt situation was better than what it is, we would have been able to purchase that product directly from refining companies who manufacture it. But because those companies require us to issue them with letters of credit for them to continue to deal with us in that way, it has then meant that we must find traders in between who are willing to take the risk and supply us the product. And because nothing is free, even them taking that risk is at a cost to us in terms of the interest that we then incur from the money that we are using buying the product from them. And so when we incur that interest, it's a ripple effect really that means that if we must compete in the market to sell to the same customer with a company that has bought directly from a trader, I mean from the refinery, compared to us who have bought from traders, our ability to be flexible on pricing and attractive is hugely impacted by this phenomenon. And so, Chairperson, we are, however, working on a way forward that can assist us because, as we know, we need to still grow the volumes domestically, especially looking at state-to-state transaction where, you know, we could really secure long-term contracts with organs of state to supply them, but also, you know, with other clients. But again, the myriad of this complexity, Chair, that I have painted, it makes it not to be a straight line exercise. And the team is really at work to configure these options in a way that can help us to sustain ourselves in the near term whilst we're working on reinstating the refinery. So I've just made a comment really in terms of why is it that our sales environment is where it is. But Chairperson, the second component of our performance is really hinging on the execution of big capital projects. So for us, as mentioned earlier on, that we're participating really in the three areas of the value chain. Sustainably, the refinery needs to get back online because continuing to import product is showing us as unsustainable. And so it is our strategic objective to reinstate the refinery. And Chair, I will spend a bit of time to address the questions that were asked earlier on in terms of the GTL refinery and partnership with Gazprom Bank. And I will address that by providing just a brief overview of our relationship with Gazprom Bank, where it started, and when it ended, why did it end, and what is the way forward. So PetroSA went on an RFP process in order to secure partners that would assist it in reinstating the GTL refinery. Because the refinery had closed, as mentioned earlier on, due to a low supply of gas. And so to reinstate this refinery, it would mean that we need to consider other feed sources other than the gas that is depleted so that we could ensure continuity. And so when Gazprom Bank Africa, whom we partnered with, who was a subsidiary of Gazprom Bank, as we know, the global entity, so their role would then be to partner us through the exercise. And the exercise at the time was going to start at the point of FID, developing detailed business cases and exploring the different options that PetroSA could take in terms of reinstatement, but also to then bring the funding that would be needed to implement the most feasible option. And so we went into partnership with them, And we had set some milestones for them as our partner. For example, April 24, they needed to have completed FID, Financial Investment Decision, and that would have been followed by a detailed 3 options analysis in terms of exploring which are the viable options we are going to take and how much they would cost. But Chairperson, when those dates had arrived, we did not receive the requirements that we had stated to the potential partner. We did issue some extensions, but as of January 2025, we still had not received any of the requirements that had been mentioned, despite the additional time that had been afforded. And so that caused us to then explore the option to exit the relationship, because the longer we stay with the GTL not reinstated, that cost to reinstate also grows, because as much as the plant is under preservation, but it's like a car must move. Otherwise, if it just stays parked, there will be more and more damage coming up. So then to the actual questions that were asked in terms of why is it that we've exited that relationship, that has been the basis, honorable members, in terms of then exiting so that we could then reimagine or reconfigure our way forward. What is clear, Chairperson and members, in terms of a way forward is that we still need funding to be able to reinstate that refinery. We won't be able to do it on our own. And so since exiting the relationship, the internal team at PetroSA has actually done it on its own, which is the analysis of the 3 options that are being considered to reinstate the refinery. So these 3 options, These 3 options, Chairperson, they did appear on a page that I haven't recorded now from the group presentation, but essentially we then have a roadmap, because the 46 kilobarrels per day refinery that is down, we know that we also can't reinstate it all to that full capacity all at once. So we do have a phased approach, which is premised on the 3 options. So phase 1 is to basically restart that current refinery we have and run it at 18,000 kilobarrels per day. Run it at 18,000 kilobarrels per day using imported feedstock. Because remember, the problem of depleted feedstock reserves hasn't been resolved yet. And so the timeline for that is to, by 2027 financial year, have reinstated the part of the refinery that is there, that was just shut down, using the liquid loop of the refinery, importing condensate that will be processed. So if you talk refinery terms, that volume is very low. We're talking in the country, previous refineries that would run at 108 kilobarrels a day. So to talk 18 is a very low number, but we are starting somewhere. And if that number is very low, it's already an indicator about the challenge in terms of commerciality of running at those low rates, which is again the reason why the plant was shut down, because the feedstock was low, the rates were low, and it wasn't commercial. But our way forward is to start there. And as we start there, we need to then ramp up the rate to 46 kilobarrels per day. And that ramp-up project is also intense because it must take into account the Clean Fuels 2 requirements. So as we ramp up, we must make sure that we are compliant with the Clean Fuels requirement, which will be in fact 2027. And that piece of work will also take us until, I think, 2032, which is the reinstatement of the ramped up refinery. In parallel to that, because we know that our strongest asset and value is in the gas fields that we have. And so to reinstate imported liquid really does not do enough leverage in terms of the resources that we have. So in parallel to this exercise, there will be work done in the fields to basically get more gas reserves, bringing gas up, because the reason the plant closed was the gas we had access to was inadequate. So there's also, in terms, and we will get to the projects list, but in terms of then our upstream projects, quite a lot of work also being put into making sure that we can develop the gas reserves we have, and again, continue to pump money through the gas loop refinery. And again, Chair, as I've said, that the economics of refining is in the numbers. You need to process more for your margins to look up. And so as we'll start with 18 kBL, ramp up to 46 kBL, we will then also be looking at bigger expansion plans in terms of the, beyond 5-year period. So, Chair, I've said a lot for an opening page, but I thought it was important to, as we highlight the context of where PetroSA finds itself, we also just provide a bit more detail in terms of the factors that have contributed to us ending up where we are. Lastly, Chairperson, there was a specific question in relation to Gazprom Bank that was asked about ISA. And so when we had entered the partnership with Gazprom Bank Africa at the very beginning, they were actually going to go to our local DFIs to look for money. But when they then became or were added to the sanctions list, which was, I think, early December of 2024, then the local DFIs kind of started also pulling out. And so to that extent, we had also had our own negotiation with ISA. They were going to fund or co-fund part of the feasibility study. But upon GBA, which is Gazprom Bank Africa, being listed on the sanctions list, ISA then, started pulling back and really stated to us that they were unwilling to co-fund with them. And so that would have been the reason why financially, there were some issues pertaining also to their involvement within the deal. And so now that we have exited that relationship, Chairperson, it's part of what we are working on. So as I've spoken about the options, we are looking at hybrid funding models, which would mean that we do engage the local DFIs and other sovereign funds in terms of the extent to which they can fund us. So I think I can talk timeline and detail later on, but for now I'll just hand over to you, CFO, to do the financial part.
Thanks, Ms. Ntlango. Good afternoon, Chair of the Portfolio Committee, honorable members of the committee, DG, the group chairperson of the SEF group, the directors in the room, colleagues. Chair, I will be presenting the financial statements, looking at the company as well as the consolidated at the group level. I must mention, Chair, that when we talk with the group, we include Ghana, PetroSA Ghana Limited, which I must also mention that entity.
Can we have one mic switched off?
Sorry, apologies, Chair. That entity received a clean audit from AGSA. And then also in the group, we have PetroSA Rehabilitation, non-profit company that is housing the decommissioned funds that also received a clean audit from HSA. Looking at the financial performance, the statement of the financial position, which is the balance sheet. Chair, we're looking at the non-current assets that we have as audited by AG. At the company level, we can see the value that is sitting at 340 million, while at the group level, we're sitting at 3 billion. We do have the refinery that has fully impaired. Reason for it to be fully impaired, at each balance sheet, they do a revaluation, comparing the carrying amount together with the cash generating unit. As we are aware, the refinery has not been producing, therefore there's no volumes that are coming from the refinery. My colleague has spoken in length with regards to what is happening and what are the plans for us to utilize the refinery to have it back on stream so that we can be able to produce and sell the product out of the refinery. There was a question that touched a bit on that with regards to the operation of the refinery and no sales that are taking place as we are only importing. Chair, then also with the movement that we see, there is only in relation to the impairment and amortization, as I've already indicated. And then in terms of our intangible assets, these are the rights that we have, both at company level, our exploration right and the production right that we have in Ghana. As we know, Ghana is producing and we are getting benefits from that operation. Also, we do have the investment in subsidiary that we have recorded, and which consists of our investment in Ghana, which gets eliminated at consolidation because we take the items on line-by-line basis for consolidation purposes. Also, Chair, looking at loans receivables. Loans receivables is in relation to the funds that have been paid by the company PetroSA to establish our subsidiaries. We do evaluate those funds as we have recorded them in our records. Moving on to our current assets. We're looking at our current assets, the inventory. We have seen there's a decline on our inventory if you compare the previous financial year with the current financial year at company level. Ms. Ntlango has already touched on our inability to directly source the product from the refineries to which now we need to only purchase from the traders, which is something sometimes make it very difficult for us to log these deals, considering that our unhealthy balance sheet does affect us negatively. This is something, Chair, that while we're looking at the financial statement for March 2025, it did have an impact currently, which when we come back, those results will be reflecting. I think one of the members did mention this, what we're presenting today, and the possibility of it continuing in this current financial year. And then in terms of our cash and cash equivalents, while we see there is 1.6 billion at the group level, and at company level, we're sitting at 1.3 billion. When we look at our liabilities, that was not an exciting position for us because it does not reflect a good performance that we have. Having funds in the balance sheet in the bank, while our creditors have not been honored. Moving quickly to our non-current liabilities, the provision that we see, that is in relation to the provision for decommission liability, which one of the points that was raised is the shortfall that we have. I've mentioned that we do have 3 billion that is sitting at a rehabilitation entity, as an investment that was, or a loan that was made by PetroSA company, while our provision is sitting at 10 billion. The plans for funding that shortfall, because that is one area that AG also do point out to us. There's about that 6.2 billion. We have invested that 3 billion. It started at 1.5 billion when it was provided by the shareholder being PetroSA to the rehabilitation company. It grew from that 1.5 to the 3 billion that we see today. We continue to invest this money on the money market so that we can be able to grow the amount. It is moving quite slowly because we're getting about 8% on these funds that we have invested. We did approach the market to verify what instruments that are available out there for us to grow these funds quicker than what it is, considering the NEMA Act that which has not necessarily been promulgated because the date has been moved. That requires that whatever provision that you have, the funds equivalent to that provision should be in place. So we understand those requirements and the pressure to have those funds increase. So the proposal that we received to invest these funds in another platform, we realized that there could be potential tax challenges that would incur, which could have an impact on reducing those funds further. Hence, we're still remaining with these funds within the money market, which is a more protected platform that we have, because the Act does require us not to compromise the capital that we have in this for these funds, and we restrict it as such. So that is the plan that we have really on that shortfall. And as soon as we have the refinance back on stream, as well as locking profits, as we have done in the past, we would be able to start building up on those funds until we get to the point that we have sufficient that is covering the provision in our financials. Jumping quickly to the current liabilities, where I would like to spend a bit of a time. If you look at our current liabilities, they are sitting at the time at 9.4 billion at company level, while at the group level sitting at 9.7. I will point the chair and the members quickly to our current assets, which are sitting at company level 3.9 billion, and at the group level at 7.6. This position have not changed. We're currently sitting in October 2025, looking at our current liabilities exceeding our current assets, meaning we are unable to honor our liabilities as they fall due. This situation has come to a point where one of the suppliers, maybe let me put it this way, we are required to pay South African Revenue Services for the clearing and the movement of the product when we are selling it in Mossel Bay. That money has not been paid over on a regular basis to SARS. We do declare so that we make sure that we comply with the declaration. But in terms of the payment, that has not gone through. As such, as early as last week on Tuesday, we had SARS in our premises coming to discuss with us what are the plans for PetroSA to honor this obligation. And that conversation followed with a letter of notification saying to PetroSA, give us a payment plan to settle this amount. How are we going to settle this amount? In the absence of that, rather, the letter required PetroSA to respond to SARS by Friday coming. While we were looking into that, the letter continued to say, in the absence of any payment plan, we will go and hold your refinery, meaning attach the refinery to recover the amount of about 4.5 billion rands. What I've said earlier, looking at our balance sheet on the PPE, that refinery at this point in time in our financials
At the company level, it's sitting at 340 million, while we owe SARS about 4.5 billion, meaning the chances of that attachment won't cover sufficiently what they are anticipating to get in at the refinery. Yesterday, I received a notification. Chair, I felt this is something now, because we are sitting here, I think it's information that I can share with the committee. As of yesterday, we received a call from SARS stating that they are going to Mossel Bay to identify the assets that they will attach. They also informed us, while they will attaching these assets, they will allow us to continue operating the asset. However, we cannot do anything. We cannot be transferred to anyone. We cannot encumber to anyone, because the title, based on the communication that we are expecting to get from SARS, obviously, they are holding the asset as a guarantee on the amount that we owe them. So that is one area, Chair, in the committee, that really, with the reports that we've been bringing on PetroSA deteriorating position, it has come to a point where some of the suppliers that we have, which is SARS, has come to us and say, enough, we want our money. Apart from SARS, we also owe the product suppliers. We indicated earlier that it's difficult even to buy directly from the refineries. We're depending on the traders. So if we default on the traders, that means it's going to make life even difficult for us, while they are willing to assist us in terms of providing the product at on an open account basis. By us defaulting, it put us in a very difficult position, as reflected in our balance sheet, that our liabilities exceed the assets that we have. Current assets we're talking about, as well, if you can look at the total liabilities, that's sitting at 20 billion at the group level, and the total asset that is sitting at 13 billion, which shows that a negative shareholders' contribution, which is part of equity. This is due to the cumulative losses that we're making year on year that we're reporting on. If I move on from the balance sheet, the statement of the financial position, now to the statement of profit and loss. Chair and members, we did indicate there was a reduction in terms of the revenue that we have reported on at year end. The reasons have already been shared by my colleague on the revenue. I want to point to the gross profit. If you can look at our gross profit that we have reported, or we have recorded at company level, that's sitting at 319 million. However, I want to point to the members quickly to our operating expenses, sitting at 3.4 billion. Meaning the only amount that we've managed to make out of our own operation, the buy and sell, was 319 million, while we're incurring 3.5 billion. So what we have generated could not cover our OPEX that we're incurring to run the refinery. Hence, you see the creditors' number escalating the manner it does. It is due to the picture that is depicted here in the profit and loss statement. I think the reasons, we're still having the refinery, we still have to man, as also my colleague have indicated, similar to the car that you would have, it must be running for it to be maintained at a particular status for us to be able to bring it back. Because should we close it completely, that means the cost for us to incur to start and fixing the things that were not being kept moving could escalate further. Chair, I won't go to other items on this. As I've indicated, there's impairment related to the investment in Ghana that we have to record, which is a non-cash item. And then also, as I've indicated, we do have our operating costs. Largely, these have been consistent with the previous financial year, with just inflationary increase that we see. However, it's not sustainable. And I think this is one area to whom the AG have placed emphasis on, where they've also indicated that due to these continuous losses that we're making, as well as the asset and liabilities not in sync, there's material uncertainty on the going concern. Although we do provide to AGSA all the supporting documentation for the initiatives that we are putting in place to make sure that we sustain the organization year on year. Hence, we have been given an opinion of unqualified audit finding with unqualified opinion with findings. Is because of the initiatives that we have and the evidence that was presented to the AG to reflect that PetroSA does do put plans in place to make sure that the company does continue to operate. If we move on to the statement of cash flow, Chair, I think with this one, there's not much movement that has happened. As we can see, that under cash from operating activities, with the subsidiaries, we are in a positive position, while at the company level, we had a negative movement with regards to cash from operations, as well as the dividend that we received from Ghana. As we've indicated, this is one of the assets that is operating commercially, and it does contribute to assist PetroSA in terms of the cash and to boost the financial statements. Then in terms of our investing activities, these are just movement in our fixed assets and to do the impairment and the depreciation that we process. There was no investment that was made specifically in that area. And then in terms of our financing activities, we only see the movement basically on the lease liability that we have. This is in Ghana, where we have leased and floating production storage to keep our production while it is being generated until it gets to a point where it can be sold and then it's sold from there. So as JV partners, this is what we have at the FPSO. There is a plan which will report on that in the following financial year to purchase our own FPSO so that we don't have to have these lease liabilities. Okay, I'm not sure that, should I continue on the findings? Okay, maybe let me continue, Chair, on the findings and respond to some of the questions. Then Ms. Ntlango is going to come back and do the scorecard as well as concluding. Then in terms of the AGSA audit findings, as they were looking at 3 areas as they do their audit, which is the annual financial statements, the audit of predetermined objectives, as well as the compliance with policies, legislation, and regulation. With regards to the financial statements, there were findings that were picked up in that area, which emanating from, we do have some dormant entities when we're engaged in a number of projects outside of the country. There were entities that were established. Those entities have not necessarily been deregistered with CIPC. Internal processes have already been done, but CIPC have delayed in deregistering these entities. As such, we are not preparing financials for these entities because it's zero. There's no movement, there's no activity. Once we prepare the financials, AG will want to audit the financials, which is the cost for us on something that there's no benefit and value we're getting from that. So that is the conscious decision that was made by the board because there's no impact that it have, but AG obviously do raise this. Also, in terms of, as I've indicated on the assets, that are fully depreciated, AG want us to go and do the physical verification, which again, we have engaged them with regards to this. In terms of the financials that they're auditing, there's no impact, the item they are raising that we see. The item that really needed attention from ourselves is the physical dips on the inventory that we are reporting on, because this is a high value item, where when they did the dip and what was sitting on the system were not aligned. So this is a matter of a internal control, where now we have make sure that there is a reconciliation that is done, which is monitored, reviewed, and signed off by a senior official, including the accounts, the payables account, as well as the receivable statutory account that we're maintaining. Then there was no finding in terms of the audit of the predetermined objectives. However, with regards to the audit they perform on compliance with policies and regulation, which I will also touch on the irregular expenditure that was reported on at the group level. There was no finding on the SCM process. With regards to trading, a separate and a different policy was established, and it needed some updates that the auditors, when they look at it, they felt there were some inconsistencies with what was happening when we go to the market, such as there's a trading window, there's outside of the trading window. So they required that policy to be updated. At the time of them doing the audit, the policy was not yet finalized at the pre-audit stage. However, but by the time they completed the audit, that trading policy was finalized and approved by the board. And then the other finding they've raised, which ended up being an irregular expenditure. When the trading team went to the market to request the bid for the supply of the product, there was a criteria that was mentioned, which stated that all the bids must be received by 5 o'clock. However, then there was a bid that was received 3 minutes after 5 o'clock. When they did the evaluation, they included everything, including that bid, without disqualifying that supply. And it so happened that supply was the most economical for us because the other ones were very expensive if we were to lock on that deal. So the transaction was concluded on the bidder that submitted 3 minutes late. At the time, it was not condoned and it was not reported. That's why it ended up being an irregular expenditure item, although there was no loss to PetroSA as a result of entering into this. It's the governance process that needed to be make sure we have complied with. And then the other item was in terms of the fruitless and wasteful expenditure. PetroSA incurred an amount of about 5.8 million on the fruitless and wasteful expenditure. One of the items of about 2.2 million was in relation to the delay in paying PAYE. As we know, PAYE is deducted from employees. So, but there was, I think, a day delay in making that payment. Obviously, once you delay SARS immediately, there's a penalty, there's an interest. So that is the reason of that fruitless and wasteful expenditure. Also, there was a work that was done by the department where an injury took place at the refinery, but it was not reported. So there was a fine, because that is the requirement in terms of the HSEQ processes. Lastly, before I can hand over to my colleague, consequence management. There were 5 instances of allegations around the financial misconduct, which were not necessarily investigated to establish whether there was any wrongdoing. So AG also picked this one up, stating that consequence management have not been conducted. However, you conduct consequence management once you establish there was wrongdoing on that particular person or within the process. So due to the lack of resources within the risk and compliance department, this work was not done, and the response that we've received in the plan that we have here with the SANPC that has now have all the employees transferred to SANPC and looking at the resources, this is one area that we said we will be able to make sure it is closed to do the investigations, so that the report is being provided and be able to close these audit findings that were raised by AG. Chair, that would be all from me. I'll hand over to my colleague so that he can go back and present the scorecard. Thank you. Thank you very much. So I will now present PetroSA's performance scorecard for the period ending 31 March 2025. As it can be seen on this table, the key performance areas are highlighted with greater focus and weighting assigned to the optimization of downstream, which would mean that we sought to achieve a target of 2.8 billion liters of sales through the different markets that we are participating in. Also, in terms of profitability, there's various ways at which we sought to improve profitability, being the gross margin percentage, which really hinges on our ability to price favorably. But there's also quite some key milestones in terms of our project execution that we had put up, and we've spoken at length already about the GTL reinstatement partnership. But also similarly with upstream partnerships that we had gone into, we did experience non-performance of the bidders that had been selected. And so as can be seen then that all of the performance measures relating to profitability, productivity were not achieved as indicated on the scorecard. We see that KPIs in relation to making progress for the gas to power project, we did achieve the front-end loading milestones in terms of business case readiness, and also in terms of the decommissioning plan. We can see on the bottom of the table that when it comes to stakeholder engagement, HSSEQ as well as BBBE status, those targets were achieved. And often a question we get asked on the BBBE is, I mean, why is that even an issue for us being a state-owned entity? But because of our current business model of buying and selling, previously we had been purchasing from non-BE suppliers, but what has helped us to see this improvement is to basically open up the BE strategy in terms of our product supply strategy. So in summary, the scorecard for 2024-25 performed in the manner displayed with an overall score of 2/5. As a result of the weighting that is attributed to the various KPIs. And so maybe the question then becomes, what is going to be the way forward? I mean, what is the project overview that's taking us to the future? Again, that's a busy slide. But essentially here, Chairperson, we also then highlight, our key project programs in terms of the upstream, the midstream, as well as the downstream. And to someone that may seem like we're doing too many things, why can't we focus on just one big thing? But the reality as well is that where PetroSA finds itself is, we've got to do some care work, maintenance work on some of the aspects so that we can be able to do the big bang reinstatement projects later. So with some of this, the flavor and nature of these projects, if I could just focus on a portfolio level, upstream, we are looking at initiatives that help us to get more gas out. Because for us to start printing money out of that refinery again, we have to flow gas, which is the resource that we have that we won't be buying from anyone. And so this is why you'll see that on our upstream portfolio, there's quite a number of different initiatives that are looking at being able to make sure that gas is available. Also, another reason that we kind of do show the different many projects is that when it comes to us looking for funding, we've seen that it assists us in terms of splitting or diversifying the risk. So instead of going with one big bucket to one big funder, we can go with multiple small buckets to multiple funders. And so this is the approach that justifies why we do see multiple items here. And then in terms of our midstream portfolio, as we have emphasized the importance that we continue being able to buy and sell product, the distribution infrastructure is very important to be able to support that objective. And as you will see then that in the midstream portfolio, there's quite a lot of distribution infrastructure work in terms of the SPM and CBMs, because that is essentially the reticulation infrastructure that makes sure that we can receive and evacuate imported product effectively. And then again, downstream, focusing on really being able to diversify our product offering. So as you know, currently we are focused on the white products, which is diesel, petrol, as well as jet fuel. But where possible, we are looking, in fact, we have started to make entry with really promising margins in terms of the lubricants market, as well as making inroads in terms of being able to leverage of the ENH partnership in terms of gas sales. So in conclusion, Chairperson, the picture we've painted for PetroSA is really complex and filled with lots of reds. But we know that in the immediate focus, we are focusing on stabilizing the current business through growing the sales portion that is operational, whilst we are making the inroads to be able to execute the big projects. And as you can see on this page on the far right, the key risk that we face with most of our material projects is funding. And so, as we have mentioned, that the big focus now is to be able to dissect our portfolio and be able to look for hybrid funding models in a way where the risk is minimized and shared across different stakeholders. Chairperson, that's where I will conclude the PetroSA presentation for the day. Thank you.
Thank you. Dr. Saidin, what was the name of that priest, the pastor who was the CEO at some point? Huh? Zondo.
Kholekile Zono.
Yeah, the executive manager reminds me of that that man. He would come here and promise a lot of things. And then when we want to hold him accountable in the next meeting, another story. So don't fall into that trap if you are going to still come back here. Honorable members, that is the presentation. Any interaction to the presentation? I will take Honorable Lorima, Honorable Mhlongo, Honorable Slepe, Honorable Senne. Maybe to start, okay, you have a problem as you are sitting here of SARS. What are you going to do? When you get out of here, what is the plan to deal with that problem? Which I think could have been avoided, in my view, but it is here. What is the plan when you live here? What is the status of the asset in Zanin? What is it doing? I'm asking this because one CEO came here and wanted to sell it because it was no longer serving the purpose. But I can hear you are saying Bloemfontein and Zanin are still operating. What are they doing? That was PetroSA. SFF, is there a reason why the Saldanha, Milnerton, and Montague assets are on lease and assigned, and Avedia and Lionfield are sold. There's a buying by Sunpack. The economics in you, can you explain in simple terms why the others are bought and sold, the others are on lease and assigned? Since 2019, when I sit here, the presentation about the Milnerton tanks is the same. It has not changed. We are busy with this and that, and then when you come again, we have withdrawn this because of this. What is really happening in, do you have a plan or you don't have a plan with Milnerton? It's been many years. We are talking about the same thing, and there's nothing coming out of it. Honorable Lorima, you will package my questions with Honorable Lorima's.
It's a horror story. So you're unable to honor your liabilities. So how do you get out of this hole? Does it depend on getting the GTL plant functioning again? And then getting the GTL plant functioning again would seem to depend on finding a partner. Is it going to be possible to find a partner with SARS hanging over your head? So it seems like it's a non-starter. So if all that is the case, can it not be said that PetroSA's continuing operations amount to trading recklessly? And then bluntly, is it the plan to transfer any successful operations of PetroSA to the State Petroleum Company, Sanpac, and then to allow PetroSA to go insolvent so that the debtors lose out, but the state can continue to operate in the oil and gas space?
Responses, please. Okay, SFF.
Let me firstly acknowledge the Milnerton tank farm. It is, we acknowledge that it's been in the works for a long time. Even my chair here and Mr. Makanya and my other fellow SFF board members or board entities, SF entities, also reminds us of this every quarter when we report. We've given, and last year we re-looked at it again, and we realized that the way we were looking at it before of just going in and refurbishing the tank farm and refurbishing it both for crude and for white products without actually having an anchor client at the end of the process is maybe not the right way to go. So we re-looked at it, we reworked the scope of work, and this time around we've decided that we will go out with the RFQ to appoint consulting engineers to provide a cost estimate of 10% accuracy to refurbish and repurpose and recommission just 4 crude oil tanks and for refined products and pipelines and all the other infrastructure that goes along with it. So we're asking them to write a new business case for us, while at the same time we are talking to Astron, because that tank farm is interrelated with our Saldanha tank farm with a pipeline, and then there's a pumping station that goes to Astron. So we're talking to Astron as well and saying, Astron, please come back, be the anchor client, and you can then store some of your oil or your white products here. However, there is still some other infrastructure that also needs to go along with it. And one of the suggestions that we also had is that we must start looking at the Saldanha tank farm and the Milnerton tank farm as one complex and one entity, instead of looking at them as two separate entities, of the one bringing in oil from Cape Town and the other one bringing oil in Saldanha, but rather look at the two together. So this RFQ that we've got out now, at this moment, that closes on the 12th of December, is we're asking a consulting engineer to write this for us and re-look at it and giving us a new perspective on it with a 10% accuracy, so that when we go out to the market again, we're going out with the right scope of work. Plus, we are having an anchor client at the end of it. So it's looking at the same end product, but from a different point of view. And once we have this consulting engineer, we hope that next time we come back, we'll come back with a different answer. But we do acknowledge that it has been going on for a long time, and we're hoping that this time will be it. Thank you. The other question? Yeah, the chair will.
So in relation to why Avidia and Linefill was sold, Chair, I think it's basically the type of asset. So Avidia is a 60% shareholding. It's not one of those things that you can actually lease and assign. The situation with SFF is it's a non-profit company, and every transaction that needs to be executed needs to be at fair value. So if we are going to do the fair value for Saldanha, Milnerton, and the Montague terminals, it's going to be quite a substantial amount in terms of fair value, which SANPC would not be in a position to pay right now. So those, when the valuation for those were done for the lease and assign, it was only based on cash inflows and outflows as reflected in the corporate plan. So those assets, due to the fact that we are a non-profit company, because of the fair value aspect, those assets were identified for lease and assign, whereas the Avidia 60% shareholding and Linefill was a straight disposal to SANPC. Thank you, Chair.
Chair, I would like to assist Team PetroSA, if I may, just on the question of SARS, where you asked what exactly is going to be done after, now that we know about SARS. Chair, I think my immediate thought would be that we really need to immediately regroup as a team, because this was, obviously for myself specifically, it was brought to my attention at lunchtime as we're eating. So it really has not allowed one to process. So we need to get together with the team. But I also believe that we need to invoke the intergovernmental relations process as a matter of urgency, and perhaps at an escalated level. Because there are many issues, I think, around the ownership, the claims, the claim from PetroSA to, rather SARS to PetroSA, and also there's some counterclaims. So it actually requires that we sit together and invoke the intergovernmental relations process and then see how we can actually have this matter resolved. So I just wanted to assist them perhaps on that one, because I think at the moment we really don't, have a solution, as it's still really fresh. Thank you, Chair. I think with the rest, maybe they can try, and I'll support later if required. And also, Director Bonagele is here.
Before he speaks, on record, you were introduced as the chair of the risk something, and then I don't know whether it was a slip of a tongue from the manager. You were introduced as the chair of the board. So just for clarification, start there and clarify your status, and we correct the records of Parliament.
Thank you very much, Chair, for that question. We're all in a difficult situation, as you all know. We don't have the chair at the moment of the board for reasons that you are well aware of. I've been asked to stand in, as it is normal in the Companies Act that directors nominate someone to run meetings. So that's really what I've been asked to do. I'm not the chair of the board. I do chair meetings, and I have stepped up to assist in the interim. There are 3 board members who are here today, myself and my 2 other colleagues who are also SEF employees, executives. So I think we will try and address as many of these questions as possible. And I'm glad the board chair has assisted with the tax matter. We do recognize that it is something that is quite urgent, and it's also true that PetroSA on its own is going to have difficulties addressing it. It needs to be addressed at the highest level. The financial situation of PetroSA, of course, we know that is originating from the closure of the refinery and because of the feedstock that ran out. We have this partnership that collapsed that was going to look at bringing it back on stream, which was quite a setback for us. We are on an urgent basis evaluating the alternatives that have been presented here, Q3, which is before the end of this year. We need to make a decision on that. It's not necessarily going to be an easy decision. I think we were transparent about the considerations. If you look at the size of this refinery, that in itself is a challenge, and I think this is going to be one of the difficulties in finding a partner, is actually whether they find this an attractive partnership to have. So it's not necessarily an easy solution, but there is absolute commitment to have the refinery back on stream. There is no plan whatsoever to liquidate PetroSA. The policy direction given to PetroSA is to bring the refinery back on stream. And there is no option that is off the table. I mean, you've heard that Sunpack Refinery also has plans of reopening a crude refinery. We are also talking to them about optimizing, because these are all assets within the same group. So I don't necessarily want to talk much about all of these options now. They have to be evaluated technically, following the setback of Gazprom not coming through. And I think as the board, we will be more confident once we've evaluated these, and we recognize that we must do that urgently. Thank you.
Thank you. Honorable Lorima, was there another question?
Yes, Chair. You've asked a question around Zanin. The status of Zanin, it's still operating. We do have sales and team members that are sitting in Zanin. We focus more on customer own collection to bring their trucks and collect the product from Zanin. Together with the Bloemfontein depot, both of them are still operating. Although it is sub-minimal because we're not up to the full capacity through some of the maintenance work that is required to be done in certain intervals. Otherwise, those 2 facilities, they're still operational. And then, I'm not sure whether Ms. Ndlangu can be able to get into this or it was answered. Is it possible to get a partner with size on our head? The partner you can get, but the risk is quite high, in my view, in a sense that the demands they can put together and take advantage of our situation That could be the challenging part that we could have. But in terms of partners, we can, but teacher that there are a lot of engagements and negotiations that might be required to get into that space. Thank you, Chair.
Thank you. Honorable Lorima, do you have a follow-up?
No follow-up. Mr. Chair, I mean, there are so many issues here, and we don't really have enough time. All I'd like to say is, can we, with some urgency in the new year, start addressing this? I mean, that'll be a couple of months down the line, and maybe the picture will become a little clearer by then. But I really think that we have to sit down with SFF and PetroSA and talk this thing through in a full day.
Noted. We'll look into that. Honorable Mhlongo.
Thanks, through you, Chair. I'm having two folds of question. The first one is directed to SFF. My voice is so hoarse. Pardon me. To SFF, in the presentation you mentioned a strategic stock agency agreement. If possible, you can give us detail or elaborate on that milestone or what we can expect. And to PetroSA, I'm sorry for taking you back, but referring to page 19 on performance against predetermined objectives, you have said you had sales of 3 billion liters of finished product target that were not met. Has there been any consequence management taken for PetroSA for not meeting the 3.5 billion volume target? The second question is, which PetroSA assets has been leased to Sanepis and what is remaining in the legacy entity? Question number 3, the last one, how long has PetroSA had the decommissioning liability shortfall of 6.2 billion rands, and what immediate plans are in place to address the shortfall?
Thank you. Are you done? Can we get the responses? SFF?
Thank you for the question. On the strategic stock agency agreement, are you referring to us transferring it to SANPC? So what has happened is the strategic stock agency agreement is the mandate of SFF given to us through the National Energy Act. When the two departments were separated and we had the DEE come onto place, the National Energy Act fell on the side of DEE and not on minerals and petroleum. So hence, we as SFF and SANPC then petitioned our parent company, which is CEF, who then interacts with DMPR to then deal with DEE on a ministerial level to transfer this agency. There is the SANPC bill that will be coming into, that will be promulgated soon, that is on the portfolio committee and in Parliament. But even if that happens, it doesn't mean that the agency agreement is completely handed over. So it is something that the two, that needs to be worked out on ministerial level. And it has been escalated and it has been, it is in that arena right now. So we are waiting for feedback.
Thank you. PetroSA?
Thank you, Chair. In response to the questions asked, I'll start with the last one. How long has the decommission shortfall been in place? I can refer forward for the last 5 years. I must also mention that at every financial year, the provision is revised. The contribution that makes the provision is the rig rate, which we don't have a rig as the entity and as the department. So you need a rig to be able to do the work for the decommission, which we don't have. And then we also need the feedstock to make sure that you do some injections, to plug certain wells to do that. So that number fluctuates and changes year on year of the provision that we need to put in place. And thirdly, the method that the decommission is utilized, it does contribute to how much that decommission provision is. And currently, we are putting a process in place to have a standard method on how the decommission is calculated, because PetroSA is the only entity in South Africa that has got that facility, and obviously the manner to which that calculation is done, it's not a standard that was developed and that is available. So we're using a consultant that is assisting us to make sure that those assumptions that are being utilized are appropriate. So we are maintaining that we do the right thing in terms of putting a provision on the financials to rehabilitate and put back the area that we have been working on, while we're really trying to also increase the investment, so that that delta has been there. But obviously, there are, as I said earlier, we do put some processes or some initiatives in place to try and catch up, which is going to take a bit of a time until we are back on stream, and then we have some funds that are available on the operations, and then we start building up again. And then the next question was whether there are any assets that have been leased to SANPC. The manner to which the SANPC has been put together, that the word right way. There are phases. There's phase 1 and the phase 2. In phase 1, for PetroSA, there are no assets that has been transferred on a lease basis to SANPC. The only thing that have happened for phase 1 is the transfer of the employees within the support services that have been taken over by SANPC. Now, in phase 2, that's when we'll be looking at the assets only once they are performing positively and profitable, because we don't want to kill two entities at the same time. You have PetroSA that is not performing, and then you have SANPC bringing the burden of PetroSA in SANPC. That's not the intention. What is key for us is to make sure PetroSA is back, is reinstated, started to make profits, and be self-sustainable, then gets transferred to SANPC, and then winding PetroSA out as that progresses. Otherwise, at this point in time, there are no assets that has been listed. But I do have Mr. Braff, maybe can be able to concur on what I'm saying. And then targets not met, the 3.5 billion. What are the consequence management that have taken place? My colleague have indicated the reasons why we have not achieved. We have not achieved our target of 3.5. Our single source customer that we had, because if I can look at the numbers that we're selling to Eskom, there was a month where we sold about, we sold about 800 million alone to Eskom. And our plan was really revolving around making sure, as the mandate that we have for the security of supply, and to avert the load shedding challenge that we had. So we had to plan such that we don't compromise that process. So through the operations within Eskom that had improved, that number we could not achieve. Hence, we are looking at other alternatives to make sure that we ramp up our volumes, even looking at the product mix that we are selling, LPG, loops, aviation, so that we're not focusing only on the white products, which is the petrol and diesel. So in terms of the consequence management, there is a monitoring that is in place where even the shareholder is putting us to task
on what volumes are we selling on a regular basis, on a weekly basis, on a monthly basis, such that there are even the recovery plans in areas where we have not achieved our plans. But I must say it has been difficult, not only because of anyone's doing. If we are unable to buy the product because of the letters of credit, because of our financial position, it is something that is a very difficult to appoint it to or to attach it to one person that might not have done what they need to do. So that is where we are. Thank you, Chair.
Thank you. Honorable Mhlongo, do you have a follow-up question?
Yes, sir. Do you perhaps have anyone who is acting as a consultant, or have you appointed anyone as a consultant? And when was the consultant appointed by PetroSA? The consultant that is helping you to determine the decommissioning liabilities.
We have appointed an entity called DNV, which we went to the tendering process. We evaluated them. This is the second year running, having this entity that is assisting on the decommission liability calculation and the method. So we do have an entity that is assisting on the decommission liability calculation, which also gets, AG have audited that process and engage that entity as well to make sure the process that was followed was in line with our policies. So yes, we do have.
Are you fine? Okay, Honorable Selepe.
Thank you, Chairperson. Let me start by reading here my summary, then ask this question to SFF. If the market indicates that the customers prefer to buy oil immediately rather than store it, then does SFF storage make any business sense? It is feasible. The annual report indicates 10.9 million was flagged by external audit for non-compliance to competitive binding rules, and 564 million irregular expenditure linked to the tender issue in January 2024 relating to the supply for diesel to Eskom. Then my question, what were the specific reasons the external audit flagged 10.9 million for non-compliance with competitive binding rules? 2, which internal controls failed, allowing the non-compliance with 10.9 million to occur? 3, what corrective measures have been put in place to prevent future binding irregularities? 4, can you provide details of the 564 million irregular expenditure on diesel supply tender? That was for SFF Chairperson. Then for PetroSA, let me start here. Let me start here, Chair, with the PetroSA. Just made mention that SARS is in your neck. Were you notified by SARS that they are coming for you, or you were ambushed? If then you were notified, what was the measures taken after getting that notification? And then, isn't it that PetroSA is in this challenge because of perhaps maybe it's an impact caused by the money that you've been owed by narco energies? the money that you paid, the PetroSA, we know that is sold 933 million diesel to NACO Energy, and giving them that diesel without any payment. The last time we checked, 825 million was still owing. Has NACO Energy paid the PetroSA as yet? Then has the senior executive who approved this transaction been identified, and the disciplinary processes were taking place for this senior executive who did that? Perhaps you are in this trouble with SARS because of that, and that is taxpayers' money. We need to know about that. Thank you very much, Chairperson.
Thank you, Honorable Slepe. The way you are pronouncing Nako, it's like you don't have a Sotho blood in your veins. SFF?
Chair, if I may, maybe just the first question and see if I will answer the second one. So the first question, if I've got it correct, you said if the market indicates that customers buy oil now, does it really make business sense to have a Saldanha terminal? Am I correct? Is that the question? Okay. So the oil storage or the crude storage market is dependent on two things. Either we're in a contango market where the oil price is low and everybody wants to store. That is when SFF does very well, and the last time we did well was in 2020 with COVID, and before that in 2016 because we had a prolonged contango. Otherwise, SFF is the crude storage market is what we call in backwardation, because the price is high, and CFO spoke earlier about what is the real sweet spot when people start storing. So when the price is high, nobody wants to store it because they want to sell it as quickly as possible. So that means that we are very dependent on geopolitical pressures. We are very dependent on the market, and the global headwinds can really affect our business. That said as well, as the previous question from the other honourable member with regards to the strategic stocks mandate that we have a dual mandate. So we belong to the state, we are NPO, and our mandate was to make sure that we ensure energy security for the country. So one of the tanks in Mossel Bay is where we store this crude for energy security. The rest of the tanks, there were 6 in Saldanha, which equates to 45 million barrels. The other 5 we rent out commercially so that we can fund the strategic stock mandate. So that is the reason why. And that is the business that's subjected to the geopolitical pressures, that's subjected to the oil price and all of those things. So the money that we make we in the landlord business, it's alleged that we sell. The rent that we receive for storing for these traders and big companies is really to support the mandate and support the company. And this is the situation that we find ourselves in. I hope that answers the question. If there is follow-up.
I will determine whether there's follow-up.
Oh, sorry, Chair.
PetroSA? Is there a question that was not... yeah, please go ahead.
Thank you, Chair. It was in relation to the second question in relation to the other irregular expenditure, which I did not touch on when I presented because I focus on the bigger value. The 10 million that you make reference to in relation to the competitiveness where we weren't compliant. So about 7 odd million of that is in relation to one specific tender as well. It was in relation to a crane. So when we went out to market, it was specific. We've been trying to move away from vague specifications, but I think in this instance, it actually kind of came to haunt us. We went out with a specific request for a 30-ton crane. The bidders, most bidders responded with quotations or bids related to a 30-ton crane, but there was one specific bidder, which was the one that we awarded to, where they came in with a 35-ton crane, so a higher specification, but the price was lower. So we took it from a value for money point of view. We're getting something of a higher quality, superior range, at a lower price. But when AG reviewed the documentation, they felt that we weren't being, we're not compliant in terms of PFMA and in terms of 217, because they felt that the principles of fairness, transparency, competitiveness, etc. was not upheld, even though that they do acknowledge that we got something that was better at a cheaper price. So in relation to which controls failed, it's effectively evaluating our bid in relation to the evaluation criteria, basically not doing a like for like. So those controls failed. In relation to the corrective measures, we did not agree with AG on the specific one. So this is one of those areas that we actually wanted to refer to, or it's in the progress of being referred to National Treasury, and we also have internal audit coming in to do a reassessment, because it doesn't necessarily always mean that we 100% agree with AGSA. So this is currently still being reviewed. If we then align with AGSA, we obviously will then go through, if after the assessment and confirmation from National Treasury, we will then go through the condonation process. In terms of corrective measures that have been put in place, we will do that once we have confirmation in terms of which side we actually align on. Honourable Member, there was another question that you asked on the diesel supply tender, and I'm not, can you please repeat, because I'm not really sure what specific diesel supply tender SFF would have done other than the 565 million that we've already spoken of.
Okay, while you refresh, you'll come with that question when you make your follow-up. Can you proceed, PetroSA?
Thank you, Chair. The question in relation to SARS notification. SARS is one of our key stakeholders. As such, we do have constant engagement with SARS, considering that we do owe them a lot of money, as well as other suppliers that we owe, to make sure that we enter into the negotiations. As indicated earlier, SARS was in our offices on Tuesday last week, where we engaged with them. Subsequent to that engagement, same day, there was a letter that was received from SARS indicating, asking for the payment plan. And then they also indicated that there's an intention for them to hold the asset. So we were aware of their intention. However, they needed, according to the letter, the request was saying, respond to us by Friday, the 5th of December. So we were still in that period of engaging and making sure we go back to SARS. And we said in the meeting that we had with them on Tuesday, last week, the 25th, we'll be able to take this, this matter to the board on the payment plan so that we can be able to engage, as the chairperson of the board have also indicated that we need to regroup and find solutions on this matter. Unfortunately, as we met with them on Tuesday, on Wednesday, we slept with the sad news about our chairperson. So the board could not sit subsequent to the SARS meeting that we had, so that we can be able to table the letter that we have received and find and put the response together so that we can engage with them. So in the letter, as I've indicated, they did say that there is an intention. Intention does not mean they're going to do what they have done. So obviously, when we engage them now, they said it is part of their process, of which SARS, we know SARS is the law enforcement, and if you block them in doing certain things, you'll be as if you are, you are interfering with their work. So that is where we are. As I said, it's our key stakeholder. We always maintain that type of a relationship with them. And then now, the other question that was asked, are we in this position of owing SARS 3.5 billion because of the amount that was owed by
NACO Energy. If I can summarize in this, there's a claim between these two entities, between PetroSA has got a claim on NACO, as well as NACO has got a claim on PetroSA. So when we look at these two amounts, what PetroSA owes NACO and what NACO owes PetroSA is sitting around about 250 million. We owe SARS 3.5 billion. So we are not in the situation that we are because of the 250 million that is owed by NACO when we have to compare these two amounts. So it is a process that is taking its own direction in terms of finding solutions to clear and finalize the amounts that are being owed between these two entities. And then in terms of how did we get into the transaction and whether there are any officials that have been put to task, there is a process of putting a report together which will be presented to the board after the work that was done by internal audit. It will be through that report that will determine if there was any wrongdoing from any officials, and then the process of accounting by those officials, I think, will be able to take place subsequent to that report being tabled to the board audit committee, and then from there it will go to the board. So that is where we are in terms of that process. But in summary, the position that we're at around owing these lot of people, it's not even equivalent to the amount that these two entities owe to each other. So cumulatively, as I've indicated, continuous losses that we've been making, the 3.5 billion compared to the 300 million we are making as a margin, has put us in this position. Also, I think the last point that I want to say is that while PetroSA is a Schedule 2 entity, it is expected to be commercially viable. So from the fiscus, we don't get any allocation. I would love one day, Chair and DG, probably we can get kind of allocation, but that is not the intention. As the Schedule 2 entity, we need to be making our own money and sustain the business. That is why we've got all these projects that we're working on. So we're really trying to be as vigilant as possible in what we do. Thanks.
Thank you. Follow-up question?
Thank you. Yeah, no, I think the question that I've posed with regards to the PetroSA indeed was deliberate, not that the whole money that you are owing to SARS is because of you that you are being owed by NACO. But that money need to be paid back. This is a state-owned company. You cannot allow this private company to own the state-owned company for such long. And then the processes of discipline, why is it taking so long? I think SEF need to do better with regarding to the approach of accountability on your companies that are affiliating under SEF, because we cannot allow, it has been long overdue, this issue of PetroSA and NACO pending, and then there's nothing we've been giving as an update with regarding to this matter. We need to know time to time. There's a lot happening with monies. We cannot allow the state to be captured again. Then I want to repeat the question that you requested, that the annual report that indicated the 10.9 million was flagged by the external audit for the non-compliance to competitive binding rules, and 564 million irregular expenditure linked to the tender issued in January 2024 relating to the supply of diesel to ESCOM. That was the question.
Through you, Chair, thank you. Okay, so I had touched on this in my earlier presentation. So the 565 million was in relation to the diesel scenario. So the trading team from PetroSA had moved over to SFF. Under PetroSA had a trading policy and they were exempted from the triple PFA, but those were not applicable on SFF. So SFF did not have a trading policy in place, nor did it have a triple PFA exemption. So effectively what needed to have happened was that SFF should have followed a normal procurement process, compliant with SCM processes, and compliant with all applicable legislation such as triple PFA. But the trading team did everything under the auspices of the PetroSA trading policy, which had never been adopted by the SFF governance structures. So that was effectively irregular because it was non-compliant with SCM related legislation. So the sale was actually to PetroSA on-sold to Eskom. We received value for money. The product was delivered, but the issue here was the non-compliance in relation to SCM-related legislation, and hence it was recorded as irregular. Thank you.
Okay, thank you. Honorable Sen.
Thank you, Chairperson. Partly covered. On top of my list was the SARS issue, which is a worrying issue to us as honorable members sitting in this room. Let me not repeat it, Chair, because they've already responded. And on SFF, on the storage contract, has SFF been proactive in searching for uptakes and ensuring that there is more than one customer that is ensuring the fulfillment of that target? And number two, Chair, the current irregular expenditure of SFF is too high. Even though most of it has been identified internally, what is the impact of the expenditure and how is it being managed? And then number three, Chairperson, what are some of the tangible steps that have been taken by SFF to ensure that it supports the long-term growth and sustainability of the strategy on SANPEC? And then my last question, Chairperson, is there complete refurbishment of the Milnerton crude oil terminal on track with regards to the report provided by SFF? Or are there any challenges we should know as the committee? This would be a similar situation with the LPG, Avedia pipeline and Beth 104 upgrades. Any challenges we should be aware of as a committee? Thank you, Chair.
Thank you. SFF.
Thank you. So in relation to the first question on the storage contract, has SFF been proactive? So yes, we have been trying to get customers, but the market conditions with the oil price being where it's at is not conducive. Generally, when the market is between $50 to $55, that's when we really have people knocking on our doors to want to make use of the space in our storage tanks. But the team has definitely been trying to secure additional customers. But during the 24-25 financial year, it was only the one that we managed, and only in relation to a reservation fee for that specific tank. But from the 1st of May, those tanks are now being managed by the SANPC. So that sort of touches on your last question as well. So SANPC is now in the process of ensuring that those tanks now get marketed and looking to secure customers for those tanks. There is something that's currently in development but not yet secured. So there are discussions underway with a potential customer. I agree. The irregular expenditure identified is very high. It's very odd for SFF as well. And this, as mentioned in the earlier question as well, is a singular transaction of 565, which is the bulk of the amount. How it's being managed is obviously as soon as it was identified that the transaction was not compliant with applicable SCM related legislation, the transaction was immediately stopped. And we went through the process of then going to the required governance structures to get the required policies, etc., approved, and also trying to get the triple PFA exemption. But SFF only had the trading authority to trade up until the end of the financial year. But this aspect too in relation to trading has now moved over to SANPC, or it's in the process of being moved over to SANPC. As soon as SANPC has the required licenses, the trading department would also move over. We've gone through the process of applying for condonation in relation to the irregular expenditure identified. It's been through the loss control committee, etc. And the only matter that's still left outstanding now is in relation to the consequence management, which we are trying to resolve. Some of the people have moved over to SANPC as part of the transition. So between the two CEOs, they are looking as to how the consequence management aspect can be managed. In relation to the refurbishment of Milnerton, is it on track? So all our previous attempts in relation to Milnerton, whenever we've gone out to market, it did not yield the required results in terms of adequacy of suppliers that had actually responded to those bids. So we've decided to, okay, this is also part of the projects that have moved over from SFF to SANPC. And the approach now is rather to appoint a consultant that's going to do a market demand study and develop a business case in relation to Milnerton. So this is how the SANPC is now tackling the Milnerton refurbishment scenario. And then the last question was in relation to the tangible steps to support the SANPC. So all SFF employees have transitioned over into SANPC. Saldanha Milnerton Montague has been leased and assigned, and that assets are 100% under the care of SANPC. Then during Q2 of the current year, Avidia as well as Linefill has moved over. Some of the other aspects that are still outstanding is in relation to the strategic stock, but that is outside of the SFF level of control. We require a decision to be made at ministerial level. In terms of funding, there's still discussions in relation to how that situation can be managed, and we're looking at alternatives to a loan, given the fact that SANPC did not meet the requirements in terms of ability to pay the loan, and also the guarantee that was supposed to be in place was no longer able to be in place. So from a SFF point of view, we have to do our required fiduciary duties when considering advancing funding. So as mentioned, we're looking at alternative approaches to support the SANPC on the funding aspect. Thank you.
Thank you. Do you have, you are fine? Okay, that concludes the list of honorable members who wanted to ask questions. Maybe if I can ask the last one to PetroSA. CFO, the contract of helicopters, is it still alive?
Yes, Chair, we just went out on tender recently because it was expiring on the 30th of November 2025. We went on the market, we received bids, we did the evaluation, and it was awarded to the successful bidder.
For the past 2 or 3 years that I've passed by Mossel Bay, I no longer see that thing, I don't know what to call it, inside the ocean, which I thought was the reason for helicopters. What is happening?
So there were 2 items or facilities that were in the sea. There's the FA platform, which is about 80 kilometers into the sea, And then there was also what did we call that? The orca. The orca we were using when we were drilling Oryx, and we used it to store the product. But because Oryx, that crude that we used to drill from there is no longer available, so that is one of the assets that we had to part with. We sold that asset because it was no longer in use. That's why you don't see it anymore, Chair. That one was even closer, as you could say. You could see it as you were driving along N2. But the FA platform, you won't be able to see. It's inside the sea, so that one is still in place.
Is it the one that necessitates a tender for helicopters?
That's correct, Chair. We do have people that are there to man that facility, because you need to have lights on such that any ships that are moving around, they can be able to see. And due to the connection that are still on the ground, so that they can be able to monitor any movement that is happening there. So we do have those people that are there alternating every second week. So the helicopter is bringing those people in and out as and when it is required as well.
Is it the new company or another company?
Same entity, Chair.
You were not here when the presentation was made. Eh? You can go ahead. In fact, let me start with Honorable Ntlangwini, who had a question for SFF before they even presented. And then I will come to Honorable Zondi. Is there anyone else? Okay, gone. Honorable Ntlangwini?
No, thank you, Chair. No, the one of SFF, I was already answered in the question session of members. I just want to check on the feedback now about the selling of, I will say it for lack of a better word, a crane or whatsoever. To whom was it sold, and what was the market-related price for it? Thank you.
Chair, I don't have the number at this point in time. Something that we can respond to. What we did, we look at non-core assets that could assist us to generate some revenue in the absence of any other alternative, because it was one of the facets that we had to keep people as well. So we felt, what is the point of bringing or of keeping that facility when it's no longer utilized for what it was intended? But I don't have the number. But we did go to the market to get a number that is according to the evaluation that we've received, but we can provide that number.
Okay, thank you. Honorable Zondi. I won't ask whether you have a follow-up question or not. Okay, Honorable Zondi.
Thank you, Chairperson. Again, my apologies. I had to go to another meeting quickly. Chairperson, my first question is with regards to what was presented when I was still here, that, and this is PetroSA, that PetroSA cannot purchase directly from refining companies, but it has to buy from these middlemen companies at higher prices because it cannot provide a credit assurance. So I assume this makes PetroSA, it makes it hard for PetroSA to compete in terms of the market with regards to prices. Right, that's the assumption. So this would mean even with diesel selling to Excom, it would be at higher market prices, since it's very hard for PetroSA to then compete in the market. But I also just want to ask as well, just as a confirmation, there was a report, I believe in 2023, which said the price at the time that oil majors were selling to Eskom, were selling diesel to Eskom with was about 20 rands per litre. And it was alleged that PetroSA is selling at 23 rands 50 per litre and selling diesel which is in excess of 50 million litres. I just want a confirmation if these allegations are false. Then the next one is with regards to how long will it take to stabilize PetroSA and the winding down process? I think this also goes for SFF as well. How long will it take for it to be stabilized and then for it to wind down and then eventually be incorporated into SENPEC? Then my other question, Chairperson, and I think I would like to start this with this prelude because I have been accused before of not wanting to let this issue go, but there is a reason for that. In 2002, PetroSA was founded as a company, and there was corruption that happened there, or the diversion of funds from a company called Imvume to a political party that I will not name. Then in 2015, there was also payments that were irregular, which some people had to repay about 83 million to PetroSA due to those irregular payments. In 2016, PetroSA was forced to impair about 14.4 billion in asset due to a failed gas project Equasi. Now, I give this prelude to show there's been a history of systemic failure to safeguard the finances of PetroSA, which then brings me to the Gazprom Bank deal, which failed as well. Now, this is a pattern, which is why I insist that there is some sort of investigation into that particular deal as to how, not only how it failed, but how did we get to choose Gazprom Bank Africa and Middle East, which is a subsidiary of Gazprom Bank Russia. Gazprom Bank Russia was under sanctions at that time. And Gazprom Bank works in a way, in science we say, whether light, we're not sure whether light is a particle or if it's a wave. It has that duality. It's the same with Gazprom Bank Russia. Sometimes when it's required, it is a state-owned entity. If a tender requires private companies, it is a private company. That is how it operates, but we chose that one. So my question is, with the awarding of that tender to Gazprom Bank Africa, did they submit a credit assurance as it was the requirement of the RFP for that particular deal? And if it is possible to get some of those details. I know there's a news outlet that submitted a prior application for the same information as well. I think as an oversight body, we do also need to satisfy ourselves with regards to that. And I do also, Chair, think maybe it's something we'd look at as a committee, but I truly do believe there should be an inquest with regards to that, because we have new plans now on how we are going to restart that Mossel Bay refinery. But this issue is a systemic issue, and that deal has set the refining capacity of the country, back by a couple of years, and there should be a proper investigation into that. Then my other question is, how much is PetroSA's total decommissioning liability in terms of NEMA at this particular moment. I believe in 2020 it was about 12.4 billion rands. And there was a deadline of January 24 in 2024 to either pay the shortfall or make an arrangement with the Minister of Petroleum with regards to how that shortfall would be paid. If this didn't happen, that would be a criminal offense. I just want to know where we are with regards to that, and currently as it stands, how much is that decommissioning liability? Chair, I have more questions, but I do realize I'm standing between members and their dinner, so I'll stop there. Thank you, Chair.
Thank you. PetroSA.
Chair, I will answer some of the questions. Some I might hand over to my colleagues. The last question around the provision. The provision is currently sitting at about 10. I'll double check now the financials. It's in the copy of the financials that I've shared, but I'll give you the number shortly. Then I will skip the Gazprom question. I think it summarizes what you were asking in terms of the inquest that must be provided. I think it's something that we can take back. Looking at my principles here. The purchase price. So the price for diesel as well as petrol is regulated in South Africa. You have the retail price that gets published on a monthly basis, as well as the wholesale price, list price that is published. When we sold the diesel to Eskom, we utilized the published price that gets communicated and sitting on the website from DMPR or DMRA. Our submission to Eskom at the time of them awarding the supply of their diesel to PetroSA, we were to sell to Eskom at that price, which the wholesale list price, and we negotiated a discount that we can be able to offer to Eskom. So that is how we were selling the product. So the trick here is for us to buy the product at a cost less what is published in South Africa, which that's what we are saying. It's a challenge for us because of the finance cost that tends to be charged by the traders that are willing to take a risk on PetroSA when PetroSA are unable to approach the banks to give the facility for us to have some kind of a security. Most of the time in these transactions is the letter of credit that gets offered or accepted by the refineries. So the traders are able to do that because they're dealing with a lot of product on different countries. So that is that report that came out in 2023. There was a response that was offered by PetroSA, even on the media, through our CEO at the time. So it is not true that we were selling to Eskom high. We used the published price that is available. How long will it take to stabilize PetroSA so that it can be able to be wound down and incorporated to SANPC? Our key focus is to reinstate the refinery. With the presentation that was made by my colleague next to me around the reinstatement and looking at ramping up from 1846 and other initiatives to make sure we bring the refinery back into stream. We have the refinery self-sustainable such that it record profits, because the reason for it not to be transferred now, you don't want to bring something that is not working on something that we are intending to make sure that it is the entity that will represent the oil and gas industry or business in South Africa. So the plan is to make refinery to be operating not only to operate, it must operate at a profit. Then it is incorporated. So there are timelines which my colleague, I think, said he was not going to go through, but that plan is in place. We've been given a matching order from the shareholder to make sure that that reinstatement is achieved, to make sure that we do bring back the refinery into stream. I just want to give you the number now, Chair, and the member on the decommission provision. Or the other question that you've asked is how much, the reason you want the amount, you want to know what is our position to comply with the NEMA Act. You're quite correct. It was a requirement that by January 2024, the funds that we have do coincide with the provision that is in the balance sheet. That requirement then was moved to around July 2024. But just before that date, there was another correspondence that we received from the FFE to rather, what is the English word I can use there? To move away from that date. And now there is no date currently that has been set to promulgate that requirement. We're still waiting for the FFE to give us the date of when that funding is required to be in place. It's a financial provisioning that each entity needs to have so that whatever that is in the balance sheet, there are funds that are set aside to talk to that. Hence, our key focus is to grow what we have now so that by the time that the FFE come back with a date, you can be able to present, because they said you can come and present to us what plans do you have so that we can be able to address the shortfall. So there's no date at this point in time. That is also being recorded on our financial statement, which AG have audited, and we're happy with that. Hence, there's no non-compliant that has been raised by Auditor General with regards to that particular requirement. Thank you, Chair.
Thank you, Chair. I just maybe to add on the ultimate transfer of PetroSA and SFF. The manner in which the merger has been effected is going to require that some semblance of SFF and PetroSA is preserved, because it's a lease and assign, and the lease requires those two parties to exist. However, the idea is that as the assets are getting ready and are becoming free of problems of debt and so on, that these could be transferred. Hence the earlier presentation that there will be some corporate governance preserved within the entities, even if they operate just as a skeleton. This gives me an opportunity actually to talk about the trading business, because the trading business and this issue of not being able to buy from the refineries. If you look at the accumulation of assets by Sunpack, it should not have these problems. So Sunpack is being set up to be able to do what PetroSA could not do, which is to buy from the refineries. And at the moment, the role that PetroSA has is to find a market for the products. And that's what the remaining team at PetroSA has to do before that team also is ultimately transferred, because you have to sort out the problem of buying directly from refineries on the one hand, and you also have to sort out the over-reliance on selling to a single customer, namely Eskom, and actually find the market. So the merger does give us a possibility for addressing that in the immediate future. Thank you, Chair.
Thank you. Okay.
Thanks, Chair. Chair, can I respond to the question of how much is our decommission liability? Thank you, Chair. The decommission liability balance that we have, which we provided for in the financials, is at March 2025. We opened with a balance of 9,963,430,000. And then when we do that calculation, there is an interest rate that you utilize that is gets to increase the amount, which was increased with about 555 million rands. However, in terms of the work that I mentioned, that it is done by the consultant to look at the elements of calculating that decommission liability. So it came with a reduction of about 705 million rands, giving us a total of 9,812,956 million at a company level. Now, at the group level, because now we need to take care of also the Ghana facilities that we have, because it's similar kind of work that we are doing also in Ghana. We started with an amount of 10,230,621,000, and then the closing amount after those elements that I've just mentioned at a company level were taken into consideration. We closed with a balance of 10 billion and 63 million and 97,000. So that is the balance that we have for the decommission liability in the financials. Thank you, Chair.
Thank you. Do you have a follow-up?
No, Chair, it's just questions that were not answered. The first one was, or maybe it was answered when I was not here, but it was from my earlier question session with regards to the funding for the GTL refinery in Mossel Bay, in terms of if it was going to come from Infrastructure South Africa, or if, for the feasibility study, if it was going to come from Infrastructure South Africa, or if PetroSA would be footing the bill with regards to that, where exactly the funding is the funding going to come from. And then the second one that wasn't answered was with regards to the Gazprom Bank credit assurance with regards to the 2023 RFP, if they did indeed provide a credit assurance for that. Thank you, Chair.
Okay, PetroSA.
Thank you, Chair. So, Honourable Member, the question, your initial question regarding Gazprom Bank and ISA was, we did comprehensively cover that, unfortunately, in your absence. But maybe I should repeat the answer then. So, when we had partnered with Gazprom Bank, we also had a co-funding arrangement with ISA. They were going to fund the feasibility study. But at a point where GBA, that's Gazprom Bank Africa, where GBA became sanctions listed, which is towards, I think, December of 2024, then ISA did express their hesitance to proceed with the co-funding. In fact, they were explicit in saying they will not co-fund feasibility if then Gazprom Bank is also funding something. So because now we have subsequently exited that relationship, which is something that happened just before we closed the period we are reporting for now. So we will then be reopening that discussion with ISA and other DFIs. But what we've also done, Honourable Member, is that we didn't then sit and wait for that. We've continued to actually conduct pre-feasibility work on the various options that are being considered for reinstatement. So as we re-engage for funding later, we'll be at a further point down the project gated framework. So the short answer to your question is that when GBA was in the picture, ISA said they're not going to co-fund with them. But because they are out of the picture, we are boldly re-entering that negotiation. But in the meantime, we have carried out some of the work so that we don't lose the benefit of time. Thank you, Chairperson. Then, yeah, the assurance part, I think I'll be happy if a colleague covers that. I don't have sufficient information on that at the moment.
Chair, I will need to verify for that response from the operations team, and we can be able to provide that response probably in writing if need be. Thanks.
Okay. There is a need to provide it in writing. So you will have to do that. Honorable members, that brings us to the end of today's marathon. We would like to thank honorable members for juggling in between meetings and also thank the department and SFF for giving us these presentations. DG, we are going to, in fact, Chairperson Noah, the first oversight in 2026 will be also going to SAPREF as well as Island View. So we will be interacting very soon with SANPEC around those issues. And I stand to be corrected that I had the presentation of SAF saying by January, and you'll correct me if I'm wrong, there will be a plan on PetroSA. Did I hear you correctly? So that I'm able to proceed with what I want to say.
So, Chair, we said that in Q3, PetroSA will be able to give us a feasibility study on the reinstatement of their refinery, and then in Q4, SNPC refinery will come with a bankable business case for the refinery.
Okay. Ms. Boss, we are noting that there must be a follow-up on that so that we make sure we move properly. We'll look into it, Honorable Zondi, the inquest you are looking for, and see if it's feasible on our program. But we will discuss the program, obviously, and be able to agree or disagree on whether we should do that. I must say, DG, I'm more worried than I was when I entered here about PetroSA. I don't know how you are going to deal with SARS, but please give it priority to work on whatever amicable solution you can work on, so that you deal with other progressive issues than I don't want to call it distraction, because they are not distracting you. They want what is due to them, and you must pay them. But let me thank you for this session, and I guess we will see each other next year. And have a Merry Christmas and a Happy New Year. Do you have an announcement, Ms. Boss? So, honorable members, I hope you saw that tomorrow at 3, we're having a virtual meeting, which is a continuation of the meeting we held that was presenting on the cadastral system So tomorrow they will be able to do a demonstration as we had asked. So it's 3 o'clock tomorrow, virtual. It's scheduled for 3 to 6, so we have been exempted as well to attend to this issue. So if you don't have any item in the plenary, you must know you are exempted from plenary by tomorrow. That concludes the business of today, and the meeting stands adjourned. Thank you very much.